Very great morning or afternoon or evening to everyone. So finally, I'm here with a mega marathon of financial accounting for coming June exams. So already I promise you, so this marathon is going to be very crisp, and my focus is on shoot shot 60 or 70 marks. So this time I'm not going to cover all the chapters, but I'll cover some 50 to 60% of the chapters. But for sure, from those 50 to 60% of the chapters, you are going to score minimum 60 marks. So because this time my strategy is only on all A plus category chapters. So before entering into our marathon, so I'll open recent examination question paper. This is recent December 2025 question paper. You all know normally our question paper pattern is so 15 MCQs, 15 into 2, 30 marks, and then descriptive part. Descriptive part is for 70 marks. So 15 MCQs, each carries 2 marks, 15 into 2, 30. That's you all know. You can observe. So all here we have 15 questions. But the problem in financial accounting paper is they'll not give single line MCQs. You can observe, especially question number MCQ number 7 if I am not wrong. Yeah, 9. This question is exactly, you can observe in our workbook, this is the main question, question number 2 or 3. They have framed this question as an MCQ. Student cannot directly tick the answer just like that. He has to solve the entire question. It will take around 4 to 5 minutes for an average student. So that's why this is not easy in financial accounting subject. So question number 8 also, this is about again joint venture. This is also not, you can directly tick the answer. Again you have to solve all those things. You will take some amount of time. You can observe 7th question also. All these questions, this is very much tricky. They have asked a complete question from insurance claims. This is not at all fair to ask this question as an MCQ in student point of view. But in institute point of view, this is correct way. Then only they can pick the correct students. Otherwise, everybody will just tick the MCQs just like that. They are scoring 24, 26, 28. Some people getting 30 also. That's why from recent attempt onwards, they are giving questions as an MCQ. If you open previous question papers, all MCQs are single line MCQs. If you observe question number 1, 2, 3, these 3 are only single line. All rest questions are simply they have given problems as an MCQ, except AS1 here. That is also a little bit tricky question. That means in financial accounting subject, don't expect 30 out of 30 in MCQ. Of course, you can get 30 out of 30 only if you have given a lot of efforts. And to answer all these 15 questions, at least you will take 1 hour. This is my words, mark my words. You will take 1 hour to score 30 out of 30. You can observe how can student answer this question. If this is also a direct question in our AS22, I covered in our regular classes this question. Same question they were asked as an MCQ. How student can pick the question, pick the answer directly? He has to solve entire question. So he don't know what is DTL, what is DTA. So that is not that much easy. So that's why, so financial accounting subject is not that much easy what you are thinking. So for that, so then what is the solution for all this? So that's why I came up with a proper categorization with respect to our subject. So let me start our marathon for June exams. Already if you are following my classes, so my point is very clear. So before starting any subject preparation, the first and foremost thing you have to do is first you have to analyze the all previous attempt question papers. So I have been in teaching from 2016 syllabus onwards. I'm analyzing all past 15 attempts question papers. So that's why I'm very much good at my prediction. So this is my analysis. This analysis is only applicable for coming June and December 26 question papers. From June 2027, so paper analysis will be going to be changed. If you are watching for June or December attempt, this video is apt for you. So first of all, this time my total ABC category is definitely be different. First one, A plus category chapters, then A category, then B category chapters. So A plus category means they are very much important. You should not leave any one chapter here. So those are single entry system for 7 marks, NPO for 7 marks, insurance claims 7 marks, hire purchase or lease accounting 7 marks, accounting standards 26 marks. Some of other faculties or some of the students may disagree with me for this analysis, but this is 100% accurate. Why? Because people think that NPO is not at all important. Yes, that is important chapters from recent December 2025 exams onwards. So till June 2025, they are asking 214 questions. First question is from single entry for 14 marks. Second entry is from partnership for 14 marks. But from December 25 attempt onwards, they are asking only 114 marks question from partnership accounting. So they are not asking 14 marks question from single entry system. I think this is good news for many of the students who are facing difficulty in single entry system. So they divided that question into 2 parts. Part 1 single entry, part 2 NPO. That means for your coming June exams or December exams also, you will face these 2 questions as a joint. One is single entry, second one is NPO. These 2 questions put together 14 marks. And then insurance claims 7 marks, hire purchase 7 marks, accounting standards 26 marks. Total this 5 chapters weightage is 54 marks. Those who are watching this video, don't write anything. So I'll share this total PDF in my Telegram group only. The link will be provided in our description. So this 5 chapters weightage is 54 marks. Remember, my dear students, our entire syllabus is almost 20 plus chapters. Have given only 5 chapters. If you are perfect in these 5 chapters, out of 54, you can score easily 40 plus. Easily 40 plus. But I am not recommending you to read only these 5 chapters, but these 5 chapters are most important. You should not leave any chapter in these 5 chapters. Okay, what are those? Single entry, NPO, insurance claims, hire purchase plus lease, and accounting standards. Once you have done with these 5 chapters, then A category chapters are 3 chapters. First one is branch and departmental 17 mark, bills of exchange, consignment joint venture 17 marks, and fundamental chapters like rectification of errors, capital and revenue transactions, and provision for bad debts and discount and BRS. From this you will get 14 marks. So totally here 28 marks. Remember, my dear students, at least you prepared our A plus category and A category chapters. Your preparation for 54 plus 28, almost your preparation for 72 marks is done. Still, we have partnership accounting. The weightage is 20 marks. So if you follow all of my coming total marathon part 1 and part 2, if maybe part 3, then you can get minimum 10 out of 20 marks. So that means you are preparing for 88 marks. You can easily get 60 marks. Meanwhile, I ignored all of your MCQ part. In worst scenario also, you may get at least some 10 marks in 30 marks. But my recommendation is, so you should score very good marks in MCQ paper. So we'll plan accordingly. Okay. So this now my main agenda is on A plus category chapters. Sorry. So in A plus category chapters, so I'll first start with the accounting standards. Why? Because very important area. Many students, they'll ignore this area. So while valuing papers, definitely, for example, in your exam hall or in your exam room, there are some 50 students over there. Out of 50 students, 30 to 35 students, they'll skip this total standards, or if they are writing also, they will not write properly. So total bunch will be allocated to one person who will evaluate your paper. Out of 50 papers, if you are writing little bit good than remaining people, then they'll allocate good amount of marks. So I'll tell you how to present accounting standards question. So before that, let me enter into accounting standards. So very important area. In our accounting standards, we have totally 6 standards: AS 1, 10, 11, 12, 16, 22. AS 1 is disclosure of accounting policies. AS 10 is PPE. AS 11 is the effect of changes in foreign exchange rate. AS 12 is accounting for government grants. AS 16 is borrowing cost. AS 22 is accounting for taxes on income. From these 6 standards, they'll ask for 26 marks. Ignore about that odd number. You can expect 25 marks. So imagine. So we are focusing on very much important area. So out of 25 marks, if you are getting some 20, that is enough. You are getting half of your pass mark only from these standards. Okay. But these standards are not that much easy. You have to listen very carefully. Of course, this is marathon video, but still I'm going to cover all the concepts and all the problems for the benefit of student community. So out of all these 6 standards, every standard is equally important. Unlike our paper number 10 CA and audit, but here all standards are important. So let me start with the first standard, AS1, disclosure of accounting policies. This standard is very small standard. So let me start. Disclosure of accounting policies. First of all, name itself. Let's divide the name into 2 parts. First part is disclosure. Second part is accounting policies. First of all, let's try to understand what is the meaning of that heading. What is the meaning of the name of the AS1? First of all, disclosure means giving information. That is called as disclosure. For example, ICMAI is giving information to you. What is that information? For example, ICMAI is telling you that from June 10th or 11th onwards, we are conducting your exams. That's it. That is called disclosure. They are disclosing that information in a notice. For example, they are telling that your result will be on August 5th. That is a disclosure. Disclosure means giving information to somebody. Think in business point of view. For example, Reliance company or Tata company is there. So they have prepared their balance sheet, P&L account, cash flow statement, or else SOC or notes. So of course, company prepared all the statements. So they'll give the document to public. How they'll give you? They'll give in their website or else in MCA portal. MCA means, in your company law, MCA means Ministry of Corporate Affairs. So that is called disclosure. Or else your whatever where you're studying in college or whenever you was in school, your principal may give disclosure. You should do this or you should not do this in a notice board. That is called disclosure. Disclosure means giving information. Next word is accounting policies. Accounting policies. So simply I can say this is very simple word. Students make it complicated. For example, you all know methods of depreciation, no? SLM, WDV, DDB, annuity method, different methods are there, no? So those are called accounting policies. I may follow SLM, you may follow WDB, or some other one may follow units, sum of units method. This is called accounting policy. I may follow FIFO, you may follow LIFO. This is called accounting policy. Accounting policies means accounting principles, how you are applying those principles. Those are called accounting policies. If you are asking me definition, I have given definition as per AS1. Accounting policies means specific accounting principles and methods of applying those principles adopted by an enterprise in preparation and presentation of financial statements. My dear students, financial statements means what? Financial statements means balance sheet, P&L, cash flow, SOC notes. So AS1 says while you are preparing or presenting your financial statements, so what are principles you are following and what are methods you are applying? Those methods or principles are called accounting policies. If you ask me in a simple sense, the method of depreciation is a best example for accounting policy. Or if you are aware of your costing subject, you know prime cost, works cost. So some people follow prime, some people follow works cost. They are called accounting policy. Or FIFO, LIFO, that is an accounting policy. Already I told you, I may choose SLM, you may choose WDB. That's why I have given accounting policies are varied from entity to entity, varied from different from entity to entity. You cannot force on any entity to you have to apply SLM only. Of course, that is mandatory as per your Income Tax Act. But we are dealing with accounts only. No, accounts gives free hand to all organizations. So that's why. So some people following SLM, some following WDB. Accounting policies are varied from entity to entity. Everything I have written in the notes, no problem. The choice of accounting policies of an entity is based on judgment of the management. Wow, what a beautiful point it is. So many people asked me while I was teaching CMA inter or some foundation students. They came to me, sir, who will tell you which method should I follow? Sir, shall I follow SLM or WDB? That is purely judgment of the management. They have to take decision. Sir, how they can take decision? That is judgmental basis. So Companies Act or else accounting standards are not forcing any business entity you should follow SLM or WDB. That is judgment of the management. They can follow SLM or WDB, completely discretion of the management. Point number 3. Disclosure. I just know I told you disclosure means giving information. Disclosure of significant accounting policies followed by entity is necessary as per AS1. Now you know what is the meaning of accounting policies, what is the meaning of disclosure. They are telling us significant means important. So what is the meaning of the third point? Third point is the main core of this standard. Third point is the main summary of this standard. What AS1 is saying, whatever accounting policies you are following, if that is important, significant means important, you have to disclose. You have to tell to the public. That is necessary according to our AS1. This is the main core or summary of AS1. If you are following any accounting policies, if that is significant only, you should disclose. For example, if you are following one bakwas some accounting policy that is not that much important, that effect is only some 10 rupees or 20 rupees, no need to disclose. They are clearly mentioning that if that is significant only, you have to disclose. I am stressing on some points that means they are important for multiple choice questions. In MCQ, they may ask, disclosure of accounting policies is necessary. Option A. Option B. Disclosure of all accounting policies is option B. Option C. Disclosure of some. Option disclosure of significant. Here significant is important. Significant means important accounting policies. And one more thing, in recent attempt, they have asked one MCQ. I'll show you that MCQ also. We have the paper as well. That is question number 13. You can observe. As per AS1, observe the screen. where should a company disclose its accounting policies? Actually, for this question, so nowhere in your material you can get this answer. So if you open your board book or any book you are following, you cannot find the answer. But last time I mentioned this point in my marathon. So what is the question? As per AS1, we know AS1. What is AS1? Disclosure of accounting policies. What is the question? Where should a company disclose its accounting policies? AS1 says it should disclose. Question is, where should I? Where should I disclose? Option A, annual report. Option B, auditor report. Option C, director report. Option D, notes. So can you guess? An auditor report is not a correct answer. Why? Because that report belongs to auditor. How can management add his opinion in auditor report? That is completely wrong. Annual report is not about your disclosures. So that may be director report or notes. You are studying from your foundation level. Notes is mainly for disclosure. So option D is correct. You have to disclose your accounting policies in financial statements itself, in notes. There is a logic behind it. For example, you have prepared your P&L account and the debit side it is showing 2 depreciation some 20 lakhs. User wants to know which method you have followed, SLM or WDV. For that he has to scroll and in notes you can find it out. Okay, so this is the answer. In notes we have to disclose our accounting policies. So purely we can guess the answer. Annual report is not apt. So these two are also not correct. So notes is the best answer. So that's where we have to disclose. Again come back. So next one, need for accounting policies. This is not important for our exam purpose. Still, so we are not guessing question paper from recent attempt. Still, I don't want to take any risk. That's why I have given notes for everything. So I advise you to read this concept also for a better understanding of financial statements. You can just go through it, but not that much important. Next one is important. Examples for accounting policies. These all are some examples for accounting policies. Sir, why I have taken only these 8 points? Why? Because I have verified all exam papers, no? So I have picked all important wherever they are asking and in board book or in my analysis in my BCCA book. So these 8 are examples for accounting policies. First one, methods of depreciation. Second one, treatment of expenditure during construction. Third one, conversion of foreign currency. Fourth one, inventory valuation. Fifth one, goodwill. Sixth one, investment. Seventh one, retired benefit. Eighth one, fixed assets. These are some of the examples for different accounting policies. They may ask as an MCQ, which of the following is not an accounting policy? They'll pick 3 from here, 1 from outside. That will be the correct answer. Just read it. Okay, don't buy it or muck up it. Whenever you are looking at that option, you should be able to understand that is accounting policy. Okay. And the most important area for paper setter is right now I am going to be discussed. So if any paper setter wants to ask a 7 marks question or they want to pick question from AS1, they'll pick this question for sure 99.99%. What is the question? Methods or criteria for selection of accounting policies. That means just now I told you. So selecting method is your wish. You can follow SLM or WDV. That is your judgmental. But AS1 is giving just don't pick randomly. Before picking that depreciation method or inventory method, you should apply these 3 methods. Those methods are PSM. What are those? PSM. P for prudence, S for substance over form, M for materiality. So write the shortcut, I have not written here. PSM. P for prudence, S for substance over form, M for materiality. You have to check these 3 methods. Again, they can ask MCQ from here also. Which of the following is not a method of selection of accounting policy? Option A, prudence. Option B, substance over form. Option C, matching. Option D, materiality. Student may getting confused with matching and materiality. Here, materiality. PSM. P for prudence, S for substance over form, M for materiality. Okay. First one, prudence. Prudence means, I think you know this basic concept. This concept says, so be rational, think practically. For example, I have purchased one lottery ticket in Kerala. So lottery ticket price is 10 rupees only, but the winning price will be 1 crore. That means who will win that lottery? He will get 1 crore rupees. So fortunately, I bought that one lottery ticket, and I got a dream that I'll get that 1 crore rupees prize. Or else someone may told me who is inside that particular that business, they told me you are going to win after 1 month this 1 crore rupees. So AS1 says, don't expect or anticipate your future profits. Maybe after 1 month you will get or you may not get it. For example, in another case, so you know after 1 month you have to pay some 1 lakh rupees penalty because of violation of law. So both are future things only. One is future income, second one is future loss. One is future profit, second one is future loss. AS1 says, prudence concept says, don't anticipate future profits. So don't write in your balance sheet for lottery receivable 1 crore. You should not do that. Prudence concept says future profits are not anticipated. You can record only when they really realized it. For example, if they announced that you are the winner, then you can record, no problem. So unless and until they announce it, you should not record in your books. But if that is your future loss or liability, definitely you should be what you call proactive. You should create a provision for it. So simply I have given the notes for it. Future profits are not anticipated. You should not anticipate, you should not recognize. If they realize it, you can recognize. But for coming to future liabilities and losses, you should create provision for it. Second point, substance over form. Substance over form, the best example is our hire purchase system chapter. In our hire purchase system, if you remember, in hire purchase system, hire purchaser bought an asset from hire vendor. So who is the real owner? Hire vendor only. When hire purchaser will get ownership? After payment of last installment only, you will get ownership. That means you are holding that asset. Who is owner? Hire vendor is owner. Coming to depreciation, normally who has to depreciate that asset? Owner should depreciate that asset. But in this case, what happened? Even though hire purchaser is not owner, he is depreciating his asset. Why? Because he is using that asset. That means in hire purchaser point of view, we should not look at ownership, we should look at who is using that asset. So this concept says, don't look at legal form. Legally, someone may be the owner. Look at the reality, practicality. So substance means reality, form means legal form. So when you are preparing or presenting your financial statement, so you should look at reality. Don't look at just legal form. That's what I have written. Accounting treatment and presentation of financial statements should be governed by their substance. Substance means what? Reality, but not merely by legal form. We should not just go with legal form. We have to check substance. Substance means reality, practicality. Last one, materiality. So this concept says you should disclose all material items in your financial statement. That may be balance sheet or P&L or cash flow or SOC or notes. I'll give you a small example. For example, on 1st January, you sold some goods to one of your customer. So the sale value is some 20 rupees. You ignore to write journal entry, you forgot to write journal entry. That is not a problem. Why? Because that amount is very less. That is not material. Not material means what? Material means important, not important for our business. If I lost the 20 rupees also, it will not affect my survival. That's why if you forgot also no problem. But if the sale value is 20 lakh or 20 crore, you should not forget it. Why? Because that is very, very important. Those are called material. Material means important. Sir, how can you say 20 rupees is important? Sorry, 20 rupees is not important. 20 lakhs is important. How can you say, sir? Simple. For example, if Reliance company is there, if they forgot to write entry for 2 lakhs, people will not care about it. Why? Because for that Reliance company, 2 lakhs is not a matter. If that is 2 crores, people will, what you call, take care of it, or they'll start thinking about it. That means which amount will influence decisions of the users, that is called important material. Okay, so this is about methods or selection of accounting policies. PSM, P for prudence, S for substance over form, M for materiality. This notes is enough. What should write? For a prudence, future profits are not anticipated, recognized only when they realized, but provision should be created for all known liabilities and losses. Second point, substance over form. Your accounting treatment and presentation of financial statements should be governed by their substance, not by legal form. Next one, materiality. Financial statements should disclose all material items. Material means what? Material means important, which influences the decisions of the users. So this is expected question for theory or else an MCQ. Okay. And one more thing is there, that is I have not written here because you know that concept, fundamental accounting assumptions, GCA. G for going concern, C for consistency, A for accrual. That means those three are also accounting policies, but we should not write to disclose again separately. For example, you enter into your main exam for financial accounting subject. You entered into exam hall means you are holding your hall ticket and calculator and pen. So no need to tell separately, sir, I am bringing my hall ticket or calci or pen. Those three are necessary. They are fundamental things. Similarly, in our accounting also, going concern, consistency, accrual, GCA are fundamental assumptions. So from where they've asked in recent exam, the first MCQ, you can look at the screen, question number 1. Which of the following is not a fundamental accounting assumptions? Going concern, consistency, accrual or assumptions. So materiality is not a fundamental assumptions. So option D is correct. So that's why I told you. So what is answer for this? GCA, going concern, consistency, accrual. So materiality is here answer. So in recent exam, they've asked one MCQ from this AS1. Again, if they want to ask, they can ask question from here. Which of the following is not a method for selection of accounting policies? That's why I'm telling every time concept is much more important. Okay. Next one, the last concept, changes in accounting policies. So just now I told at the beginning of our discussion. So I can follow straight line method, you can follow WDV, someone can follow some other method. But sir, I am following straight line method in current year, sir. I want to shift to WDV or vice versa. Can I shift? Yes. You can change your accounting policies. But whenever you are changing your accounting policies, definitely it will impact your financial statements. It will impact your net profit. Listen, for example sake, so gross profit is 100 rupees. Example sake only. Imagine no other expenses and incomes also. Last year you are following SLM, depreciation is 10 rupees. Net profit is 90. Current year you shifted to WDV. Depreciation is 5 rupees. Net profit is how much? 95. That means your profit increased. Why? Because of change in method of depreciation. But people may think that you sold some more goods or services compared to last year. That is not correct, no? So you should not mislead your users or shareholders. Here your net profit is increased only just because of your depreciation method is changed. So whenever you have changed your accounting policy, so definitely should disclose it in notes. Sir, I have changed my method of accounting policies. Last year I followed this method. Current year I shifted to this method. Because of this change, so my net profit increased by this much of amount. You should give that clarity. Okay. Last one, they can ask for true or false question. What is that? Disclosure of accounting policies or changes or not remedy for example, simply say, for example, one person is there, he involved in one crime. For example, he did some murder or kidnap or something such kind of illegal things, and he is genuinely coming to police station. Sir, I am very much honest, sir. I did that act. So I am very much honest. So I leave, sir. No. If you are accepting your crime, or else if you are genuinely telling whatever you have done, that does not mean you are not punishable. So disclosure is not remedy. That is not escape for any problem. You have to disclose. Whether that is right or wrong, we'll discuss later. Okay. So this is all about our AS1. Very small and sweet standard. Very short standard. No. So let me recap entire standard in your examination point of view. So AS1 is disclosure of accounting policies. So here you have to understand in examination point of view, if possible, and remember the definition. Accounting policies means what? Specific accounting principles and methods of applying those accounting principles. And point number 3 is the core of this standard. What is the core of this standard? You have to disclose all significant accounting policies followed by you. And the need is you have to read it on your own. And examples are, you have to at least remember it. And very important for me, methods of selection of accounting policies, PSM, and fundamental assumptions, GCA. And this concept is important for a problematic part. So this is the whole standard. So just pause the video and go through your material, whatever you have downloaded from your Telegram, and please go through it. After that, we'll solve questions on it, then you will get confidence on entire AS1. Give me 1 minute, I'll open material for problematic part. Have you noticed same question they have asked in recent exam MCQ? Which one is correct? Fundamental accounting assumptions as per AS1. What is the answer? GCA. Going concern, consistency, matching, no matching, materiality. Option is D, GCA. Going concern, consistency, accrual. Some people may tick option A. No, that is not correct. GCA, not DCM. PSM, not PSA. Okay. And question number 4, as we expected, methods for selection of accounting policies. What we discussed, PSM. You can write answer in our notes. That is enough to get full marks. And question number 3. So very easy. Don't get confused. They're asking all AS1 summary. Write whatever we discussed. All content here. That is enough. Write the main content and any change, and GCA, PSM, write all the content. Enough. And there is one problematic part is there. That is question number 1. So this is also one time they asked in exam. So this question is on changes in accounting policy. So ignore about all this content. Directly come to the questions. Okay. Observe. Value year-end inventory at works cost 50 crores. So ignore about all methods, all those things. So what happened? Current year inventory value is 50 crores. Instead of means before that they are following some other method. They are following prime cost method. At that time their inventory value is 30 crores. That means before their inventory value 30 crores, they shifted to another method. Their inventory value is 50 crores. So what happened? Simple. In your trading account, before that you are showing 30 crores. Now it is shifted to 50 crores. That means your closing stock value is increased. That means what is happening? Your gross profit also will increase. It will impact your net profit, it will also increase. That means here what happened? Because of change in their method of inventory, their net profit will also increase it by 20 crores. I have to write simply. I'll tell you the notes. So we Jeevandip Limited has followed prime cost up to last year. As per prime cost, their inventory value is 30 crores. In current year, they have switched or shifted to works cost. So in this method, their inventory value is 50 crores. Because of change in this method of inventory, that company net profit increased by 20 crores due to change in method of valuation of inventory. Just you have to write like this. You will get full marks. Similarly, point number 2 also. Here what happened about depreciation. So in olden method they are following which method it is? Now straight line. Before that they are following WDV. In WDV depreciation is 18 crores. SLM it is 45 crores. So again same, depreciation value got increased. So look at the effect. So 27 crore rupees, that is the net profit effect. So whenever your depreciation is decreased, so your net profit will increase. Just check it out. Point number 3. What happened? So they are creating provision every year. In current year, they stopped creating provision. So what is entry for provision creation? P&L account debit to provision. That means provision will decrease your profit. In current year, they stopped creating provision. That's why what is going to happen? Your profit will get increased. How much? Sales into given percentage. This much profit will increase. In question number 4, they are starting creating provision. So they are increasing their expenses. What is going to happen? Your net profit will get decreased. Simple. You can write in your own terminology. So this is not a regular class. I cannot write each and every point. So I think you already at least aware of this, or just pause the video and read the question, and you will try to understand what I am conveying here. So this is all about AS1. So from AS1, so let me summarize you guys. From AS1, if they want to ask MCQ, they can ask from PSM or GCA. If they want to ask theory also, again same chance. If they want to ask problematic part, this is the only area they can pick the question. They can change the numbers or they can change the question. Or some other question they may ask. You have to just check what is current year net profit, what is previous year net profit. So what is the effect on net profit? Should disclose it. Okay. So I'll share this material also in our Telegram group, no problem. I think with this you got complete clarity about AS1. We have covered all the concept and all the problems. So don't go to the next standard. Just pause the video or as of now close the YouTube and go back and read the entire AS1 notes which is in your mobile, or if you take a printout. So please read entire notes and come back and solve all the 4 questions. If you are confident only, come back and read the lesson next standard. Okay, so just read the entire content. So I think AS1 is done from your end also. So tell me, if paper setter want to pick question from AS1, what are the areas they can pick? If they want to ask an MCQ, again predictable areas, either from GCA or PSM. I have shown the recent exam question also, where we should disclose financial statements notes. If they want to ask theory question, again those two problematic question number 1. And come to the next standard, everybody, little bit important standard, AS10 PPE, property, plant and equipment. So in recent attempts, every time they are focusing on AS10. So actually, when I was in your place, when I was studying for inter level, so I studied two standards. So at that time, we studied AS6, which was depreciation. This standard will completely explain about depreciation, how to depreciate our assets, methods of depreciation, all those things. And AS10 was there. AS10 is fixed assets. So these two are world standards, AS6 and AS10. AS6 is dedicated completely to depreciation. AS10 is for fixed assets. But after some point of time, so these both standards are merged into one standard, that is revised standard number AS10, that is nothing but PPE, property, plant and equipment. That means in this standard we are going to learn both fixed assets and depreciation. That means we can say AS10 is nothing but they are discussing about fixed assets only. Okay? Yeah. Next one. So normally this standard is applicable to all PPs, all fixed assets. But this standard is not applicable to these two category of assets. What are those? Biological assets. Biological assets means living animals and plants. In some areas, they will use animals and plants as an asset. So if you are dealing with animals and plants, they are called biological assets. For biological assets, AS10 is not applicable. For example, paddy is a biological asset. For that, AS10 is not applicable. For example, if you take mango, coconut, this kind of trees, so that those trees will give you production for more than 1 year. They will give you benefit for more than 1 year. So all trees or plants which will give you production for more than 12 months, those assets are called bearer plants. Bearer plants means, I'll show the definition later, which will produce more than 12 months. Best example, mango, coconut. For those bearer plants, AS10 is applicable. First of all, bearer plants are also biological assets, but for bearer plants, standard is applicable. For remaining biological assets, standard is not applicable. Next one, wasting assets, nothing but natural resources like mines, quarries, gas, oil. For these kind of assets also, AS10 is not applicable. Here, the important point is biological assets and bearer plants. For biological asset, standard is not applicable. For bearer plant, standard is applicable. Bearer plant is also biological asset, but standard is applicable for bearer plants. For biological assets, standard is not applicable. Sir, what is the meaning of biological assets? Sir, just now I told you biological assets means living animals or plants. Sir, why we will use animals for our business? Simple. In areas like Rajasthan, such kind of states, especially desert areas, they will use camels or such kind of sheep or horses. They will use those things, those animals for their business purpose. So those are called biological assets. Next one, bearer plants. So I have a given definition in three tables, nothing but in one chart. One time they asked simply explain about barrel plant or what is meant by barrel plant as per AS10. So you have to remember this entire definition. So this definition is important. If they ask about what is barrel plant, you have to write entire definition, but not in chart format, write in points format. Okay, this is also important, very very important. Barrel plant. Already I told you what is the meaning of barrel plant. Have a look. Barrel plant is used in production or supply of agricultural produce. If you are using any kind of plants or any kind of assets, nothing but like mango, coconut or paddy, whatever it is, especially mango and coconut because or palm oil. So they will give you produce for more than 1 year. No, we are using those trees for supply of agricultural produce. For supplying mangoes, we are using mango trees, I can say. And next box, expected to be produced for more than 12 months. If mango tree gives you crop production, it will not give you only for one season. It will give you production for couple of years. Some trees may give you some 30 plus years also. So if they are giving more than 12 months, that plant is barrel plant. Last one has a remote likelihood of being sold as agricultural produce. Nothing but see, for example, you have one mango tree. It is giving very plenty of mangoes every year. It is giving some 100 kgs of mangoes. For in year 1 you got 100 kgs of mangoes. In year 2 you got 100 kgs of mangoes. In year 3 will you cut the tree for selling as a timber? 100% no. Cutting the tree as a timber and selling as a timber, for that the chances are almost remote. Remote means very less. Okay, when we will cut that mango tree, if that life of mango tree is almost completed, if that is unable to produce mangoes, or if that tree became any kind of spoilage or anything happened, then we will cut the tree, we will sell as a timber. If that is producing mangoes with 100 kgs of mangoes every year, why will cut the tree? So for cutting the tree, there is a remote likely. Remote means very less chances for selling as a timber. Otherwise we will use it for a mangoes only. Okay, so that is the definition of barrel plant. Remember, very very important. What is the definition? 3 points only. Point number 1, it is used in production or supply of agricultural produce. Point number 2, expected to produce for more than 12 months. Point number 3, has a remote likelihood of being sold as a agricultural produce. Next one, carrying amount. You all know, definitely, if you aware of little bit of accounts knowledge, in our balance sheet we will always show our book value of our assets. When we will prepare balance sheet, at year we will prepare balance sheet. So for example, we purchased a car in 2025. So we will show at year end our asset value 10 lakhs. Next year we will reduce that car value, because you all know fixed assets are always will get depreciated. So imagine our depreciation is 1 lakh rupee. In year 2 I will show 9 lakh. In year 3 8 lakh. In year 4 7 lakh. In year 5 6 lakh. That means I will slowly reduce the value of asset. So that means you all know the basic fundamental thing, all fixed assets are depreciable assets. So that means always we have to show in our book, in our balance sheet, book value. Book value is, we can call it as a carrying amount. So carrying amount means what? Cost of assets minus accumulated depreciation minus accumulated impairment loss. Sir, I know what is the cost of assets. So I purchased my asset at 10 lakh rupees. What is the meaning of accumulated depreciation, sir? Very simple. For example, we bought car in year 1 for 10 lakhs. So year 1 depreciation is 1 lakh. Year 2 depreciation is another 1 lakh. Tell me, at the end of year 2, what is your asset book value? 8 lakhs only, no? How you got 8 lakh? 10 lakh minus 2 lakh. How you get those 2 lakhs? 2 lakhs means year 1 depreciation plus year 2 depreciation. Those two are called accumulated depreciation. Accumulated means total depreciation. Sir, everything is fine, sir. What is this new term, sir? What is accumulated impairment loss? Generally, I'll tell you. For example, you bought a new car for 10 lakh rupees. Okay. So, car is a fixed asset, no? Fine. In year 1, you depreciated 1 lakh. So, your book value is 9 lakh. In year 2, you depreciated 1 lakh. Your book value is 8 lakh. But suddenly, at the beginning of year 3, for example, you have purchased X model car. Suddenly in market, all X model cars are becoming failure. That means every car except your car, every car is getting failure on road. So some cars suddenly they stopped on the road itself when you are in journey. So definitely what happened in market, obviously your car model price will get decreased. But you are showing your car value is 8 lakh, your book value is 8 lakh. But what is practical scenario? If you want to sell that car as on today, you will not get 8 lakh. You will get only some 3 lakh or 4 lakh. So you purchased your car at 10 lakh rupees. Year 1 lakh depreciation. You got 9 lakh. Again 1 lakh depreciation. You are showing your book value is 8 lakh. But what is practicality? You are showing only 3 lakhs in the market. So then definitely the basic fundamental is there is a section called section number 128, or even the main gap principle also says your books of accounts always should be true and fair. True means your books always should be correct. Fair means they are honest. Your books are correct only. Why? Because you are properly following depreciation. In year 1, you reduced to 1 lakh. In year 2, you reduced to 1 lakh. You are showing 8 lakh rupees. But what is the fair value in the market? It is 3 lakhs only. But you are showing 8 lakh. So if you want your books to be true and fair, definitely you should show your books at 3 lakh only, not 8 lakh. But you are showing it at 8 lakh rupees. So definitely in your balance sheet, you have to reduce 5 more lakhs here. Sir, already I depreciated my asset 2 lakh. Why I should again reduce my asset? Yes. So why we have to reduce here? Because if you sell that asset as on today, you will get only 3 lakh rupees. But here you are showing 8 lakh rupees. So this 5 lakh rupees is called impairment loss. What is this? Impairment loss. Actually, for our CMA inter level, this is not at all a big concept, but in your final level, there is a separate standard. Standard number IND AS 36. There you will have detailed discussion about impairment loss. Okay. So as of now, just I am giving you the basic fundamental of impairment loss. Okay. So what is impairment loss? I have to compare carrying value. What is this 3 lakh? This 3 lakh is called recoverable amount. Recoverable amount means if I sell this asset as on today in the market, how much amount I will get. That amount is called recoverable amount. This 8 lakh is carrying amount obviously. So as of now, just observe in your exam they will not give any kind of impairment loss, but I'm just giving you for the knowledge purpose. So next you will get doubt of what is impairment loss. That's what I am discussing right now. Impairment loss is nothing but, so you can observe impairment loss formula in your notes. I hope you got these notes in our Telegram group. Impairment loss equals to carrying amount minus recoverable amount. So they will not ask you to find out this impairment loss. For inter level, that is not our syllabus, but still I have given for knowledge purpose and I don't want to take any risk. So that's why I have given these notes. So carrying amount means your balance sheet book value. Recoverable amount is, you can observe, higher of these two. What are those two? Net selling price and value in use, whichever is higher. For example, net selling price 20,000, value in use 30,000. Then recoverable amount is 30,000. If your carrying amount is 50,000, then 20,000 is impairment loss. But you don't worry, they will not ask you to find out impairment loss. They will give you directly. For that also chances are very remote, very less. Okay. Still, if they want to pick question from final level, they can do that. Okay. This is all about India's 36. Still, I am giving you knowledge purpose. Impairment loss is equals to carrying amount minus recoverable amount. Recoverable amount is higher of net selling price and value in use. You can reduce from carrying value, that is impairment loss. Okay, just ignore. Don't get too much stress on this particular concept. Next one, depreciable value. What is the meaning of depreciable value? Depreciable value is nothing but cost minus scrap value. So residual value or scrap value or salvage value, all are same. Okay. So you all know in your foundation level onwards you are studying SLM. Okay. So what is the formula for SLM? Cost minus scrap value by life of asset. Scrap value means what? Scrap value means, for example, you bought one asset. The life of asset is some 5 or 6 years. After 5 or 6 years, so definitely you have to sell that asset as a scrap. If you sell that asset as a scrap, how much amount you will receive? That amount is called residual value or scrap value or salvage value. Okay. So I don't want to discuss the formula of your SLM because you are very much expert in your SLM. I know that. Next one. This is the definition of depreciation. What is the definition of depreciation? Depreciation is systematic allocation of cost. Please highlight this sentence, this word, allocation of cost. So they'll ask MCQ from here. Depreciation is task. Option A, allocation of cost. Option B, reduction of cost. Option C, a portion of cost. Option D, all of this. So the correct one is allocation of cost. So they have asked a couple of times as an MCQ. That's why I have given definition as per A is 10. Depreciation is allocation of cost, not reduction of cost. Okay. Residual value is also termed as salvage value and scrap value. And they'll also test you sometimes who will tell you residual value, who will tell you life of asset. Remember, my dear students, you know in your foundation level SLM formula, depreciation is equals to cost of asset minus residual value by life of asset. Out of this entire formula, you are observing three terms: cost, residual value, life of asset. Cost means how much you spent on that asset. That is definitely you know that. Second one, residual value. Just now I told you residual value means after life of your asset, if you are selling that asset as a scrap, how much you will receive is called scrap value. Remember, use your common sense. Sir, we are in year 1. How do I know after 10 years how much I will get? That is the twist here. Here, the correct terminology is not residual value. This is estimated scrap value or estimated salvage value or estimated residual value. Life is also estimated life of asset. For example, we bought an asset, we think the life would be 10 years. Maybe after 2 years, it may got insured, it may got damaged because of accident. So in that case, life is only 2 years. That's why I am using the word estimated life of asset, estimated residual value. So these two figures are estimated figures. Cost is only actual figures. Residual value, life of asset, these two are estimated figures. If you want me to write the correct definition of straight line method, depreciation is equals to cost of asset minus estimated scrap value by estimated useful life of asset. That is the correct definition. Again come back. So now the real AS10 starts here. So I told at the beginning of this standard, AS10 is combination of old AS6 and AS10. In old AS10, the standard name is fixed assets. Their fixed assets means long-term assets. But here they are giving a beautiful definition of PPE. If you want to call any asset as PPE, so this should be satisfied this definition. So one time they've asked the entire definition. So whatever I am writing here, all are important. So PPE definition is as per AS10, PPE are tangible items. That means they are giving indirectly one hint to you guys. What is that hint? Intangible assets are not PPEs. See, whenever you are studying any concept, please analyze that concept. For example, if you look at this simple word, PPE are tangible items. So based upon the single line, they can frame very much tricky questions. If I am paper setter, I will frame a question like that. Which of the following is not a PPE as per AS10? Option A, building. Option B, machinery. Option C, for example, furniture. Option D, patents. So patents is not a PPE. Why? Because PPE is only meant for tangible assets. You cannot say that, sir, this MCQ is not in my book. How can you say that? So if you understood the concept, that's why you can answer the questions, right? PPE are only tangible items. That means all intangible assets are not covered in our AS10. Goodwill, patent, trademark, copyright, logos, brands, knowledge, intellectual property, software, licenses, quotas, all these intangible assets are not covered in AS10. Actually, for that, separate standard is there in Ind AS 38. There we will discuss. That means in your final level. So as of now, the clarity is AS10 is only for tangible assets. Okay. So if you want to call any asset as PPE, what is the first condition? That should be tangible asset. Next, that asset usage should be one out of these three uses. First use, that should be used in production or supply of goods or services. Held for use in production or supply of goods or services. Yeah. If you observe this classroom, you can observe these two projectors here and one computer is here. So I am using this MacBook for recording my classes. So for giving services to you, that means I am using this MacBook or computer for production of goods or services. First of all, this is a tangible asset only and I am using it for my production only. So that is a definition of PPE. So as per this definition, this MacBook is PPE. First condition is satisfied, tangible. Second condition is production purpose. No sir, I am not using it for production purpose. Still there are two chances are there to call it as a PPE. Second one is rental to others. Rental to others means, so you have another MacBook, you are not using it for your production of goods or services, you have given it to someone else and you are taking rental amount from them. So that is also PPE as per AS10. Number 3, I have another MacBook, totally I have 3 MacBooks. First MacBook I am using it for recording classes, that is PPE. Second one I have given for rent, that is also PPE. Third one, I have given this MacBook for my receptionist for admin purpose. So she is using that MacBook for recording all student data. So she is using it for administrative purpose, that is also PPE. So that means if you want to call any asset as PPE, that should be held for only for these 3 purposes. If you are using it any other purpose apart from these 3, that is not a PPE, even though that is a tangible asset. Okay. For example, I purchased one asset or else I am holding one asset. I am not using it for production, not for rental, not for admin purpose. Then that is not a PPE according to AS 10. So what are those three purposes? One is production, second one is rental, third one is administrative purposes. Before that there should be tangible item. And then the requirement, the main point is always usage should be more than 12 months. So that is tangible item only. So production or rental or admin, but that is less than 1 year, sir. That is not a PPE. This is the most basic fundamental condition. PPE is always more than 12 months. Then only I can show in my balance sheet. No. So the expected usage should be more than 12 months. So if they are asking definition of, like they can ask question like that, what is meant by PPE as per AS 10? How can I write PPE or you can start with as per AS 10, property, plant and equipment. PPE or tangible items that point number 1 held for use in production or supply of goods or services. Point number 2 rental to others, or point number 3 for administrative purposes. Point number 4 and the expected usage of this PPE should be always more than 12 months. You will get full marks. Because this terminology is not my own terminology. This is exactly standard terminology. Okay. Next one. Sir, okay sir. Now I got understood one point very clearly. If we want to call any asset as PPE, the first condition is that should be tangible item. Second condition is use should be only one out of these three. Third one is usage should be more than 12 months. Yes sir. So I have one asset. This satisfied definition of PPE, sir. Sir, can I record in my books, sir? Like asset account debit to cash. Yes, you can record in your books. But before recording in your books, AS 10 is asking one question to you. Before recording in your books, I am asking a straight question to you. So because of this asset, do you think in your future you will get financial benefit from this asset? Is there any chances for it? Any probability for it? So if your answer is yes, you can record in your books. No sir, there is no probability for future benefits. You should not record it. So AS 10 says, so cost of PPE should be recognized only if probable that FEB means future economic benefits will be flow to the entity. That means for getting future benefits, there is chances are there. Probability means more than 50% chances are there. And one more thing, I can measure the cost of this asset. Sir, this asset cost is some 20,000 rupees, sir. That is called measuring reliably. If you are able to measure the cost of asset, and if you having probability that you will get FEB stands for what? Future economic benefits. If these two conditions are satisfied, then only you can record entry in your books. Sir, we bought one asset, sir, that satisfied definition of PPE, but it is not satisfied this condition, sir. So you should not record in your books. AS 10 is strictly saying no to you to enter journal entry in your books. So to write journal entry in your books, what is the condition? There should be probability that future economic benefits. Second one, you can measure the cost of an asset, that too in reliable manner. Then only you can record asset in your books. So okay sir, that is also satisfied, sir, very happy. So my asset satisfied PPE definition, asset satisfied recognition criteria also. Now I can write entry asset account debit to cash. Again I have a doubt, sir. Sir, for example, I purchased asset in Hyderabad or Chennai. I am transferring that asset from Chennai to Hyderabad. For transferring, for example, asset original cost is some 1 lakh rupees. Transfer price is 20,000 rupees. And after reach to Hyderabad, my place, I'm installing that asset for that another 10,000 I incurred. And I have paid some additional GST also, some 10,000 rupees. Here, MRP is, yeah. So, cost means whether it is only MRP or else I have to add transportation cost or GST, installation cost. So, AS 10 says whenever you are observing cost of asset, whether it could be not only AS 10, anyway in our accounts, here cost of assets includes these three. They can ask this as a question. Explain or describe about cost of asset as per AS 10. What you have to write? Cost of asset includes number 1, purchase price. Number 2, directly attributable cost. Number 3, present value of decommissioning cost. Okay. Sir, what is the meaning of purchase price? Here purchase price means not only amount you are spending for purchase of asset, it includes you have to add all non-refundable taxes. Non-refundable taxes means, for example, asset MRP is 1 lakh rupee, cost is 1 lakh rupee, I am paying some 10,000 rupees as a tax. But I know that I will get the 10,000 refund in back. You should not add the 10,000 rupees. You should add all taxes only if it is a non-refundable. If it is refundable, so there is no purpose to add it. If you are adding your tax to asset, your cost is increased. You are getting the benefit back. That is not a correct, no. So you have to add taxes only if it is a non-refundable. If tax is refundable, should not add it. Okay. Minus trade discount minus rebates. You all know, whenever you enter into any shopping mall, they'll give you some flat discounts. They are called trade discounts. So all trade discounts and rebates you should reduce from it. Exactly from this concept they've asked one question in recent examination question paper. I'll open the question paper right now. So based upon this they'll ask one question. So what is the next one? Directly attributable cost. Directly attributable cost means all costs which you are incurring to put that asset into usable conditions. For example, you are transporting that asset to your place, or else you are paying some labor charge or installation charge. All these costs are called directly attributable cost. So you should add all directly attributable cost. Directly attributable cost means the cost you are incur to put it into the use, or you can say to put that asset into usable condition. So you should add all these costs. Last one, present value of decommissioning cost. I'll tell the meaning of this with an example. For example, so this is a classroom, right? So this classroom, imagine this is not our own building. For example, say this is a leased building. So we are constructing one wall in between this class. That means I am dividing this class into 2 classrooms by constructing one wall at this center. So for constructing that wall, so definitely I will incur some cost. Definitely whenever you have to give back this building to your owner, so before giving back to your owner, you have to dismantle this wall. For dismantling, you need to pay some amount, right? So but when you have to dismantle it? After 10 years. AS 10 says, so after 10 years you have to pay some 10,000 rupees to labor for dismantle, remove this wall. So take the 10,000 into present value and add that to your present cost of asset. So that is called present value of decommissioning cost. Decommissioning cost means in future you have to incur that cost. Take it into present value and add to it. The best example is we are constructing one temporary wall. We will remove it after some years. Take it into present value because that is your obligation. Again here, prudence concept applies. What is prudence concept says? Prudence concept is your future losses you have to create, you have to record. That's what I am doing right now. You can observe how standards are interlinked. Okay. So based on this concept, so they have asked one question in recent examination. Many students, I think especially outsiders, so in my Telegram group they send messages on that exam day. Sir, AS 10 was very difficulty. They've asked out of question. That question is not in material. Even the question was not in their board book as well. But the question picked from this easy concept. Whoever listened this class or my previous regular classes, they can answer this question comfortably. Okay, I'll show you the question. I'll turn off my camera. So not for the existing offline students, for online students I'll turn off the camera. So please read the question and try to answer it. So okay, I'll open the question right now. The question is, I think, yes sir, question number 7A for 7 marks. I'm turn offing camera and then it will be more visible to you. Hello. Just give it a try, no problem. Definitely I'll explain. You don't worry about it. Okay, what is your answer? Yeah, let me check your answer. So, Alpha Limited contracted with a supplier to purchase a machinery which is to be installed in one of its department in 3 months time. Underline or highlight 3 months time. Special foundations were required for the machinery which were to be prepared within its supply lead time. The cost of site preparation and laying foundation were 1,40,000. So to put that machinery, they want some site preparation. For example, if you observe in apartments, they'll hold some generators. No, they cannot just put the generators at bare land. They'll construct some height because of vibrations, all those things. So they need some foundation. The cost is 1,40,000. These activities were supervised by a technician during the entire period. First of all, this is also called, that is called what? Directly attributable cost. And in your calci, 1,40,000 rupees. And these activities were supervised by a technician during the entire period. Entire period means how many months? 3 months. Who is employed for this purpose? 45,000 per month. So his salary is 45k per month. He is giving services for 3 months. Nothing but add 45,000 into 3. Nothing but 1,35,000. And then the machine was purchased at 1,50,000. That is the main cost. No, add it simple. Add 1,58,000. And then the machine I have done, and 50,000 transportation, that is also directly attributable cost. Add 50,000. Next one, a architect was appointed, fees of 30,000. So that is also DAC, directly attributable cost. That's it for 7 marks, man. What is the answer? So whatever you did getting that is correct. The answer is, I'll just check it out. The answer is 16 crore 1,55,000 or 161,55,000 is correct answer. You just write all these in particulars and add all these amounts. You will get 7 out of 7. Tell me how this question is wrong. So whenever you are looking at any question in your exam, don't get panic. I know Or even some of you have who have already attempted the last exam and they haven't attempted this question. So now you all may feel that how can I left this question? So how can I ignore this question for 7 marks? Just you add all this, nothing more than that. There is no deletions also. So that means whenever question it looks like lengthy, so that is very easy. Whenever you are reading only, you will understand that I have to add this to cost. Okay. So that's it. Very easy, no? Yeah. Again, come back to our flow. So in recent December 25 attempt paper, they asked a question from here only. Actually, they can complicate the question. They may give some more points like some tax is there that is refundable. You should not touch it. Should add only if the tax is non-refundable. But the question was very easy, man. Very easy. So why? Because they have given all added figures only. If I was question paper setter, definitely I'll add some points which are refundable taxes. You should not add it. Okay, and I'll give you some discounts. You should remove it. Don't add it. Okay, for rebates also you should remove it. Don't add it. Next one now. Subsequent recognition of PPE. Subsequent recognition of PPE means only we recorded at a beginning. I mean whenever you purchase that asset, you will record asset account debit to cash. So that means already you recorded at the time of purchase of asset. Once your year end is completed, that means at each and every balance sheet date, again you have to record your asset one more time. For example, we bought asset at year beginning for 10 lakh rupees. At year end, definitely we should reduce our asset, no, because of depreciation or else impairment loss. So AS 10 says at year end, whatever you are doing, that is called subsequent recognition. Subsequent recognition means already you recorded at the time of purchase of asset. At balance sheet date, again you have to do, that is called subsequent recognition. AS 10 has given option to you. You can follow cost model or revaluation model. Generally, we followed cost. We followed means as a student. So whatever you know, that is called cost model. Cost model is nothing but what? So cost of asset minus depreciation minus impairment loss. That's what we followed. But we for in practical scenario, in our problematic part, there is no impairment loss. So we will just reduce depreciation from cost. That is called cost model. What is revaluation model? That is new point to you. Cost model is what you regularly followed in your academic purpose. Revaluation model means at every year end, so they will check in the market what is the fair value of asset. Fair value of asset means if I want to sell this asset, or if I want to buy similar kind of asset, how much should I pay? That is called fair value. I cannot say directly market value, but for our understanding I can use that term, but it is not apt. Fair value is the correct word. So we have to compare with fair value. For example, in my books my carrying amount is 5 lakh rupees only. But if I compare with fair value is some 4.5 lakh or 4.9 lakh. There is 10,000 rupees is different. So that means again you have to revalue your asset. That means your books shows your value is 4.5 lakh, but fair value is 4 lakh 60,000 rupees. That means whenever you are revaluing your asset, you got 10,000 rupees gain. This gain is called revaluation gain. No sir, revalued amount is 4 lakh 30,000 only. Now you got 20,000 loss. That is called revaluation loss. Sir, how can I get revaluation gain or loss? You are comparing your carrying amount with revalue or fair value. So AS 10 says whenever you are getting revaluation gain or revaluation loss, so I am giving treatment. I means AS 10 is giving treatment. AS 10 says if you are getting revaluation loss, debited to profit and loss account. If you are getting revaluation profit, don't credit it to your P&L account directly. So please credit it to your revaluation reserve or revaluation surplus account. Okay, if that is loss, P&L, if that is gain, reserves. Reserves means revaluation reserve or revaluation surplus. Okay, so business entity has to revalue their assets at fair value. Sir, how can I find gain or loss on this, sir? How can I this formula fair value minus carrying amount? If that is gain, credited to revaluation reserve. If that is loss, debited to P&L account. Sir, for example, my books showing my book value is some 20,000 rupees only, but fair value in the market is 25,000. That means you got 5,000 rupees profit. AS10 says, so please credit that 5,000 rupees to revaluation reserve. Another name is revaluation surplus. Sometimes in your questions, in your exam, they may just to confuse you, they'll say that we have to use this revaluation reserve for adjusting depreciation for some other things. No, very clear AS10 says you should not use revaluation gain for any other purpose. You should simply transfer to revaluation reserve account only. If that is loss, you should debit it to P&L account only. There are no other kind of adjustments. If they are saying anything in the question, please don't believe it. Just if that is profit, credited to revaluation reserve. If that is loss, debited to profit and loss account. Okay. So next one now, again very simple thing, depreciation. So depreciation, each part of an item of PPE with significant cost of asset should be depreciated separately. For example, there is a big machinery. There is a big machinery. In that machinery, there are three parts: part A, part B, part C. So these three parts are significant, very important. Significant means part A costs 10 lakhs, part B costs 10 lakhs, part C costs 10 lakhs. Or else part A costs 10, 20, 15. Life is different. Part 1 life is 10 years, part 2 5 years, part 3 3 years. Standard says depreciate separately. So calculate depreciation for part A separately, part B separately, part C separately, and add all those depreciation and write the entry. That's what AS10 says. And one more interesting fact, recent attempt is December 25, right? Before that, in June 2025, they've asked this question, man. So factors affecting depreciation, 90% of students has done mistake for this question. Even I felt so answer may be little bit lengthy. So I expected this is the answer, but I thought we have to write some more thing, but you have to just write very simple. Simply they are asking which factors affecting your depreciation. Simply you have to use your formula in SLM. Nothing but what is the formula for SLM? Cost minus estimated scrap value minus by estimated life of asset. That's what I am writing. Cost of asset, estimated useful life of asset, estimated scrap value, method of depreciation. That means if you follow SLM, it is different. Your depreciation WB is different. So these are the four factors which will affect your amount of depreciation. Very easy. Yeah. Next one. This is also they have not asked, but chances is there. What is this point? Factors to be considered in determining useful life of an asset. There are 4 points. One is usage of asset. Second one is physical wear and tear. Third one is technical obsolescence means what? Outdated, legal or similar limits. This is not they have asked, but if you observe the pattern, they can ask this question as well. Okay. So very simple, no? They have asked this question one time. And in recent attempt, they've asked a question on cost of asset, my dear students. Okay, so I think there are some two small areas are pending. Derecognition of PPE. Recognition means you are entering that PPE in our books. Derecognition means you are removing it from books. When should you remove? You are disposing that PPE. Dispose means you are throwing away from your business organization. So you should dispose. That means you should derecognize. Or else no FEB are expected. That means from that asset there are no more future economic benefits are expected. Then also you should derecognize it. Okay. Next one, change of component in PPE. For example, in one of asset, I am changing one component. That means I am replacing with another component. For example, in one big machinery, I am changing one component. I am removing the old one, I am keeping a new one. So whenever you are replacing it, for example, I have one big generator. In generator, I am changing one coil. The cost is 20,000 rupees. So now the question is, so what about this 20,000 rupees? Whether shall I add this 20,000 rupees to asset cost, or else I should normally treat it as a expenditure? AS 10 says, whenever you are changing any component of your PPE, so does it increases your output? Because of that component additional cost, if output is increased, so better add to your PPE. Nothing but capitalize it to PPE. No sir, that is not increasing my output. Then don't add to your PPE, don't capitalize, go to your P&L account and write on debit side. Okay, simple. If it give benefits, capitalize it, otherwise P&L account, that's it. Capitalize means what? Add to the asset. So this is all about our AS10 PPE. But still there are some more, the last concept is pending. They are asking question from this area as well. That is differences between IND AS and AS. So by the way, you know the basic what is the concept of IND AS. So AS10 is PPE, IND AS16 is also about PPE. So here I cannot explain IND AS16 and AS10 differences. You have to read it on your own because this is not a regular class. I have given notes, just read it. I have summarized the content in simple language. So please read entire content. They may ask MCQs from this area or they can ask one question. If you have studied up to here, if you ignore these differences, they may ask question from this point as it is. So each and every differences, whatever I have written here, all these are important for both multiple choice questions as well as descriptive part. So without studying differences, you should not go to exam hall. For example, in AS, it does not exclude real estate developers. But AS10 excludes real estate developers. They may ask an MCQ. Okay, dear students, read question number 5 which is on your screen. 5 and 6 are from PPE AS10. Look at question number 5. Machineries which appeared in the books of D Limited at 86 lakh rupees. At 86 lakh rupees. So, in D Limited, the asset book value is how much? 86 lakh rupees. Okay. So now what happened? Has been revalued at 90 lakh rupees. So we discussed this method, right? Subsequent recognition. So their book value is 86 lakh, revalued amount is 90 lakh rupees. What happened? So they got some increase in value, that is called upward revaluation. Upward revaluation means your revalued amount is more than your asset carrying amount. So that means you got 4 lakh rupees gain. That gain is called what? Revaluation gain. So what AS10 says, you should credit this 4 lakh rupees revaluation gain to revaluation reserve or revaluation surplus account. The accumulated depreciation was 28 lakh. They've given some other data to just confuse you. The accountant suggests that revaluation should be accounted for by adjusting depreciation. That's what I told you already. Accountant is telling that we should not credit this amount to revaluation reserve. We have to use it for adjustment. No, we should not use it for adjustment. That is not correct. You are required to discuss the treatment. So what is the correct? The suggestion given by accountant is not correct. That is incorrect. What is the correct treatment? So whenever your asset got upward revaluation, should credit it to revaluation surplus or revaluation reserve account. Okay. So the accountant treatment is wrong, incorrect. That's it. Question number 6. I'm just giving you time to read the question. I'm just turning off my camera. Read it. So whenever you understand the question, so your answer is 50% complete. Yeah. So what is the question? Zai Limited, that is a company name, a chemical producing company. They are producing some chemicals. Changed semi-automatic component in existing machine with fully automatic component. They are changing one component. Ignore about all those names. So incurring 85,000 rupees. They are changing one component. The cost is 85,000 rupees. So already we discussed this concept. Whenever you are changing component, what I told you, the question will whether should I capitalize it or transfer to P&L. What I told you, if that as that cost increases your output, capitalize it, otherwise P&L. Let me check. This new component would result in increasing the output by 150 percentage. That means our output will increase by 150 percentage. Then what to do? We have to definitely capitalize it. One more point is this is the second part of the question. There are some 38,000 dismantling cost. The component changing exercise requires the company to dismantle part of machine and also re-erect the machine. See, so to do all these things, they have to incur some other cost. So they have to dismantle existing asset. So the dismantle we should not add to our asset. We have to only add the cost of that 85,000 only. This 38,000 we transfer to normal P&L account because that will not give you additional benefit to you. Only this 85k is giving benefit to us. So that then what is the summary? We have to capitalize this 85,000. Capitalize it means what? We should add to asset. This 38,000 we should transfer to P&L account. Okay. So that is all about our problems in AS10. So already we have covered recent June exam paper. So you only solved the question. I think we got some 161 lakh some amount. So now we covered this question and we have covered all theory points. AS10 is most important. Don't skip this standard. Okay. Next one, AS11, the effect of changes in foreign exchange rate. Actually, they are not asking direct question from AS11. There is some reason. Why? Because this chapter is somewhere relevant to branch account chapter. So from branch accounts, they are asking one question every time. Sometimes they ask departmental accounts also. That's why they are not concentrating on AS11. Still, I cannot say you can skip AS11. So if you observe recent paper, we cannot skip any area. Okay. So that means I do not waste your valuable time, and I do not prolong this standard also. Let me summarize this chapter as soon as possible, standard, and I have given notes, no problem for it. Yeah, so let me focus only on examination oriented. So total AS11 in examination point of view, I divided into two parts. First part is foreign currency transactions. Second part is foreign operations. Okay, that means in entire AS11, the main standard agenda is to discuss how to accounting for foreign currency transaction, how to accounting for foreign operations. If any business organizations, if they are dealing with foreign currency transaction, what is the accounting treatment? If they are dealing with foreign operations, what is accounting treatment? That is the main agenda of AS11. Now, sir, what is the meaning of foreign currency transaction? What is the meaning of foreign operations? You are not telling the meaning, you are directly talking about accounting treatment. No, I will discuss in detail the total transactions, operations and accounting treatment. First of all, I am just giving you what is the agenda or objective or motive of this standard. AS11 standard is to discuss accounting treatment of these two. What are those two? Foreign currency transactions and foreign operations. Okay. So before understanding the accounting treatment of FCT and FCFO, FCT means foreign currency transaction, FO means foreign operations. Before understanding it, you need to understand some important definitions, some 4 to 5 definitions. Sir, what are those, sir? Out of those, first one is reporting currency. Reporting currency means, for example, if you take a company called MRF company, or else if you take HUL company, or else some Reliance company. So all Reliance company or Tata company. So this company is Indian based company. So you all know, according to as per section number 129, every company has to prepare financial statements. Financial statements means they have to prepare balance sheet, P&L, cash flow, SOC notes. So these 5 should be prepared by every Indian company, and they have to be in rupees only. That means if you observe Reliance company or Tata company, all these Indian companies P&L, balance sheet, cash flow, all the numbers or figures in rupees only. That rupee is called what? Reporting currency. That means in which currency your financial reports are presented. Or simply we can say, if you are Indian company, your reporting currency is nothing but rupee only. If you ask me a definition, reporting currency means currency of country where financial statements are reported. Nothing but if you are reporting in India, your currency is called rupee only. So I have given point number 2. Reporting currency of the entity operating in India is rupee. Simply, what is reporting currency for all our Indian companies? Rupee only. But they have given definition. What is the definition? Currency of a country where financial statements are reported. We reported in India only, no? What is India currency? Rupee. That rupee is called reporting currency. Next one, foreign currency. Foreign currency means other than your reporting currency. Nothing but for Indian companies other than rupees are called foreign currency. That may be dollar, pound, euros. So all those things. So they are called what? They are called foreign currencies. That may be euro, or that may be pound, or that may be yen, or that may be Japanese yen. So all these are called what? Foreign currency. Okay. Next one, exchange rate. You know, if you want to fly to USA, for example, you are planning to go for MS in US or for job in US, definitely in US nobody accept your Indian rupees. You have to convert your rupees into dollars. For example, you have 1 lakh rupees. So you have to sell your 1 lakh rupees and you have to buy US dollars. As on today, dollar equals to 93 point something. So $1 equals to 93 rupees. That is called exchange rate. Okay. So exchange rate means rate at which currency is converted into reporting currency or vice versa. That means where our currency is converting into another currency. Next one. So what are those? Reporting currency, foreign currency, exchange rate. Reporting currency for Indian companies is rupee. Foreign currency means other than rupees. Exchange rate means at what rate you are converting one dollar into rupee or rupee into dollar or vice versa. Okay, these are some basic fundamentals of our AS11. So as on today, just let me check. You will also get clarity. Yeah, one US dollar equals to how many rupees? As on today, you can observe screen 94.25 rupees is $1 amount. $1 equals to 94.25 rupees. So as on today, that is the value. It may be increased or decreased in future. So at balance sheet date, at 31st March, so for example on 31st March, the dollar value will be 100 rupees or 96 rupees. That amount is called closing rate. Closing rate means exchange rate as on balance sheet date. Okay. Average rate means on an average what is the rate in our year. For example, in last year average rate is 90 rupees. On an average that is 90 rupees. Okay. So that's what reporting currency, foreign currency, exchange rate, closing rate, average rate. I think you got clarity. Reporting currency means rupee, foreign currency means other than rupee, exchange rate means $1 equals to how many rupees or vice versa. You are converting one currency into another currency. Closing rate means exchange rate as on balance sheet date. Average rate means on an average what is the rate. So apart from that, there are two more important definitions. Those two are monetary items and non-monetary items. Many students may interpret wrongly these two definitions. Monetary items means so many students assume that monetary items means money, non-monetary means not money. No, that is not exact definition. Monetary items means, have a look. Monetary items means money held. That means whatever money you are holding, either it is cash in hand or cash at bank, and all assets and liabilities to be received or to be paid in fixed or determinable amount of money. That means you all know assets means fixed assets and current assets. So a current assets, for example, best example, debtors. What is the meaning of debtors? Debtors means I sold goods on credit to you. So if you sold goods on credit to someone else, that means he is called debtor. Amount is receivable from him. So whatever amount is receivable from him, you know that amount is already fixed. So the amount receivable is fixed, no. So debtor is called monetary item or creditors also. Creditors means amount to be paid in future. That means that is also fixed. You know the amount that is called determinable amount. That means you know you have to pay amount or you have to receive amount, that is fixed amount. You know that previously only, you know that already. So that means if you know that is fixed amount, that is called monetary item. Monetary items means not only cash. I have given examples, debtors, creditors. So all these are called what? Monetary items. Non-monetary items. Non-monetary items means other than monetary. What are the examples? Fixed assets, inventories, investments, equity shares. Now some people ask me, sir, debtors is current asset, inventory is also current asset, but you are telling that debtors is monetary item, inventory is non-monetary item. Sir, why sir? Simple. I sold goods to Mr. X for value of 1 lakh rupees. That means in future from X 1 lakh is receivable. That is fixed amount. So that is called monetary item. But I am holding inventory. I don't know for what amount I'll sell it in future. I may give discount or I may give trade discount, or there may be what you call spoilage of goods or abnormal loss. That's why these are called non-monetary items. So again, don't in a wrong notion that all current assets are monetary assets. No, big no. All current assets are not a monetary assets. So depend upon the nature of assets. If that is fixed amount to be received or to be paid, that is monetary asset. Remaining all are called non-monetary asset. So these all are basic important definitions. You should aware of it for understanding AS 11 further in detail. Okay, I'm just turn off my camera. Please go through the reporting currency, foreign currency, exchange rate, closing rate, average rate, monetary item, non-monetary. These 7 are very, very important to understand AS 11. Yeah, welcome back. So, up to non-monetary items done, nothing but we have covered all definitions which are important for understanding the standard. Reporting currency, foreign currency, exchange rate, monetary, non-monetary, average rate, closing rate is done now. So already I told you the main major discussion of AS 11 is 2 parts. Part 1 is foreign currency transactions, part 2 is foreign operations. So mainly they'll ask questions, or AS 11 also, it's focusing on accounting for foreign currency transactions, accounting for foreign operations. First of all, what is the meaning of foreign currency transaction? What is the meaning of foreign operations? We'll discuss, then we'll go into the accounting for these two. First of all, let me discuss foreign operations. Foreign operations means very easy, man. Foreign operations means, if for example we are Indian company, we are holding branch in United States of America. So that means in that branch all purchases, sales, salaries, rent, all payments are in US dollars only. So that is called foreign operation. Foreign operations means we are conducting our operations in outside India. So that is called foreign operation. Simply I can say we are establishing a branch in USA or other than India. So actually we have a separate chapter called branch accounts. In branch accounting, we have a separate concept called foreign branch. There we will discuss in detail about foreign operations. Here I am just giving the clarity of foreign operations. Just you can observe it. Foreign operations means what? Operational activities conducted in a country other than country of reporting currency. Reporting currency means nothing but our India only, no? If we are conducting any operations other than India, that is called what? Foreign operations. Clear? Next, this is important. That is foreign currency transactions. Foreign operations means what? Simply we are conducting our operations other than India, nothing but foreign branch. So foreign currency transaction means very simple. So if you are entering into any transaction, if you are dealing with any transaction, normally if you see, for example, in India, normally we will enter into all transactions in rupees only. For example, if you are paying salary, in rupees. If you are purchasing goods, in rupees. If you are selling goods, in rupees. If you are selling asset or purchasing asset, all in rupees. But if you are dealing with any transaction, if that is denominated in other than rupee, that transaction is called foreign currency transaction. Sir, I didn't understand, sir. I'll give you an example. For example, we are purchasing a new laptop from America, but the price is in dollars. For example, it is some $100. That means we have to pay amount in dollars. So that is called foreign currency transaction. Or else you have one client in United States of America. He is paying fees in US dollars. You told him price also in US dollars. So that is called foreign currency transaction. Foreign operations is different. Foreign currency transaction is different. Foreign operations means we are holding a branch in other than India. Foreign operations means if we are conducting our business in India only, but the transaction is in other than rupee. That is called foreign currency transaction. Have a look. Transactions which are denominated, that means price, in foreign currency, that means the price is in dollar itself. We are not mentioning rupees, are called as foreign currency transactions. Examples: buying or selling goods or services priced in foreign currency. We are purchasing goods, the price is in dollar, or we are selling goods, price is in dollars. Second one, purchase or sale of fixed assets denominated in foreign currency. We are purchasing asset or we are selling asset, the price is in dollars or pounds or euros other than rupees. Or taking or settling liabilities, nothing but we are borrowing some loans from American banks, or we are repaying those loans in America to the American banks. So all these are called foreign currency transactions. Foreign currency transactions means what? So if you are dealing with any transactions which is other than rupee is called foreign currency transaction. Clear? Done, sir. So here I am going to discuss in this chapter, so for accounting for foreign currency transaction, foreign operations. If time permits, we will cover forward exchange contracts also. But the main focus is already we discussed foreign currency transactions, foreign operations. So here we are not dealing foreign operations here. Why? Because in branch accounts we will discuss in detail about how to deal with foreign transactions. How to deal with foreign branch, not transactions. So it will be covered in part 2 of our marathon. So as of now we will discuss foreign currency transactions only. Sir, maybe theory looks like little bit different or difficulty, but if you observe the problem is very easy. Okay. First one, initial recognition of foreign currency transaction. Sir, that means what? Very simple, sir. For example, first time we are taking some loan from foreign bank, or else we are purchasing one asset in rupee only, but we have taken loan from foreign bank. That means first time you are entering into one foreign currency transaction. For example, you are entering into foreign currency transaction as on today. Today rate is 94.50 rupees. $1 equals to 94.50 rupees. But you have to pay that amount in dollars only. $100 you have to pay. But you are paying not as on today. You have to pay on 30th April. So that means today's rate is 94.50. Definitely on balance sheet date I have to close my books of accounts. On balance sheet date value is 96.50. On settlement date you are paying 100 rupees. That means what happened? This exchange rate is increasing day by day. On the date of transaction, exchange rate is 94.50. You bought a laptop for $100. So I'll write in detail for you. So you have to pay $100. You entered into transaction as on today. As on today, the price of exchange rate is 94.50. That means how much? 100 into 94.50. My calculation is not working. You do it. How much? 9,450 rupees you have to pay. Am I right? 100. Yeah. So, but you are not paying as on today. At 31st March, definitely we have to close our books of accounts. Still you are not paying. As on that day, your liability will become 100 into 96.50. So it will become 9,650. So as on today, your liability is 9450. On balance sheet, it will become 9650. That means you have to pay 2000 extra. In fact, that is loss to you. This loss is called foreign exchange loss. AS 11 says to transfer it to P&L account debit side to foreign exchange loss. You are paying amount on 30th April. On that day, again 2 rupees increase 98.50. You are paying 9850. Again 2000 increase. This is also called foreign exchange loss. You have to transfer this also to P&L account. AS 11 says at the time of your entering into the transaction, so you have to record at 94.50. That is called rate on date of transaction. If you are purchasing asset on today, so apply this rate, today's rate. On balance sheet date, apply closing rate. This difference is called foreign exchange loss transfer to P&L account. On settlement date, again apply date on settlement date. So calculate difference between the last two. That is also, that may be exchange loss or gain. Okay, this is what FAS 11 about foreign currency transactions. So I have given notes. So I in detail, but this is not that much relevant. But still I will discuss. So we have to apply on initial recognition which rate? Exchange rate on date of transaction. That means what? If you are purchasing or if you are taking loan from a foreign bank as on 1st April 2026, you have to apply rate on that date only. That is called date of transaction. If you are entering transaction today, you have to apply rate on today only. Coming to balance sheet date, on balance sheet date what we have to do? We have to check whether that is a monetary asset or non-monetary asset. If that is monetary asset, recognize that closing rate. That's what I told you right now. And some of you may feel little bit difficulty while understanding this concept, but remember, so when you are solving problems, if you understood one problem, so that is highly enough. Okay, so concept, because it will feel difficulty because the terminology. Okay, nothing more than that. So we have to recognize that closing rate and we have to show exchange gain or loss. Coming to non-monetary assets, so here also same. Just I don't look at all these things. No need to remember all these things. We'll solve one problem, you will get full clarity. That is my promise. If there is any contingent liabilities, you know what is the meaning of contingent liabilities? It's depend upon future uncertain events. So we have to record at a rate on balance sheet, nothing but closing rate. And come back to accounting for foreign operations. So this already I told you, it is a form part of branch accounts, but still I'll just read the entire content. So sir, we understood very clearly how to do accounting for foreign currency transaction. Still, if anybody not at satisfied, so I'll explain in detail. Listen once. Listen. Look at the screen, everybody. So if question comes from AS 11, that may be from two parts. Either that is foreign currency transactions or foreign operations. Foreign currency transactions, they will give you transaction date. For example, I will take today's date. So today I am recording this video on 26th of April. For example, on 26th April 2026, we are entering into one transaction. Okay, we are taking loan from some American bank. So our loan amount is, example sake, only $10. We agreed to repay this loan on 30th March or 31st March 2027. So first of all, whenever you have taken loan, you have to show in your balance sheet as a liability, right? Liability said as on today I have to record how much today's rate is. For example, already we have checked now 94.50. That means as on today, what is my liability? 945 rupees. That means I have to show in my books of accounts, I have to pay 945 rupees to American bank. Done. We have to apply today's rate for today's transaction. Nothing but exchange rate on date of transaction. Next one, on balance sheet date. Balance sheet date means on 31st March 2020. For example, say 30th, 34th April, change it to April, the last one. So on balance sheet date, what we have to do, again we have to close our books of accounts now. On that day also, my liability is only $10. But unfortunately, what happened? So in market, exchange rate is increased. For example, it increased to 96.50. That means you have to pay 965 rupees. That means what? In your balance sheet, you have to show 965 rupees. So previously your liability is 945, now it has increased to 965 rupees. That means is it income or expenditure or loss or gain? 100% that is loss to you. Why that is loss? My liability is increased not because of me, it is because of change in exchange rates. So how much loss? 20 rupees. This 20 rupees is called foreign exchange loss. So that loss is because of exchange rates. Which exchange rates? Foreign exchange rates. So that's why that 20 is called foreign exchange loss. Okay. On 31st April 2027, I am repaying that liability. So $10 liability I am repaying it. So on that day, exchange rate is 98.50. That means how much I am repaying it as on this date? 985 I am repaying it. Already at last time we are recording at balance sheet date, I showed it 965. Again it is increased 985. Again I got 20 rupees loss. Why again 20 rupees loss? Because of change in exchange rates. This is also called foreign exchange loss. This also I should transfer to P&L account. If it is gain, also same. Gain means if it decreases, you will get gain. That's it, no? So this is clarity about foreign currency transaction. I think now you got full clarity about foreign currency transactions. Now, what is foreign operations? We'll come back to foreign operations. Already we discussed what is the meaning of foreign. What is the meaning of foreign operations? Simply we can say foreign branch. So I already told you we'll discuss in branch accounts, but still I'll cover here. See how to accounting for foreign. It's depend upon which kind of branch it is. If it is whether it is dependent branch or independent branch. Dependent branch name itself says dependent branch means that branch completely depends on head office. For example, BCCA is having, example say we are having branch in Chennai and Hyderabad. Those two branches completely depend upon our main branch, Newsbeat branch. So completely both the two branches will depend upon Newsbeat branch. For salaries or rentals or admin purpose, everything will be controlled by main branch only. So that branch is called dependent branch. No sir, that branch is not depending on main branch. So they are my head office. They are running their branch independently. Those are called independent branch. That means if the question comes from dependent or independent branch, you have to check. I'm sorry, if the question comes from foreign operations, you have to check whether that is dependent branch or independent branch. What is the meaning of dependent branch? Dependent branch means that branch is completely depend upon head office. Foreign branch, independent branch means it will not depend on head office. Okay, come back. Dependent branch technically called as integral operations. Integral operations means we are integrating their operations as well, nothing but dependent. Non-integral means independent. So individual items in the financial statements of foreign operations are translated at the actual rate on date of transaction. As usual, every time whenever you are entering into any transaction, we have to apply rate on that date of transaction. For example, see, for example, we are Newsbid branch. Example sake, we are establishing a branch in Dubai. So we are paying salary to Dubai employees. As on the day, what is your exchange rate? Apply that rate. That means rate on date of transaction. Number 2, the cost of tangible fixed asset and depreciation is translated using closing rate or date of purchase of asset. Okay, and point number 3, the cost of tangible and depreciation is translated using exchange rate. It is repeated. Repeated point. Have a look. Sorry, fair value, no? Okay, no issue. Last one, again same charge to P&L exchange loss. See, dependent, independent branch. I cannot say this is just a small theory. We have problematic in branch. We'll discuss in detail. Have given just theoretical purpose. Simply what I can say, dependent branch means it is depend upon your head office. For every transaction, we have to convert into rupee rate as on that date of transaction. If there is any exchange loss, transfer to P&L as usual. If you understood, fine. Otherwise, also no issue. We'll discuss in branch accounts. Sir, non-integral operations, sir, nothing but independent branch, sir. In that case, so they will prepare their own financial statements. They will prepare their P&L account, their balance sheet, their cash flow, their SOC, their notes. So if they are preparing their own financial statements, so on balance sheet date, all assets and liabilities, for example, we have some Dubai branch or we have some USA branch. In USA branch, they have one land and building. Land and building value is $1 lakh as on today. We have to convert into our currency while applying a closing rate. Closing rate means what? Rate on balance sheet date. That means we have to convert balance sheet in dollars to balance sheet in rupee. In balance sheet of Dubai branch, it shows land, building, machinery. All are in dollars, no? You have to convert into Indian rupee by applying exchange rate on balance sheet date. Next one, items of incomes and expenses. We have to apply actual rate on date of transaction. So simply you can simply identify it even though they have not given concept. If you are paying any expenditure, apply rate on that date. If that is assets, apply on closing rate. Why? Because assets means closing, we will prepare balance sheet at the end of year. Again same, any exchange difference. But here, listen. Up to dependent branches, we are transferring exchange loss to P&L account. If that is independent branches, you should not transfer to your exchange loss to P&L account. You have to transfer to foreign currency translation reserve called as FCTR, foreign currency translation reserve. Okay, so this is only for independent branches because that branch is not running by head office. They are running on their own. Okay, So if you just summarize the foreign operations, nothing but branches, two types of branches, dependent branches, independent branches. Dependent branches means they will depend upon head office. Independent branch means they will not depend on head office. In case of dependent branches, if you get any exchange loss, transfer to P&L account. In case of independent branch, if you get any loss, transfer to FCTR. FCTR means foreign currency translation reserve. We'll have one big problem in branch accounts. So there we will discuss on this particular concept. You don't worry about it. But just understand that may be for MCQ purpose. They can ask if there is any exchange loss from non-integral operations, so we have to transfer to option A P&L account, option B balance sheet, option C FCTR. FCTR is the correct answer. Okay. So one special case is there. So till now what happened? We are taking loan from the banks. Now we asset purchased in foreign currency with foreign loan. Listen. See, till now what happened? We are purchasing assets in rupee but taking loan in US dollars. Now what is the point? Here we are taking asset in dollars and taking loan also in dollars. For example, I am purchasing one big machinery in USA. The price is some $1 lakh. I have taken loan from again in US of $1 lakh for paying that machinery. So in that case, any exchange loss on payment on installment, you should add it to carrying amount of fixed asset. At the same time, loss on outstanding balance also added to cost of asset. Simply, in all previous cases, your exchange loss that should be transferred to P&L account. If it is dependent branch, you should transfer to foreign currency translation reserve. But if in special case, what is the additional point? You have to add to the cost of asset. When should I add to cost of asset? If you have taken loan in foreign currency and with that loan you purchasing asset in foreign currency. In this scenario, you have to add to your asset cost. Clear? So this is all about AS11, the effect of changes in foreign exchange rate. Okay, actually in institute material they have added very new questions. We'll solve all new questions right now. Before that, as we discussed in previous standard as well, so differences between Ind AS and AS. If you remember, AS10 Ind AS corresponding is Ind AS 16. For AS11, Ind AS 21. Here also I have given differences, but here only 4 small points. These 4 are enough. Ind AS 21, forward exchange contracts are not covered. AS 11, forward exchange contracts are covered. That means Ind AS 21 is not covering contracts and AS 11 is covering forward exchange contracts. Ind AS 21, accounting for foreign operations based on functional currency approach, we have not discussed it. We have not used this word also. We are using that word of integral, nothing but dependent, independent branch. No guidance on long-term monetary items. But here there is clear difference. And presentation currency different from local currency. Here there is no such guidance. Simple 4 points. Don't try to analyze these 4 points in detail, just remember and understand. Okay, so this is all about theory perspective of AS11. Of course, I understand this is not simple as AS10 or AS1. Still, I have given notes in detail. Have a look. I have missed one concept, that is forward exchange contracts. That is not needed. Still, if it is needed, I will come to you in another format. Okay, yeah, please pause the video and please look at the entire. Yeah, problems are very important. Question number 7. During the financial year 22-23, Z Limited, an e-commerce firm, okay, they are in e-commerce, entered into a foreign currency transaction. So This is question from AS 11, that to FCT only, not foreign operations. So I have given clearly how to do answer relating to fees for technical services paid to Lucas Limited, an Atlanta based organization in USA. That means, so we have taken some services from some Atlanta based company, we have to pay amount. Okay, the transaction was $24,000, which was entered into on 7/12/2022. So on 7/12/2022 we have entered with them, the fees is $24,000. The payment for the same was made on 20th May 2023. So here dates are important in this kind of questions. So we can observe two dates. First date is 7/12/2022. This is called what? Date of transaction. Second date is 20th May 2023. This is called date of settlement. So if you observe the screen, there are two dates, 7/12/2022, 20th May 20. In between there is a balance sheet date, no? What is the date? 31st March 2023. This is called date of balance sheet. Okay, fine. Next one. Given that exchange rates on 7/12/2022, you can look at the screen, I'm writing in detail. 73.80 on date of transaction and 73.95 they have given on 1/1/2022. That is irrelevant for us. They have given this rate only to just confuse you. This rate is not enough, not required. So on 31st March 2025, what is the rate? 75.45. On date of settlement, 76.50. So we required three rates, they have given four rates to just confuse you. Okay, so you can look at the screen, this is the exact required information. So you are required to ascertain amount at which transaction would get recognized in books. Already I told you. Initial recognition at which rate? Date on transaction. So what is the amount actually? So for point number A, what is the answer? $24,000 into 73.80. Do it. I'll also do it. 24,000 into 73.80. Your answer should be 17,71,200. Here symbol is important, rupees. If you are not writing symbol, the measurement is dollars. So this what we have to record. That is the point number A answer. We have to write before provision. What should I write? As per AS 11, accounting for foreign currency transactions. Foreign currency transactions should be recognized initially at date on transaction. Then I put in the done. Next one. Point number B, they are asking what about exchange loss in future years. So what is happening on balance sheet date? On 31st March 23, $24,000 into 75.45. In fact, what is the exchange loss? You can write directly or you can write in another format. How can you do it? 24,000 into 75.45 minus 73.80, or you can do it in another format, no problem. So what is the answer? 75.45 minus 73.80 into $24,000. How much? 39,600. This is what? Exchange loss. Date of settlement again 20th May 2023. Here also again rate increase it to 76.5. So you can calculate 76.5, you can reduce it for no problem, or you can write 76.50 minus 75.45. 76.50 minus 75.45 into $24,000. Again 25,200 loss. So both these losses should be transferred to where? P&L account. That's it. Very simple. Already I have covered in our theory part. Correct, no? So that's it about question number 1. Next question number 8, which is on your screen. Yeah. Subhash Limited purchased a machine costing 224 lakh rupees. My dear students, very careful. You have to identify or observe which denomination is it is. So it is in rupees only. This is not special case. We have taken in rupees only. And the same was fully financed by foreign currency loan payable in 3 installments. Exchange rates are $1 equals to 70 rupees and 72.95 on 1/4/2022 and 31st March 2023. First installment was paid on 31st March 2023. The entire difference of foreign exchange has been capitalized. Advised exchange gain or loss accounted by the complex. Please read the question once, entire question. So they have purchased one asset. Look at the screen. I am writing the answer. What is the cost of asset? Cost of asset equals to rupees. That is not dollars. If that is dollars, we have to apply special case. 224 lakhs. Okay. Now they have taken loan. What is the loan amount in dollars? So tell me, what is the loan amount in dollars? How much? Tell me. How can I tell it? Convert into dollars. That means loan amount in dollars is equals to 224 lakh divided by what is the rate on the date? 70 rupees. Convert it. 224 lakh by 70 rupees. That means in dollars, that is $3,20,000 loan I have taken from American bank. Okay. Now what happened? Payable in 3 equal annual installments. So loan amount how much? 3,20,000. Then what is first EMI? Equal means 3,20,000 by 3. Do it by 3. How much? By 3. 1,06,666.66. Total 3 installments. Here what happened on balance sheet date? On 31st March 23, rate became 72.95. What is the total loan amount? $3,20,000. What is the rate as on loan date? Loan taken 70. Now it is became 72.95. How much increased? $3,20,000 into how much increased? 2.95. 3,20,000 into 2.95. How much? 9,44,000 we should transfer to P&L account. In fact, no need to find out EMI also. When should I find out EMI? If that is special case, we should find out EMI. Okay. This answer is enough to get 4 marks. If you want, just pause the video and copy it in your notes. I'll turn off my camera. If you need, you can copy. So here no need to find out EMI. When we should find out EMI? If that is a special case. What is special case? Go to your notes and check it out. Okay. Can we move on to the next problem? Yes. Yeah, look at the next question. This is also similar question. This is the last question for our discussion. We have one more question in your material. That's your homework. That is special case question. I will discuss this question. Goods purchased on 24/2/2022 for $10,000. Here dates important, symbols important. When we purchased on 24/2/2022 for how many rupees? $10,000. On that day, what is the rate? 76.60. Now tell me, what is the amount on 24/2/22 convert into Indian rupees? $10,000 into 76.60. 10,000 into 60 means nothing but 7,66,000 rupees is our liability on 24 to 2022. So next day is what? Balance sheet date. Balance sheet date is nothing but 31st March 22, rate became 77. Nothing but my liability will become 10,000 into 77. Nothing but 7,70,000 is my liability. What happened? My liability got increased by how much? 4,000. Am I right? This 4,000 is what? Exchange loss. I have to transfer to P&L account. Okay. Next one. What is the settlement date? Date of payment 5th June 23. I am paying how much? $10,000 into 77.50. Nothing but I am paying 77,75,000. That means again I am paying extra 5,000. This is also loss. This loss is again should be transferred to P&L account. Tell me, very simple, no? If you just I'll turn off camera, you can look at the entire problem. Very simple, no? In fact, for this AS11, I recommend students to don't focus on entire concept except the differences between Ind AS and AS, but you should focus on these problems. These problems are enough, and don't try to link problems and this concept. So my recommendation is to ignore concept. So focus on these 3 or 4 problems enough, and focus on scanner questions if you have any problems. Okay, don't give too much importance to the concept of AS11, and then but don't ignore differences. Already I told differences are very very important. They can ask for. Yes. So in accounting standards, so we all know in our group 1 syllabus we have AS1, 10, 11, 12, 16, 22. We have covered AS1, 10 as well as 11. It's time to start the next standard, the 4th standard, AS12. What is AS12? Accounting for government grants. I think you have this PDF. Don't have this PDF. You can just go to the Telegram group. You can find out this material, and the link of the Telegram group will be in description. Yeah. So before entering into AS12, see, I think you have watched almost 2.5 to 3 hours content. I think if you are listening me for the first time, I think you got the way of clarity I'm giving to the student, whether it could be concept or else examination oriented. See, my point is, if you want to clear your CMA inter or CA inter, so the perfect coaching is needed. So without proper coaching, so you cannot clear your exams. So if your coaching is not up to the mark, at least plan your revision properly. My intention to all the students, so please take coaching from proper institution. I cannot say take classes from BCCA or else take classes from me. Nothing but BCCA recorded classes of mine. Wherever you are comfortable with the teaching, please go with proper classes. Okay. So you also educate your juniors who are suffering with proper classes, and tell them or convey them to take proper recorded classes. That are more than enough. No need to go to regular college morning 7 to evening 8 all the time. You can take recorded classes. Okay. Yeah, this is not a promotion. I want to convey to all the students. Some students are still suffering lack of proper knowledge. Yeah, come back. AS12 is accounting for government grants. Similarly, if you remember all previous 3 standards, for AS1 no corresponding Ind AS, but for AS10 we have Ind AS 16, for AS11 Ind AS 21, for AS12 Ind AS number 20. That means at the end we will discuss differences AS12 and Ind AS 20. same as all previous standards. See, and come to the AS12 accounting for government grants. See, name itself says government grants. Government grant means we are running a company or a business as a proprietor or partnership. So now government is giving some benefit to us. Government is giving grant to us. So now whenever a company is receiving grant from government, how to do accounting? For example, we received some 10 lakh rupees cash. How to write journal entry? For example, we purchased an asset amount of 50 lakh rupees. Government has given 50% subsidy. How to write journal entry? For all this kind of government grants, what is the accounting treatment that is given by our beautiful standard AS12? AS12 main agenda is to give treatment for accounting of government grant. That means whenever a business organization received a government grant, so what is accounting treatment? That's what given by our AS12. Corresponding Ind AS number is Ind AS 20. Sir, first of all, what are the government grants? See, generally government grant means government is giving help. Grant means help or assistance or support. So generally, if you look at all the states in India, every state wants investments. Sometimes all state government chief ministers, they'll go to the foreign countries, they'll invite the people in the foreign countries to establish companies in their state. So whenever companies incorporate branches in our state, automatically our state will get developed because we will get taxes from them, and automatically economy will develop. Some ancillary services will also develop. So that's why governments will give some subsidies or grants to the business organizations. First of all, government is giving grants to the all business organizations in three forms. First one is subsidy, second one is cash incentive, third one is duty drawback. These are the three ways where government can give grant to any business organizations. So they can ask MCQ from here. So government grants are in three natures. The first one is in subsidy nature, second one is cash incentive, third one is duty drawback. Subsidy means company is not giving directly cash to you or asset to you. If you are purchasing some solar plant or solar panel for your entire house, government will give some 50% subsidy. That means if the asset cost is 10 lakhs, you have to pay only 5 lakhs. Remaining 5 lakhs will be paid by the government. Second one is a cash incentive. Cash incentive means government is directly giving cash to you. Third one is a duty drawback, means duty means tax. Drawback means they will reduce it. So they will reduce the taxes. If government is giving subsidy or cash incentive or duty drawback, if you observe all these three, in subsidy means government is paying some amount. Cash incentive means directly government is giving cash to you. Duty drawback means government is reducing tax. In all these three cases, one thing is common. What is that common point? So government is giving assistance or support to the business organizations. Whenever government is giving support to the business organizations, that support or assistance is called grant. Sir, now I understood grant may be in subsidy or cash incentive or duty drawback. First of all, government means which government, sir? AS12 says government means not only central government, state government, government means all governments, not only governments, government agencies or government bodies. All agencies, all that be municipality or whatever it is, whether that could be local or national or international, all whenever you are receiving any benefit from any governmental agency or governmental body or government, whether that could be local government or national or international, also treatment is same. Okay. So what is the meaning of government grants? Government grant means just now I told you, Assistance means support by the government either in cash or kind. Sometimes they may give you cash directly or other than cash by paying cash to the some your supplier, or else they may give you asset, that is called or kind, for past or future complying conditions. See, governments will not give benefit to each and every company. If government is giving grant to business organization, of course government has so many obligations. They have to pay salary to their employees, they have to pay pension to old age people, they have to do some all what you called schemes, such kind of welfare schemes, they have to do a development of the state. Still they are giving grants, means definitely they'll give you grant for something you have done in past, nothing but past conditions, or they will give you grant for doing something something in future. Okay, that means that is called past or future complying conditions. Government is not doing any benefit or grant just like foolishly. They will not do like that. They definitely they'll give you grants only if you have done something in past, or they are putting condition that you have to do something in future, then only they'll give you grant. That is called government grant. Sir, why they will give you government grant, sir? Why they'll give you? Just now I told you, whenever you have started branch in their state, what is going to happen? For they'll generate employment automatically. You develop state or country. Okay, so this is all about the fundamental of the standard government grant. But still, this is not main agenda of IS-12. IS-12 agenda is accounting for government grants. So every time, I mean, in recent item they have not tested. If I am not wrong, I'll check it out in recent paper. In recent paper, what are the questions? Okay, partnership. Yeah, AS12, AS1, and no. No. Yeah, in recent item they have not asked, but they are asking question from AS12. So generally students feel difficulty for AS12, but no need to feel difficulty. So I am going to make it as simple as that. Before going to accounting for government grant, you have to be perfect with this basics. What are the basics? AS12 is accounting for government grants. If any government is giving grant, it may be in three types. What are those three types? Subsidy, cash incentive, duty drawback. Subsidy means government is paying some amount because of your benefit. Cash incentive means directly government is giving cash to you. Duty drawback means government is reducing your tax. Okay. Next one. Government means all governmental bodies. Government grant means assistance by the government either in cash or kind for past or future conditions. Why, sir? For generating employment and development of state or country. Okay. Next, I will start accounting for government grants. Accounting for government grants, students will feel very difficulty, but believe me, after listening this class, you will be comfortable with this standard. So for the benefit of the student, I have divided entire government grants chapter into 5 cases. If you understood these 5 cases, you can answer any question just like that. That means whenever you have faced the question from AS11, that question could be one out of these 5 cases. Okay. So depend upon case, our answer will be different. We'll discuss case one by one. Okay. Are you ready for it? Yes. That means if you understood these 5 cases, so our AS12 is completed. Okay. So case 1 is promoter contribution. What is promoter contribution? Please be wait for some time. Case 2, income in nature. Case 3, non-monetary in nature. Case 4, fixed assets. Case 5, revenue in nature. So if they are asking any question from AS12, so those are one out of these 5 cases. What is the first one? Grants are in the nature of promoter contribution. Case 2, grants are income in nature. Case 3, grants are non-monetary in nature. Case 4, grants related to fixed assets. Case 5, grants related to revenue in nature. You have to identify which case it is. Yeah, come to case number 1. What is it? Promoter contribution. Sir, while observing one grant, how can I say that is promoter contribution, sir? Simple. First of all, what is the meaning of promoter? Promoter means who is promoter generally in your company law? Promoter means who has started that company, right? So similarly, promoter contribution means if government is giving grant to your business organization for doing something new or for set up some new plant or new factory in some backward area, that is called promoter contribution. That means here government is also like acting as an investor, so nothing but promoter. For example, if you take our BCCA as an example, so we BCCA are running our services at Hyderabad and Newsveda. See, for example, if AP government is giving some grant, some 25 lakhs grant is giving to BCCA to start a new institute or new branch in some backward area. For example, they want us to start a new branch in Araku, which is a tribal area. So that means we are investing some amount from our side. At the same time, government is giving some amount. So that means here we both are like investors. So that is called promoter contribution. Here both are acting as a promoters. So whenever if government is giving grant to any business organization for doing something new, for example, government is giving some grant, some amount to you for setting up a new plant or new factory in some area, that is promoter contribution. So whenever the grant is in the nature of promoter contribution, what is the treatment according to AS12? It should be credited to capital reserve. So generally if you follow schedule 3, capital reserve comes under where? Shareholder funds only. So this is the treatment as per AS12. So this is just a theoretical point. What is that? If the grant is in the nature of promoter contribution, we have to credit that grant to capital reserve in shareholder fund. Sir, how can I say that is promoter contribution, sir? Promoter contribution means government is giving grant to do something new. Next one, case 2. Case 2 is if grants are income in nature. Simply, if you understand the previous one, if the government is giving grant to you for doing something new, that is promoter contribution. Income in nature means already you are running your business. Government is not giving grant for doing something new. They are giving grant for the existing business only. No need to set up a new plant or new machinery or anything else. So government is just giving grant for our existing business only. That is not a promoter contribution, not a case 1. So in that case, for example, again government may impose some conditions on you. For example, AP government is giving some 10 lakhs rupees grant to BCCA and they are clearly telling us for coming next 5 years or next 10 years, you have to give free services to at least 5 students every year. That is the condition. That means we as a BCCA, we are receiving 10 lakhs grant. This grant is not for single year. This is grant for 5 years. So whenever you are receiving 10 lakhs, don't feel that 10 lakhs income in 1 year. So that's why we have to treat it as a deferred income. Deferred income is that is not related to only one particular year, related to future years. So that's why recognize 10 lakh as a deferred income. So because condition is 5 years, you have to transfer to P&L account on a systematic basis. Systematic basis means from here transfer every year 2 lakhs, 2 lakhs, 2 lakhs, 2 lakhs. So that is called deferred income and recognized in P&L on a systematic basis. We have to transfer on a systematic basis. Okay. For example, we are receiving grant of 20 lakhs. Condition is for 5 years. Every year we have to transfer 4 lakh, 4 lakh, 4 lakh. That means instead of writing income in 1 year, you have to transfer to multiple years, depend upon the conditions imposed by the government. Okay. So with this, two cases are completed. What is case 1? Promoter contribution. What to do? We should simply credit it to capital reserve. Sir, when can it could be promoter contribution? Very simple. If government is giving grant to you for doing something new, that is a promoter contribution. Otherwise that is income in nature. If that is income in nature, you should not record entire income in current year. You have to treat it as a deferred income from where transfer to P&L on a systematic basis. Okay. Next one, case 3. Case 3 means non-monetary in nature. In case 1 and case 2, what happened? Government is giving directly cash to you, either for establishing a new factory or else for running your existing business. In case 3, government is not giving cash to you. Government is giving an asset to you. An asset. For example, AP government is offering land for a TCS company for establishing their branch in Vizag. Or else similarly, Telangana and Tamil Nadu governments or Karnataka governments or all governments are inviting all MNCs for setting a new factory or new branches. If they established, all our governments are ready to give the lands. Sometimes some governments are ready to give the lands at a free of cost. Some governments are ready to give at a discount. For example, if for one of the factory in our AP, so they have given land at free of cost. Sometimes we will give at a discount. For example, if the land value per acre in that place is 1 crore, government will give at only 20 to 30 lakhs. That means they are giving at a discount. Don't think in government point of view, think in a business entity point of view. For example, for BCCA, we are receiving land from the government at free of cost. Free of cost means we are not paying anything, we are getting just at free of cost. Whenever we are receiving land from the government at free of cost, we have to write entry land account debit to cash or bank account. But you are not paying anything, no? AS 12 says record some nominal figure. Nominal figure means write some 1 rupee or 10 rupee like that. Okay, that is called nominal value. Should record entry. No sir, we are taking a discount. So actually per acre value 1 crore in that particular area, but government is giving me for only 20 to 30 lakhs. In that case, again I have to write entry land account debit to cash. Here I have to write only 20 lakhs, even though land value is 1 crore. You have to write acquisition cost. Acquisition cost means how much you are paying for it. Okay. So this is case 3. I repeat, case 3. If government is giving non-monetary thing to you, if government is giving asset to you, so again they can issue it free of cost or you can get it at discount. If you are getting it free of cost, record at nominal value. Nominal value means just like some 10 or 20 rupees. So if you are taking a discount, record the acquisition cost. Acquisition cost means how much you are paying. For example, land value is 1 crore. You are paying only 20 lakhs. The 20 lakhs is called acquisition value. So here you have to write land account debit to cash 1 rupee. Here we have to write land account debit to cash 20 lakhs because you are paying 20 lakhs. So with this, what happened? Case 1, 2, 3 are completed. So case 1 and 2 are monetary grants. Case 3 is non-monetary grant. Coming to case 4. Case 4 is related to fixed assets. So that means government is giving grant for related to one particular fixed asset. The best example is solar panel. So nowadays central government is giving subsidy on solar panel. If you install panel on your house, so you will get some subsidy from the government. For example, solar panel value, for example, 10 lakh rupees. 10 lakh rupees. But if you purchase this solar panel, government will give you 4 lakh rupees subsidy. That means how much you have to pay? 6 lakh rupees from your pocket. But what is the cost of solar panel? 10 lakh rupees. That means here government is giving 4 lakhs rupees grant not for enjoying. They are giving grant related to one fixed asset. What is that fixed asset? Solar roof, solar system. So whenever you are receiving grant from government, if it is related to fixed asset, sir, what to do, sir? Here we are receiving 4 lakh rupees grant from government. So IS-12 is giving option to business organization. So first IS-12 says, IS-12 asking straight question to you, how much you are paying? I am paying 6 lakhs only. Then writes with 6 lakh. Asset account debit to cash 6 lakh, 6 lakh. That means that much you are paying from your pocket. That means you have to reduce this grant from gross cost, recorded net value. This is called treating grant as a capital receipt. Capital receipt means I am reducing from the cost of asset. Method 2. Method 2 says recorded gross value. Gross value means recorded 10 lakh rupees only. But this 4 lakh treated as a deferred income. Again apply case 2. Case 2 means we have to treat it as a deferred income and transfer to P&L on a systematic basis here over the useful life of asset. Okay, here no condition by the government, no, so that's why. Clear everybody? I'll repeat. If you are receiving grant related to fixed assets, so you have two options. You can directly deduct from gross value, write net figure, or else what you can do, you can write gross value only, but about this grant apply case 2. Case 2 means what? Treat it as a deferred income and transfer to P&L on a systematic basis. Clear? Next one, last case, case 5. Grants are revenue in nature. Revenue in nature means here government is giving grant for normal routine expenses, revenue expenses. For example, I think I have given one example. First read the example, then you will get clarity. XYZ Limited received 1 lakh rupees grant from central government for paying salaries for the year 25-26. Salaries for that year is 25 lakh. For example, we are running an NGO, nothing but NPO. We are doing charity. That's why central government recognized us and they are giving some 10 lakhs rupees grant. They are saying that use this 10 lakhs for salaries for your staff. Our salary is 25 lakh. Again, you have two options. What are those two options? You can look at the screen. So your salary is 25 lakh, government grant is 10 lakh. You are paying 15 lakhs from your pocket. So you have two options. First one, how much you are paying from your pocket? 15 lakhs. Then you can write entry salary account debit to bank account 15 lakh, 15 lakh. Write how much you are paying. Otherwise, write this amount only, salary to bank 25 lakh, 25 lakh, and write this as a income. So in case 4, we treat it as a deferred income. Here we treat it as a entire in current year income to P&L account. So you actually should get a doubt. Sir, in case 4, same thing happened, but there is fixed assets, here revenue expenditure. There I told you, so treat it as a deferred income. Here I am telling you to treat entire as income in current year. Why, sir? In case 4, that is capital expenditure fixed asset. The useful life will be more than 1 year. That's why I told you to treat it as a deferred income. But here salary is a revenue expenditure only 1 year only. That's why you have to credit it to P&L account. Okay. So this is all about case 1, 2, 3, 4, 5. Okay. They are asking question from this area frequently. So very easy. In accounting for government grants, there are 5 cases. Case 1 is promoter contribution. Case 2, income in nature. Case 3, non-monetary grants. Case 4, fixed assets. Case 5, revenue in nature. So, case 1, promoter contribution. When to say that is a promoter contribution? If government is giving grant for setting something new, that is a promoter contribution. Sir, then what is the treatment in promoter contribution, sir? We should credit it to capital reserve. In case 2, that means income in nature, that is not a promoter contribution in nature. In that case, what to do? We have to just treat it as deferred income and transfer to P&L on a systematic basis. Case 3, non-monetary nature. Non-monetary means government is giving grant in the form of asset. So again, they may give at free of cost or else at a discount. If you are taking it free of cost, record at nominal value. If you are taking it at discount, record at acquisition cost. Acquisition cost means how much you have paid. Case 4. Case 4 is already done, no? Case 4 is fixed asset. Fixed asset, what to do? Again, you have two methods. Method 1, you can deduct from the gross value. Method 2, record that gross value and treat it as a deferred income. Case 5, revenue in nature. Again, two options. You can deduct from expense or you can credit it to P&L account. And the last concept, refund of government grant. Whenever you fail to comply with the conditions imposed by the government, you should refund that money to the government back. The treatment is exactly reverse. So we have one problem, they will discuss the treatment. And as usual, differences between Ind AS 20 and AS 12. Ind AS 20, disclosure is required in financial statements. AS 12, disclosure is not required. Government grants in the nature of capital contribution are not recognized. Here, treated as a capital contribution. And point number 3, non-monetary grants fair value. Here, I told you either acquisition cost or else nominal value. Prohibition to transfer to capital reserve. Here we should transfer to capital reserve. And no option to deduct. Here we can deduct from the book value. And look, all these things already I told you, all differences are important. Okay, this is all about our AS 12 theory content. Just have a look the entire theory content, then we'll jump into the problematic part. So I think you all are good at all 5 cases. Have a verify all those 5 cases once, everybody. So look at problem number 11, AS 12. D Limited received 80 lakhs from central government as a subsidy for setting up a factory in a backward area. So already I told you, whenever you faced a question from AS 12, you have to first check which case it is. So in the present question, we have received a grant from central government. Why? To set up a factory in a backward area. So that means government is giving grant to you for doing something new, for setting a new factory. So whenever you are taking grant for doing something new, that is called what? That is called promoter contribution. What I told you, whenever you received promoter contribution, we have to credited that amount to capital reserve, which will reflect in a balance sheet under head of shareholder funds. Whenever you received promoter contribution, nothing but what is this? This is case 1. Simple. How to write in your exam as per AS 12? If government grants for the nature of promoter contribution, we should credit that grant to the capital reserve under shareholder funds in balance sheet. That's it. Question number 11 is done. Check question and answer once, everybody. Please do check. Come to question number 14. This is a previous examination question. Explain the treatment of the following. Number 1. A firm acquired fixed asset for 550 lakhs on which government grant received 40%. Tell me which case it is first of all. Is it promoter contribution or non-monetary or else income in nature or else fixed assets or else revenue in nature? That is fixed assets. What I told you, we have two options. We can directly reduce it from the gross figure or else we can write gross value and credit it to deferred income and transfer to payment on a systematic basis. So that's it, case 4. Second question, capital subsidy received from a central government for setting up a new one. Setting up means that is a promoter contribution. What we have to do? Transfer to capital reserve. Simple. Number 3, 125 lakh received from the local authority for providing medical facilities to employees. That is last case, case 5, revenue in nature. That's it, done. So everybody look at question number 13 and you answer question number 13. Z Limited has set up its business. Has set up means already that is a running business in designated backward area which entitles it to receive as per public scheme announced by the government of India subsidy of 25% of cost of investments. Here many students may commit mistakes. Here what happened, already business has started. Now they are giving benefit to you. So that is not a promoter contribution. When it is a promoter contribution, if government is giving hand or giving support for doing something new, that is promoter contribution. Here what happened, already we are running business, now government is giving grant. That is income in nature, case 2. What we have to do in case 2, treat it as a deferred income. Have a look, deferred income, and transfer to P&L account on a systematic basis. That's it. Next one, also something is happened, the company invest 100 lakhs, 25 lakhs. Yeah, that's it. Question number 12 is a refund of government grant. Refund. This is a little bit difficult for sure. Big Box Limited, a startup, purchased on April 1, 2020 a machine worth of 44,85,000 rupees, in relation to which it received 7,35,000 as a grant from Government of India. So if you observe clearly, it is showing it is a case number 4. That means grant is related to fixed asset. That means government is giving grant related to fixed assets. What is the treatment? If you remember, what is the treatment? You can deduct from the asset directly or you can read as a deferred income. Have a look. The company decided to treat it as a capital receipt. Capital receipt means what? They are reducing from gross value of asset. That means method 1. It is estimated that realizable value of the machine at the end of useful life of 4 years will be 15,36,000. They are giving scrap value. During the financial year 22-23, the grant became refundable. Why? Because they failed to comply with the conditions. You are required to calculate depreciation for next 2 years. See, what happened in this question? So they received a grant from the government related to fixed asset. So whenever we receive a grant from the fixed asset, we need to apply case 4. What is case 4? Grant related to fixed asset. What we have to do if you receive grant for fixed asset? We have two methods. Method 1, deduct from gross value. Method 2, Write at gross value, treat grant as a deferred income. Here they followed method 1, that is capital receipt. I have given notes also. And after some years, in 22-23, it became refundable. What to do? Very simple. You tell me, what is the cost of asset? Cost of asset. How much? It is 44,85,000. They received a grant from the government, no? So they reduced it from the cost. Government grant. How much government grant, by the way? So how much grant we received? Question number 12, right? 7,35,000. So be ready with your calculators. So reduce this grant from the cost of your asset. So the amount would be 44,85,000 minus 7,35,000. So the net cost of asset is 37,50,000. Okay, next one. So when we purchased this asset, first of all, we purchased this asset on 1st April 2020. Okay, that means at year beginning only, 1/4/2020. They have given us scrap value. What is the scrap value of asset? Scrap value is nothing but 15,36,000. Life is 4 years. 15,36,000 and life is 4 years. Okay, next one. So at first year ending means 31st March 21. What is depreciation? Depreciation is nothing but net cost. You know the formula, right? Cost minus scrap value by life of asset. What is the cost of asset? Net cost, that is 7,50,000 minus scrap value 15,36,000 by life 4 years. Do it. 37,50,000 minus 15,36,000 by 4. Yeah, I got 5,53,500. That is year 1 depreciation. Similarly, what happened? Next year also completed, nothing but 31st March 22. SLM, no, same depreciation, 5,50,500. So we purchased asset on 1/4/2020. What is the book value of asset as on the day? 37,50,000. And from 37,50,000, first year depreciation 5,53,500. Second year depreciation 5,53,500. So our carrying amount is 26,43,000. Now what happened? In current year, the grant became refundable because of failure of conditions. What to do? At the time of receipt of grant, we deducted from the cost of asset, no? Now we have to add back. So plus government grant, how much, by the way? 7,35,000. We have to add back. So your new cost would be 33,78,000. And depreciation, revised depreciation for year 3, 33,78,000 minus our scrap value is 15,36,000. Out of life 4 years, 2 years is already done. 33,78,000 minus Yeah, 9,21,000 is depreciation for year 3 and year 4. Yeah, in regular class I have taken 1 hour for this problem, so I hope you understood this problem. The treatment is we have to reduce at the time of purchase of asset, and at the end we have to add back it. And while finding the depreciation for the last year, we have to again reduce the scrap value, and you all know how to calculate depreciation under SLM method in the formula. So this is all about AS 12. Remember, my dear students, if question comes from AS 12, first and foremost thing you have to identify which case it is. Depend upon case, answer will be very easy. What is case 1? Case 1 is promoter contribution, treatment is capital reserve. Second one, case 2. What is case 2? Income in nature, treatment is deferred income and transfer to P&L account on a systematic basis. And case 3 is non-monetary grants. Non-monetary grant means what? Non-monetary grant means company is receiving a non-cash from the government similar to asset. Again, it's depend upon two cases, whether you are getting it free of cost or else discount. If you get a free of cost, you have to record it nominal value, otherwise acquisition cost. And coming to case 4, case 4 is related to fixed assets. Again same, we can write it at net figure or else gross figure. And case 5, very easy, revenue in nature. Simply we should transfer to P&L account or deduct from the gross value. This is all about AS 12. So with this we have covered AS 1 is done, and AS 10, 11, 12 are done from our end. So we need to start the remaining two standards, AS 16 and 22. So major standards are completed. We have only two standards. It will take another 2 hours maximum. With the 2 hours, we can conclude these two standards, 16 and 22. So next standard, AS 16, borrowing cost. So before entering into the standard AS 16, yeah, I will ask you one straight question. Give me answer. For example, if we purchase an asset in Chennai, price is some 1 lakh rupees. So our place of business is Hyderabad. So definitely we have to transport that asset from Chennai to Hyderabad. Transportation cost is 50,000. Now after what you call transportation, it reached to Hyderabad from Chennai. To installation that asset, we spent again 30,000 rupees, and all some kind of taxes or there I have paid 20,000 rupees. I think you all know AS 10. We have discussed the PPE, property, plant and equipment. Tell me what is the total cost of asset as per AS 10 PPE. Already we discussed in detail. As per AS 10 PPE, cost of asset includes purchase price and directly attributable cost. All these costs are directly attributable cost. This tax is a non-refundable tax. We should add all these costs. 1 lakh plus 50 plus 30 plus 22 lakh rupees is the total cost of asset according to AS 10. Already we know that. Why you are adding all these costs? All these costs are directly attributable costs. These costs are compulsory to put that asset into usable conditions. So according to AS10, we have to add all directly attributable costs to the purchase price. So our cost of asset is 2 lakh rupees. Simple, clear. Wow. One more example. We are constructing a house. So for house construction, we have purchased some bricks, value of 20,000 rupees. We purchased sand, value of 15,000 rupees. We purchased cement, value of 20,000 rupees. And for labor, We have paid 50,000 rupees. As of now, what is the cost of building? Definitely 20,000 plus 15,000 plus 20,000 plus 50,000. Nothing but 1,05,000 rupees is the total cost of asset. That means all these costs are compulsory to construct the building. We are adding all these costs to our asset. Again, great. Yeah. Now I am telling one more new point to you guys. For example, for construction of this house, we have taken loan from SBI. Loan amount is 50 lakhs. Interest rate is 10%. That means at the end of year, you have to pay 5 lakh rupees interest to SBI. Here my point is, for example, 1 year completed. Total cost of asset right now is 1,05,000. Now my question is, what about this 5 lakh? This is also my expenditure I am paying to the bank. My question is, can I add this 5 lakh to cost of asset? Or else I should not add to capital of asset. Cost of asset. That is my question. My point is, sand is compulsory for construction of asset. That is the reason you are adding to it. Cement is compulsory, you are adding it. Labor is compulsory, you are adding it. So my question is, similarly, you are paying 5 lakh rupees interest because of house construction only, no? So that is the reason I am telling you to add this cost to the asset. If you add this cost to the asset, what is happening? Your asset cost will increase every year because you have to pay interest every year. So if you are adding every year interest to the asset, your cost of asset will get increased. Normally, building is a depreciable asset, but you are oppositely, you are adding your asset value every year. You are increasing your asset value. That is not correct. So that's why if your answer is add to your asset, that is not at all correct. Your answer is wrong. No sir, we should not add this cost to asset. Why? Because asset is depreciable asset, sir. That is my answer, sir. Again, you are also wrong. Sir, why wrong, sir? Again, you tell me, I am paying this 5 lakh rupees interest because of house only, no? If there is no house, if I could not have taken loan, no need of interest. I am paying interest only for house only. That's why I should add to asset. That means, if your answer is no, I have my answer to defend you. If your answer is yes, again I have answer to oppose you. That means some people may argue with me that yes, we should add to asset cost. Some people may say we should not add to asset cost. In fact, both are somewhat correct. So here is the situation where some third party entered into the picture. The third party should give clarity about it. The third party is nothing but our present AS 16. Now AS 16 is coming to the picture just to give clarity about this 5 lakh rupees. That's it, nothing more than that. That means this 5 lakh rupees is called what? Interest. So this AS 16 agenda is whether shall I add this 5 lakh rupees to asset or normally I should transfer to P&L account. That is the main agenda of AS 16. Adding this interest to asset is called capitalization. Capitalization is nothing but what? Adding interest to the asset. We are adding to asset is called capitalization. So AS 16 is giving clarity whether shall we capitalize it or charge it to P&L account. That is our main duty of AS 16. Okay. So AS 16 not only covers this interest, it covers few more small amounts. Totally they are calling it as a borrowing cost. Nothing but interest only. Apart from this, it will cover few more. I will discuss. Come to the standard directly. Yeah, have a look. Borrowing cost includes interest, finance charges, exchange differences we covered in AS 11, and amortization of discounts or premium. All these three are almost negligible amounts in our AS 16. AS 16 main focus is on interest. Especially for our inter syllabus, you cannot find out all this in our borrowing cost. Okay, you may find out this in your branch accounts again, not here. So as of now, I'll say we are going to discuss about borrowing cost only. Whether shall I add this interest to asset or not? Whether shall I capitalize this interest or not? That's it. So they may ask this as an MCQ. That's why I have written here. Borrowing cost includes option A, B, C, D, all of these. What are those four things? Interest, amortization of discounts or premium, finance charges, and exchange differences. They can test an MCQ. Sir, everything is fine, sir. We have started with a discussion that whether shall we capitalize the interest or charge it to P&L. That is our main agenda. What AS 16 is telling, sir? Whether shall I add or not? So AS 16 is saying very clearly you should add to your asset. Nothing but should capitalize your interest, your borrowing cost to your asset, subject to condition. If that asset is a qualifying asset, you can capitalize it. If that asset is a non-qualifying asset, you should not capitalize it. Then what to do? Transfer to P&L account. This is the summary of AS 16. If the borrowing cost is on qualifying asset, we should capitalize it. If that is not a qualifying asset, we should charge it to P&L account. Okay. Sir, everything is fine, sir. What is the meaning of qualifying asset, sir? Qualifying asset definition means asset which should take a substantial period of time to get ready to use or sell. Sir, I am unable to understand. Don't worry. Qualifying asset means asset which is not ready either to use or sell. If asset is ready, that is not a qualifying asset. That means if your house is in construction process, you can add your interest to your asset. If your construction is completed, if that is ready to use or sell, you should not capitalize it. That means if that asset is ready to use or ready to sell, that is not a qualifying asset. If that asset should take some time to use or sell, then that is qualifying asset. Qualifying asset means we should take substantial period of time, nothing but we should take some time to get ready to use or sell. I can simply say if that asset is ready to use or sell, that is not a qualifying asset. If that is not ready to use or sell, that is a qualifying asset. So what AS 16 says, if that is a qualifying asset, we should capitalize it. If that is not a qualifying asset, we should charge it to P&L account. Clear everybody? Yeah. Sir, okay sir, now I got full clarity on this standard. This standard main agenda is, so if we have taken any loan for construction of one asset, we have to pay interest on that asset. That interest is called borrowing cost. Here question is, what about treatment of this borrowing cost? Can I add to the asset or charge it to P&L account? AS 16 says, you can add, you can capitalize only if that is a qualifying asset. If that is a non-qualifying asset, what we should do? We should charge it to profit and loss account. That's it. Sir, okay sir, that asset is qualifying asset only. Now I can capitalize it. Sir, when to start capitalization? Is it on from date of loan or on balance sheet date or when house construction started? When, sir? Again giving clarity by AS 16. So should capitalize only when these three conditions are satisfied. Again they can ask MCQ from this area. You can start capitalization only if these three conditions are satisfied. Condition number 1, expenditure for asset being incurred. That means you have to purchase some bricks, sand or cement. You have taken loan from SBI, you have not purchased any items, any material, then you should not add. That means you should spend some amount on that house. Number 2, borrowing cost being incurred. Nothing but 1 year should be completed, banker should charge interest. Banker should ask interest to you. You have taken loan on today, tomorrow you should not add directly to your asset. You should add to asset only once 1 year is completed or banker is asking interest to you. Number 3, activities for asset are in progress. For example, you have taken loan from SBI, you purchased material, everything, but you are not starting your work. Again, you should not add to your asset. That activity should be in progress, should be in construction mode, work in progress. Then only you can start your capitalization. That is called commencement of capitalization. Commencement means what? When to start your capitalization. When to start? If following three conditions are satisfied, we can capitalize our borrowing cost. What are those three conditions? First one, expenditure for asset being incurred. Second one, borrowing cost being incurred. Third one, activities for asset are in progress. Okay. Next one, suspension of capitalization. Suspension means pausing temporarily. Temporarily they are pausing it. Sir, when to suspend, sir? For example, suspend means not closing. It is a temporary pause. Sir, when to suspend, sir? For example, so I don't have money. That's why I've stopped my work temporarily. So that means your activities, your construction of house is stopped temporarily. That is paused. So that's why you also should not add your interest to your asset. That means if your active development is disrupted or interrupted, so you should not capitalize it. Sir, actually I have stopped my work, it is interrupted, but that is not my fault, sir. Actually that delay is necessary, sir. For example, I am constructing one bridge, sir. Very heavy rainy season, I should stop the work. I cannot work on the rain. That's why I have stopped the work. In that case, no need to suspend. So what you should understand here, if that suspension, if that development interruption is because of your failure, you have to stop capitalization. That means you should not add to your asset. If that delay is necessary, then no need to suspend. You can go with your capitalization. In one question they'll ask you, we are constructing one railway bridge over some Ganga river, not Ganga river. So because of some rainy season, we have stopped the work. Accountant says we should suspend the back capitalization. So what is the correct answer? No need to suspend. Why we should suspend? If that is our failure, if it is stopped because of financial difficulties, then we should suspend. That is compulsory. I cannot work in rainy season. So that's why we have to suspend only if that is failure of the business organization. If that is necessary, then we cannot do. So no need to suspend. Okay. The last one, cease. Cease means you have to stop capitalization. Sir, when to stop, sir? Sir, my house is ready. Everything is ready, sir. So we are planning some housewarming ceremony, all those we are planning some puja, all those things. We are constructing a big event. So whenever that is ready to use or sale, what we have to do? We have to stop capitalization. No need to do, because whenever your asset is ready, that is not a qualifying asset. The main asset of 16 is should capitalize only if that is a qualifying asset. If that is not a qualifying asset, how can you capitalize your borrowing cost? So that's it. This is the simple standard of AS 16. Are you understood? Here you have to make understand when to start, when to suspend, when to cease. Before that, there are small MCQ areas. Borrowing cost includes 4 things: interest, amortization of discount or premium, finance charges, exchange differences. And second one, AS 16 says borrowing cost should be capitalized only if it is a qualifying asset. If it is a non-qualifying asset, we should charge to P&L account. Sir, when to start capitalization, sir? We can capitalize our borrowing cost only if 3 conditions are satisfied. Number 1, expenditure for asset being incurred. Number 2, borrowing cost being incurred. Number 3, activities are in progress. For example, they can frame a question by using this concept. If I am a setter, I will frame a question like loan taken on 1/4/25, expenditure incurred on 1/5/25, and interest charged date 1/6/25, activities started on 1/7/25. Question is, when to commence capitalization as per AS16? Option A, B, C, D. Which is correct? Tell me. Which is correct? Option D is correct, because on that date only all previous conditions are satisfied. They can frame a question like this. They'll ask this kind of questions in CA level, but still. Second one, suspension of capitalization. Suspension means what? Temporary pause. When to suspend? If your active development is interrupted, we have to suspend. If that is necessary, no need to suspend. And next one, cease. When to cease? If your asset is ready to use or sell, you should stop it. And similarly, if you remember, all our previous standard we had covered at the end of our standard differences between AS and Ind AS. Here also for AS 16 one Ind AS is there, that is Ind AS 23. Again I have given some 6 differences here, so you have to just go with the differences. Number 1, as per Ind AS 23, qualifying asset number includes biological assets. You know meaning of biological assets, we have covered in AS 10. But AS 16 covers biological assets also. And number 2, no definition for substantial period of time. Here they have given it, best example 9 to 12 months. Number 3, inventories produced in a large quantities are not qualifying assets. Here they are qualifying assets subject to condition. They have asked one time an MCQ from point number 3. Point number 4, disclosure is required for both capitalized and non-capitalized. Here only capitalized. Number 5, inflationary condition is addressed. Here not addressed. Number 5, weighted average rate. Here no guidance. So you have, as usual, I am not focusing too much on differences. You have to go with the notes I have given in summary format for the benefit of the students. So this is all about our standard AS 16 borrowing cost. So please pause the video and go with the entire context. Then I will discuss problematic part once you have done with your preparation. Okay? Yeah. T&L Limited is a large construction company which is presently involved in the construction of a railway bridge over Ganga River at Patna. So this company is constructing one railway bridge over river Ganga. The project cost is 125 crores. Wow. 40% of which is financed by borrowing from Asian Development Bank. So out of 125 crores, 40% means how much? 125 into 40%. They have taken a loan of 50 crores from Asian Development Bank. Interest rate is 3% per annum. There has been delay in completion of the project. So delay is there. So, and project manager of the company of the railway bridge has identified that the delay has happened due to high water level during the monsoon season, July to September. That is rainy season from July to September. That's why work has been stopped. See, that means go to your concept. There is delay in work. If the delay is because of management failure or else the management has no funds, in that case we should not capitalize, we should suspend it. But here what happened? There is no failure of the management. They have to stop in that season. If they work for the season, bridge will collapse entirely. That's why the delay is necessary for the construction of that bridge. So what we have to do? We have to continue our capitalization. No need to suspend. That's what you have to tell. Similarly, the Sonali Mathur, accountant of T&L, has not suspended. She is correct. Why? Because No need to suspend as per AS 16. So treatment is correct only. Okay. So in examination they may reverse the question. Accountant don't want to suspend it. What is your treatment? We have to tell them yes, we have to suspend it. Okay, depend upon the question. And I am expecting question like question number 16, or else it will be more in detail. Yeah, question number 16, everybody. I am expecting that kind of question for your exam. Please read the question, everybody. Read it and then come back, we'll discuss. What is your expectation on coming June exams paper? So actually, I am very much excited for June papers. I hope every one of you who are watching this video, you are going to rock in financial accounting paper. Of course, our favorite subject, CA and audit. Okay, can we go with question number 14? Sorry, 16. I'm sorry. On 14 August 2022, Pushkar Limited has obtained a loan from RAR Bank of 65 lakh rupees to be utilized as under. So here what happened? We have taken loan from some bank. Loan amount is 65 lakh. So here we have taken loan, but we are using this loan for multiple purposes. For equipment purchase, for construction of factory, for advance for vehicle, and for working capital. They are using for this 65 lakh for multiple purposes. Switch on your calci, add these four figures, you should get 65 lakh. Nothing but purchase of equipment 19 lakh 50,000 plus factory shed 26 lakh plus advance 6 lakh 50,000 plus working capital 13 lakhs. Total how much? 65 lakh. Okay. Ignore about all the content, don't focus on this content. Look at the figures. The total interest charged by the bank was 11.70 lakhs. Discuss how interest would be treated in financial statements as per AS 16. First of all, I will write in detail, come to the answer. Question number 16. What is the loan amount? Loan amount is 65 lakhs. Out of 65 lakhs, they have used it for four purposes, no? Tell me purposes. Purpose number one is, what is the purpose number one? Purchase of equipment. How much equipment? 19 lakh 50,000. And second one, what? Construction of factory shed. Construction of factory shed 26 lakhs. Actually, there is some construction work beside to my building. You can hear the sounds. Construction of factory shed. How much? 26 lakhs. And next one, number 3, advance for purchase of delivery vehicle. Advance for a vehicle. By the way, vehicle means, one point I got into my mind as on today, that means I'm recording this AS 16 on 27th of April. So all petrol bunks in Newsvideo are closed, they are showing out of stock. So actually this is completely, this lack of stock is because of man-made. So people are worrying about news in social media, so everybody is purchasing petrol rather than their requirement. Instead of 1 liter they are purchasing some 10 liters. That's why we are lacking stock. I hope within 3 to 4 days it will be short out. So vehicle advance is 6,50,000, and then working capital. Working capital means what? Their day-to-day maintenance. How much for working cap? Working cap is 13 lakhs. So everybody switch on your calci and add all these things, you will get 65 lakhs again. Okay. Now they are saying interest, total interest is equals to 11,70,000. Now they are asking, out of this 11,70,000, how much we should capitalize, how much we should charge it to P&L account. What AS 16 is telling us, if that is on qualifying asset, we should capitalize, otherwise P&L. Out of these 4 assets, tell me what are qualifying, what are non-qualifying asset. Equipment purchased, qualifying or non-qualifying? That is non-qualifying asset. Why? Because that is ready to use or sell. Construction means not ready, no, qualifying asset. Vehicle advance, ready, qualifying asset. Working capital, sorry, not qualifying asset. Working capital, not qualifying asset. Out of these 4, only second one is qualifying asset, remaining 3 are non-qualifying asset. That means this interest belongs to these 4 things of expenditures. So now you have to find out of 11,70,000, how much for equipment, how much for shed, how much for vehicle, how much for working capital. So how to find out? Very easy. For equipment, total interest is 11,70,000. Out of 11,70,000, how much for equipment? What is equipment's cost? 19,50,000. By total amount how much? 65 lakhs. That is equipment portion. Next one, construction of shed. Again same. Out of 11,70,000, how much for shed? 26 lakh. By 65 lakh. Next one. What next? I think I am here only, no? Advance for a vehicle. How much for a vehicle? 11,70,000 into 6 lakh by 65 lakh. Working capital 11,70,000 into 13 lakh by 65 lakh. So do this calculation, and the first one 11,70,000 by 65 lakh into 19,50,000, 3,51,000. Second one 11,70,000 into 26 lakh by 60. What happened? 11,70,000 into 26 by 65, 4,68,000. Third one 11,70,000, 6 by 65, 1 lakh. So forgive me if my calculations are wrong. 11,70,000 into 13 by 65, 2,34,000. Second one we should capitalize. Remaining all 3 we should charge it to P&L account, subject to calculation mistakes. Okay, we should capitalize second amount, remaining all 3 we should charge it to P&L account. Same problem, similar problem I will give you. You give me and comment your answer in your comment section. Similar question. Yes, this is similar question. Everybody do it and give your answer in our comment section. I'll just turn off my camera. Yeah, everybody please do it and give your answer in our comment section. Done, sir. So I'll also do it here. You also try it. Just take a screenshot or else you have material, no? So here loan amount is 200 lakh. Yeah, question number 18, same as our previous question. Tell me given information. I think already you have read the question. So what is given information? On 30th April 2023, Limited obtained a loan from the bank 200 lakhs. Loan amount is 200 lakhs. Hello. Yeah. Loan amount is 200 lakhs. So write loan amount. So you can write exactly in your exam, no problem. You will get full marks. Loan amount equals to 200 lakhs. Next one. How they are spending this amount? Construction of shed 80 lakhs. Purchase of machinery 60 lakhs. Working cap 40. Advance for truck 20. Let me write shed machinery working cap vehicle. Okay. Construction of shed. And then what? Next item. Purchase of machinery. Purchase of machinery. Don't look at any other data. Working cap. And then last one. What is the last one? Advance for vehicle. Out of these four, tell me what are the expenses we have spent on it? 80, 60, 40, 20. 80 lakh, 60 lakh, 40 lakh, 20 lakh. So switch on your calci, total all these things 80 plus 60 plus 40 plus 20, you will get how much? 200 lakhs. That means out of 200 lakhs we have taken as a loan, we have spent this 2 lakhs for different purposes, 4 purposes. What are those 4 purposes? Construction of shed, purchase of machinery, working capital, advance for vehicle. Out of these 4, tell me what are the qualifying, what are the non-qualifying assets? Qualifying assets means which are not ready to use or sale. So construction means that is not a qualifying asset. That is not a qualifying asset. Are you sure? No. Construction means that is a qualifying asset. Remaining 3 are what? Non-qualifying assets. What AS 16 says, if that is a qualifying asset, we should capitalize it, otherwise we should charge it to P&L account. So here, out of 4 expenses, the one and only construction is qualifying asset. Remaining 3 comes under non-qualifying assets. So now, come to the question again. The interest for the year was 36 lakh. That means out of 36 lakh rupees interest, we have to capitalize some amount and we have to transfer to P&L account some amount. Now the point is how much we should transfer to capitalize and how much to P&L account. See, out of these 4, what is the qualifying asset? 80 lakhs. Then how to do it? 36 lakh rupees into 80 lakhs by, what is total loan amount? 200 lakhs. 36 into 80 by 200, nothing but 14 lakh 40,000 is amount we should capitalize it. Remaining amount, obviously remaining means how much? 36 lakh minus 14 lakh 40,000. So this amount we should capitalize how much? 21 lakh 60,000. Or you can do individually, like 36 lakhs into 80 lakh by, there is no 36 lakhs into 60 lakh by 200 lakhs plus 36 lakhs into 40 lakhs by 200 lakhs plus 36 lakhs into 20 by 200 lakhs. We'll get the same answer. So how much? 21 lakh 60,000. This is all about problematic part in our AS 16 borrowing cost. But I'm sorry, I ignored one more question, very important question, question number 17. So this question is little bit different from all other questions. So I am giving you 1 minute of time. Please read the entire question, then I'll explain it. It will be more better than it. Okay, please observe it, everybody. I'm just turn off my camera, then it will be more visible to you. Yeah. Yeah. Actually, there is one line is missing at the end of the question. How much borrowing cost should be capitalized? That is the question. Expenditure incurred till 31st March 23. We have incurred 5 lakh rupees of expenditure, and then interest cost already capitalized 26,000. Already capitalized means what? We have to add to asset. Nothing but now, as on today, what is the total cost of asset? 5 lakh plus 26,000, 5 lakh 26,000. Amount borrowed till 31st March 23 is 2 lakh rupees. That is the loan amount. Next one, assets transferred to construction. That means for construction we have transferred one asset, for which best example is lift. So we are constructing building. For a building we will not construct lift, no, we will purchase the lift. Similarly, the lift cost is 1 lakh rupees. So already what is our asset cost right now? 5 lakh plus 26,000, 5 lakh 26,000 plus 1 lakh. How much it would be? 6 lakh 26,000. Next one, cash payment during 23-24. Cash payment means I have paid some labor charges. So that is also for my asset only, no? Plus 75,000. Plus 75. That means 6 lakh 25,000 plus 75,000. How much? 7 lakh rupees. Next one, very important one, progress payment received. Progress payment received means what? Progress payment received means, see, for example, we are constructing one apartment, so we have completed our cellar and first floor. Now we are giving the cellar as a car parking space as a rental to someone else. We are taking lease rentals from them. No. So whenever you are receiving any progress payment, we have to reduce from the cost of asset. We have to reduce this 3,70,000 from our cost. Why? Because that is a progress payment you are receiving from the asset. That means 7 lakh minus 3,70,000. So how much? Tell me. Before that, yes, 3 lakh 30,000, 5 lakh 26,000 plus 1 lakh 6 lakh 26,000 plus 75,000, 7 lakh 1,000 minus 3 lakh 70,000. 3 lakh 31,000 is our net cost of asset. Okay, this is the cost of asset. What is the loan amount? Already old loan is 2 lakh. Again we borrowed 2 lakh. Fortunately, interest rate is same, 13%, 13%. So total loan amount is 4 lakh. Interest rate 13%. 4 lakh into 13% means, if I am not wrong, 52,000, 42,000, 52,000 rupees is interest. Now the question is, out of 52,000 interest, how much should I capitalize it? Very simple. So the calculation is, out of 52,000, you have to actually the total interest is 52,000. Actually some answer is missing here, so I will write here 52,000 rupees into, what is the total cost of asset? 3,31,000 by, what is the loan amount, actual amount? 2 lakhs plus already interest is there, no, plus 26,000. So do it. 3,31,000 by 2,26,000 into 52,000. So your answer is, yeah, 52,000 is interest. Net cost of asset 3,31,000. What is total loan? 2 lakh rupees old loan plus 2 lakh rupees new loan plus already capitalized portion 26,000. Then do it everybody. 52,000 into 3,31,000 divided by 4,26,000. Your answer is, it would be around 40,403.75. This is amount to be capitalized. Okay, how to calculate it, sir? Interest amount 52,000 into the cost asset by total loan including interest. Total loan how much? Old loan 2 lakh plus new loan 2 lakh plus already interest is there 26,000. Now you will get 4043.75 is the amount to be capitalized. Remaining interest to be transferred to profit and loss account. So this is little bit different point. Answer is missing. Final answer. This is final answer, by the way. Okay. Yeah, this is all about AS 16 borrowing cost. I have covered all the questions. Okay. Yeah. You don't worry, at the end of our all standards, we'll solve all exam paper questions, at least for attempts purpose. Don't miss at the end. Okay. Yeah. Yeah. The last standard, AS 22, accounting for taxes on income. So in AS 12 is dealing with accounting for taxes on income. So this standard is not that much easy when compared to all of your previous standards, but in examination point of view, they'll not ask very difficult questions. So before entering into the in AS 12 and AS 22, everybody please observe a P&L account which is on your screen. So if you observe P&L account on your screen, so credit side we have incomes, debit side we have expenditure. So can you find out net profit for here? So in my example, net profit is 100 here. So you all know in your income tax laws, the tax rate would be flat rates for companies and slab rates for individuals. Example sake, it is 30%, so tax amount is 30 rupees or 30 crores, whatever it is. That means here what is happening? So every one of you or majority of you assume that in the present case, this company has to pay this 30 crores or 90 crores, whatever it is tax you got. We have to pay that much of income tax to the government. Everybody will feel the same. If I ask right question to you, so in the present case, how much income tax should be paid by this company? Every one of you say this is the amount we have to pay. We have to pay to the government of India. But in reality, this is the not the correct amount you have to pay to the government of India. Why? Because you all know we have to pay income tax not to the Companies Act or not to the ROC. We have to pay income tax to the Income Tax Department. So IT Department of India. So for income tax, we have a separate act is there. So and very soon we are going to have new Act 2025. So as of now, we have to follow the previous Income Tax Act which is available to us. So we have to follow income tax laws and we have to follow income tax rules and regulations, and we have to pay income tax as per that law and regulation. So we found out this net profit by applying Companies Act or else by applying accounting standards. But in income tax perspective, this profit is completely irrelevant for them. That means you have to again sit and calculate one more profit and or loss for just the purpose of income tax purpose. That means again you have to find out net profit or loss for income tax purpose. Are you getting my point? Yeah. So that means here this 30 crores is not income tax amount. Yeah, before entering into the chapter, we need to discuss some definitions. The first one is accounting income or loss. Nothing but in the previous example, whatever we got that net profit or net loss, that is called accounting income or loss. Accounting income or loss means net profit or loss as per profit and loss account. Next one, taxable income or loss means you have to find out income or loss as per your Income Tax Act. So nothing but here we need to find out two types of net profit or loss. One is for our accounting purpose, second one is for income tax purpose. So whatever net profit or loss you got in your P&L account, that is called accounting income or loss. And again you are sitting down and again you are calculating net profit or loss for income tax purpose, that is called taxable income or loss. That means you have to pay income tax to the income tax department not on accountable income. You have to pay income tax on taxable income. Here I have given some student notes. Company has to pay income tax to income tax department, not to ROC. That means we have to liable to Income Tax Act, not to Companies Act. That's why companies has to pay tax on taxable income. Then you will get a one doubt. Sir, if we are paying a tax on income tax purpose, then why we are calculating tax on net profit, sir? In our accounting purpose, so many times we found out our net profit into tax rate, then why we found out that tax amount, sir? Simple, that tax amount is a provision for tax, not tax payable. Whatever you have calculated in your CMA Inter or CA Inter, wherever you are finding your net profit into tax rate, that means that is a provision for tax, that is not tax payable. Tax payable means we have to find out by applying taxable income. Now I can say we have to pay income tax, nothing but that is called taxable income into tax rate. That much you have to pay. That is called current tax. Current tax means what? Current tax means taxable income into tax rate. You have to pay tax on current tax. You have to pay tax on taxable income, not accounting income. How much you are paying tax in current year is called current year tax or current tax. So what is the formula? Current tax is equals to taxable income into tax rate. Here the note point is finally accounting income is not equals to taxable income. Both are not same. What are those? Both accounting income and taxable income. Those both are not same. Next one. Sir, why they are not same, sir? Simple. Accounting income follows Companies Act. Taxable income follows Income Tax Act. That means there are differences between accounting income and taxable income. So these differences are again divided into two categories: permanent differences and timing differences. Permanent differences means, for example, if Companies Act say no to one expenditure, Income Tax Act say yes to one expenditure, or vice versa. If Companies Act says yes to one expenditure, Income Tax Act say no to expenditure. The best example in your first P&L account only. Here we have written in our P&L account, here I am directly written to penalty, some amount is there in your example. But if you are writing penalty on debit side, why you are writing penalty on debit side? Penalty is a expenditure or a loss. We are writing on debit side as per our rule number 3. But Income Tax Act says, okay, everything is fine. You are writing slowly your penalty on debit side of P&L account. Because of that, your net profit has been decreased. If net profit decreased, what is impact on tax? Tax will also decrease. First of all, you violated law and you are paying penalty. Because of your violation, again we have to reduce tax. No. That's why, so Income Tax Act completely ignores, completely exempted or excluded penalty. You should not write debit side of P&L as per Income Tax Act. So that's why there are some differences are there. Those are permanent differences and timing differences. Permanent differences means they do not reverse subsequently also. Do not reverse subsequently means if Income Tax Act say no means no. There will be no further reverse treatment or anything. That's it. Next one, timing differences. Timing differences, the best example is depreciation. For example, in Companies Act, we are in books of accounts we are following straight line method 20% depreciation rate, but Income Tax Act says follow 50% depreciation rate. So I'll give you an example, then you will get more clarity. For example, listen. For example, left side is accounting income, right side is taxable income. For the simplicity, I am telling, I am preparing P&L account. Here also P&L account. So accounting records follows 20% SLM. Taxable income follows 50% SLM. For the sake of understanding, gross profit is 100 in both the cases. Cost of asset is also 100. So I will write depreciation 20 here. Here depreciation 50% means 50. For the convenience of student, assume no other expenses, no other incomes, no other loss, no other gain. Then tell me what is net profit in accounting records? 100 minus 20, 80 rupees. In taxable income, 100 minus 50, 50 rupees. Great. So first year is completed, no? Tell me what is tax amount in accounting records? If it is 30%, tax amount equals to 80 into 30%, 24 is the tax amount. Super. Next one. As per accounting records, 824. What about as per income tax records? Tax equals to 50 into 30%, 15 rupees. So that means in tax records, so tax amount is less when compared to accounting records. Okay, super great. Come to next year, second year. Second year also assume same gross profit, depreciation SLM no, so 20 only, net profit 80. So again we need to find out tax for the second year. Tax equals to 80 into 30%, 24. Second year also tax amount is 24 rupees. In income tax records what happened? In income tax records, so gross profit 100 rupees, depreciation 50, so net profit 50. So here also tax amount equals to 50 into 30% equals to 15. Super. So 2 years are completed, no? So come to year 3. In year 3, in accounting records again, gross profit 100, depreciation 20, net profit 80, tax equals to 80 into 30%, 24. But here very important, in taxable records, if you open P&L account, gross profit is 100 but depreciation is 0. Why it is 0? Already it is fully depreciated in year 1 and year 2. It is fully depreciated. So in year 3, what is my net profit? Net profit is 100 rupees. Here tax equals to 100 into 30%, 30 rupees. What happened in from year 3 onwards? From year 3 onwards, there will be no more depreciation under taxable income. Coming to year 4, same thing will repeat here. Tax equals to 24. Here tax equals to 30. In year 5, again tax equals to 24. Here tax equals to 30. 5 years completed, no? Now, so let me find out the total amount of tax paid as per accounting records. In year 1, 24. Switch on your calculator, enter 24. Year 2, 24. Year 3, 24. Year 4, 24. Year 5, 24. 24 into 5. 120 rupees tax paid by the accounting records. Okay. Come to taxable income. Add all this. 15 plus 15, 30 plus 30 plus 30 plus 30. That means 330 is 90 plus 30. Here also 120. So what you have to understood? So if you compare in year 1, so tax as per accounting books is 24, but as per tax books is 15. That means your P&L account says pay 24 crores tax, but income tax act says no worries, only pay 15 CO. Then you may feel that yes, I got profit, I got gain. Why? Because actually I have to pay 24 crores rupees tax, but income tax act says pay only 15 crore. I got 9 crore rupees profit. But you no need to feel as a profit, no need to feel happy. Here you are paying less, but go to year 3. In year 3 what happened? Your books of account says pay 24 crores tax, but you have to pay 30 crores rupees tax. Here you have to pay more tax. So that means what you have to understand, this difference is just a time gap difference. So if you look at overall years, the total tax amount as per books and income tax both are same. So these differences are called timing differences. So whenever timing differences are arises, remember very important point, whenever timing differences arises, there is a chance for DTA or DTL. DTA stands for deferred tax asset, DTL stands for deferred tax liability. whenever temporary differences or timing differences are there, then only DTA and DTL will come into the picture. If that difference is a permanent difference, there will be no more DTA, no more DTL. This DTA and DTL will arise only if the difference is a timing difference. Now the point is, sir, when to call it as a DTA, when to call it as a DTL. I will go with the same example. Come to our example. So in year 1, our books of accounts says pay 20 crores rupees tax. So income tax is collecting only 15 crores from you. That means you may feel happy that you are paying less. But in reality, no need to feel happy. So you are holding extra 9 crore rupees. So feel it as a liability. I have to pay this amount again to income tax in future. That 9 crore is called DTL. DTL is that 9 crore. That means your tax as per income tax is lesser than your accounting books. Then that difference is called DTL. In year 3, so your books of accounts says pay 24, but you are paying 30. You are paying more. That is an asset to us. So that is called DTA. Simply, if you are paying more, that is your asset. If you are paying less, that is your liability. That's it. If you are paying more, asset. If you are paying less, that is liability. Nothing more than that. So in a regular class, I may take a long time to discuss, but here let's directly jump into the problematic part. So if you can understand whatever we discussed in the last 15 minutes, that is enough. Okay, please open your workbook. Workbook means our questions. Age 22 questions. Yes. First, let's start with question number 20, man. Actually, I have given notes for permanent and timing differences. Some examples also given. Where it is? Yeah, I'll show you while solving the question. I come to question number 20. Parshuram Limited, which commenced its operations in 2019 and 20, provides the following details. So they have given 4 years information. You are required to calculate amount of current tax. What is the meaning of current tax? Current tax means in current year how much we have to pay tax. So financial year 1920, profit before tax. Profit before tax means that is nothing but what? Your accounting income. That is 28 lakh, and timing difference is there, and permanent difference is also there. Already I told you. What I told you? So you have to find out taxable income. Current tax formula. Current tax is equals to taxable income into income tax rate. But here we have accounting income. So how to find out taxable income? You have to give some adjustments. They have given directly what to do. Simply, so for 1920, what is happening? 28 lakh is their accounting income plus 3 lakh 15,000 plus 3 lakh 50,000 into 40%. That's it. Just we have to go with the question information. 28 lakh plus 3 lakh 15,000 plus 3 lakh 50,000 into 40%. So first year tax is 13 lakh 86,000. So I request you to please calculate year 2, year 3, year 4 and give your answers in comment section quickly, and then check it out whether you are correct or not. Just you have to add or less as per instruction in the question only. Nothing to do on your own. Then yes, in year 2 answer is 13.832, 13.1075, 8.61. Okay. Yeah. Next, apart from it, question number I will discuss remaining three very interesting questions. Come to question number 22. Before that, please do copy these notes somewhere in all persons. Examples of permanent differences. So donations in cash, penalties and fines, agricultural income, dividend income that tax is exempted, personal expenses, unpaid interest on loans. All these are the best examples and familiar examples for permanent differences. Have you written it? And then I have given two note points. Over absorbed depreciation will arise DTL. If it is under absorbed DTA. How all I discussed in regular class, but for our exam purpose, you have to just remember if it is over absorbed depreciation, DTL, under absorbed DTA. Clear? Yeah, please do copy it, pause the video and write this somewhere else. They may ask for MCQ or else they may ask in question itself. Yeah, done. Come to the questions then, everybody. Question number 22. AB Limited has provided depreciation as per accounting records 8 lakh. We have covered the same example in our question, in our classroom discussion. Tax records 14 lakhs. Super. Sir, how to solve it, sir? Simple, sir. Whenever these questions are there, just to draw two P&L accounts. One is for accounting, one is for tax. Take a gross profit which should be higher than those two figures. What is those two figures? 8 lakh and 14 lakhs. Take higher than those two. For me, 20 lakhs. So 20 lakhs, 20 lakhs. Here depreciation 8 lakh. Here 14 lakh. That means 12 lakhs net profit, 6 lakhs net profit. What is tax rate given in the question? 40% is tax rate, no? That means here 12 lakh into 40%, 4 lakh 80,000 is tax as per accounting records. Here 6 lakh into 40%, 2 lakh 40,000 is tax. That means already I told you, if you are paying less tax, feel it as a liability. So DTL is there. How much DTL? 2 lakh 40,000. Next one. Unamortized preliminary expense. Just now I told you unamortized or else unabsorbed depreciation, that will become, what is that will become what? DTL or DTA? Unabsorbed DTL. If it is unabsorbed DTA. Yeah, come to the question next. Where is the question? So we got 2,40,000 and then unabsorbed only. This is unamortized preliminary expenses. Here also again, listen everybody. Next one, unamortized preliminary expenses. Unamortized where unabsorbed is different. Have a look. Unamortized preliminary expenses as per income tax records. That means what? So we are reducing. That means so in our books of accounts, as per accounting books, our expenses are more. Whenever your expenses are more, what is happening? Your net profit will get decreased. So I will show you, don't worry. Unamortized preliminary expenses means what? In our books of accounts, for example, our expenses is, let me take gross profit for example, say 100 rupees. For tax also 100 rupees. Okay. So expenses as per books it is some 50 rupees. But here we have written expenses as per tax only 10 rupees. That means here net profit is 50. Here net profit is 90. That means we have to pay more tax here. So whenever you are paying more tax, that will become DTA. Here they are telling you directly amount. DTA equals to 11,200 into 40%. 11,200 into 40%, 4480. DTA is 4480, DTL is 2,40,000. So net 2,35,520 is DTL. Actually, we can solve this question in another manner. So I followed this for the too much knowledge and understanding purpose. No sir, I don't need this much of knowledge, just exam sake, just explain me. Very simple, very simple. Tell me, what is depreciation as per accounting records? Depreciation as per accounting records. How much bolo? Accounting records 8 lakhs. Depreciation as per taxable records 14 lakhs. That means excess depreciation. How much excess depreciation? 14 lakh minus 8 lakh, 6 lakh is your excess depreciation. That means you are writing more depreciation in your income tax records. If you are writing more on P&L account, what is going to happen? Your net profit will get decreased. You need to pay less tax. It will result DTL. Are you getting my point? So here it will result DTL. How much DTL means? 6 lakhs into 40%. 2,40,000. Next one, unamortized preliminary expenses. Unamortized preliminary expenses means, as per accounting records, your expenses are more, but you are writing less expenses. If you are writing less expenses, opposite to the previous one only, no? So if you are writing less expenses, your profit will get decreased, tax also will get decreased. That means here, how much we reduced actually, how much we reduced as per the question, unamortized amount is 11,200. This will result what? DTA. Why DTA? I am reducing my debit side of P&L account as per your income tax. This is DTA 40%. 11,200 into 40%, 4480. Net will be 235,520. This will be what? DTL. Okay, yeah. Still, if you are facing difficulty in AS22, believe me, if you are perfect in these 5 formulas, so you can answer any question in your AS22. First point number 1, just check if more depreciation in income tax. That means what? As per accounting, less depreciation, as per income tax, more depreciation. The result will be DTL. Sir, how much, sir? The difference into tax percentage. Sir, no sir, less depreciation as per income tax. The result would be DTA. How will I get difference into percentage? If it is more depreciation, DTL. If it is less depreciation, DTA. Point number 3, unamortized preliminary expenses. The result would be DTA. How to find out, sir? They will give you amount, directly that amount into percentage. No sir, over amortized expenses, sir. So amount into percentage, result would be DTL. These 4 will help you a lot in your question. Sometimes current tax is equals to taxable income into rate. How to get taxable income? Accounting income plus or minus permanent differences plus or minus timing differences. They will give you plus or minus directly. You have to just go with the question. So write these 5, then you will be comfortable in this chapter. I am giving you time, no problem. Just please do copy somewhere. These 5 are enough to solve all the questions. I will show you the evidence also. I will show you the proof. Yeah, or else you can check it out with this question. Definitely it's going to be work out. For example, question number 21, have a look. I'll apply the same whatever I have written here. Depreciation as per income tax is 8 lakh. As per income statement means our books of accounts. As per income tax act, 20 lakhs. Tell me what happened. More or less depreciation. More depreciation only, no? Apply this notes. More depreciation. What is the result? DTL. How to get DTL? The difference into percentage. What is the difference? 12 lakhs into percentage 40%. 12 lakhs into 40%. How much? 4 lakh 80. What is this? DTL. Super done. Next point. Unamortized preliminary expenses 1 lakh 50,000. Apply the notes. Unamortized. The result would be DTA. How to get it? Amount into percentage. How much? 1 lakh 50,000. No. So apply it. 1 lakh 50,000 into 40%, nothing but 60,000. DTL 4 lakh 80, DTA 60. What is the net? Net will be 4 lakh 20,000. That is what? DTL. Checking your answer, 100% it would be correct. Come to the answer. Your answer is yes, DTL 4 lakh 20,000 done. It's proved. You can answer any question. This question also same. For example 22. Let's apply this concept. Here also same. Depreciation 8 lakh and 14 lakh. More depreciation. DTL only. How much DTL? More how much? 6 lakh into 40%. 2 lakh 40,000 DTL. And next one. Unamortized expenses DTA 11,200 into 40%. 11,200 into 40%. How much? 4480. Net amount find out. 2,40,000. Yes, 235,520 detail. That's it. Answer done. Very simple. Apply those tricks. So question number 20. Just now I told you accounting income plus or minus into percentage. You will get the answer. Question number 19. Whenever unabsorbed depreciation is there, it will result DTA. Income tax penalty is permanent difference. Interest, I told you, permanent difference. So that's it. AS 22 is done. Simple. So please don't ignore these 5 points. So write somewhere else. At least read at least once daily. And don't ignore to check all these 5 formulas day before exam and before you are going to exam hall. Discuss with these 5 formulas with your friends before going to exam hall. Okay? Yeah, that's AS 22. Next, NPO, not for profit organization. So up to June 25 examinations, every time I used to feel very sad after observing the question paper because they used to skip this chapter. They used to ask one MCQ from NPO. That MCQ is also very easy, like nature of receipts and payment account or income and expenditure, real or nominal. Sometimes they may give subscription adjustment. But I feel NPO is very good chapter. There student can understand what is the treatment of capital transactions and revenue transaction, how much we should record in P&L account, how much should record in balance sheet, how much in cash book. For me, if student understood NPO and single entry system in group 1, so the purpose of CMA inter group 1 FA subject is fulfilled. If you really understood these 2 chapters, if you are able to understand all adjustments in these 2 chapters, what are those? NPO and single entry system, that means you understood the whole financial accounting subject. Because See, for example, if you have done some mistake in bills of exchange or consignment or joint venture, that will not impact your future. But if you have done mistake in NPO or single entry, that means you are not pro, or you are not completely good at accounts. Okay, so I suggest to all my students, so please give more importance to NPO and single entry. And one more thing, understand these two chapters in all dimensions. So don't prepare these two chapters just for the exam sake. So it will give you the most concept, it will give you more confidence about accounts. Okay, yeah. So actually in regular class I used to take in detail discussion of all this. Still this is our marathon session. Of course, for the benefit of students, I'll try to cover all the concepts. Okay, if time permits, we'll cover majority problems, whatever we can do. Before that, actually we shifted from somewhere to somewhere. Actually, from December 25, in recent attempt onwards, they are asking one compulsory question from NPO. Already I have told this point in the last marathon itself. So from December 25 itself, they'll ask only one 14 marks question, that is from partnership accounting. 2 sevens, that means before that they are giving a 14 marks question from single entry. Now it is divided into two parts. First one NPO, second one is single entry. So that's why they are asking one question from NPO for sure. So actually weightage of this chapter is 7 to 9 marks. Why? Because they are asking one MCQ as usual, they are not removing MCQ. Still I am not giving guarantee for MCQ, but if they give MCQ, definitely you will able to get the 2 out of 2. If they are giving MCQ, I will feel happy first of all, because every one of my students, they'll correct the answer, they'll give correct answer, I know that. That's why I am very much happy if they give 9 marks from this NPO chapter. Okay, yeah. Now don't take too much of stress, let's discuss in just like a normal discussion between you and me. Listen, for example, if you take any business organization, whether that is Reliance company or a Tata company or else DMart or else HUL company or also MRF company or Tata Motors or Air India, if you take any company, so the main agenda of company is definitely to get profit or to earn wealth. So every business will run in India definitely to earn profits only. Still, there are some organizations in our India, they are also run their business, but their motive is not to get more profits. Of course, they will get the profits. Sometimes they might not get profits, but their agenda is different. Their agenda is to not earn more profit. Their agenda is not to increase the selling price and to get more revenue. Their agenda is to not reduce the cost, earn more revenue. Their agenda is very clear. So to just for charity purpose. So even though if they get profit from their business activity, they will invest these profits also for charity purpose. So they are completely charitable oriented. So NPOs, or they will run the business, but their main agenda is not to earn more profits. So they will run their business. If they get profit or loss, they will invest that profits or losses in again a charity purpose. Okay. So some features of NPO are here. So till now they have not asked any question. Still we cannot predict question paper. They can ask simply for 3 to 4 marks. Explain the features of NPO as per Companies Act 2013. So point number 1, NPO is governed by elected body or trust. No NPO will be handled by single person. If you observe Tata Trust, Ratan Tata Company Trust, it is also not handled by Ratan Tata when he was alive. It is controlled by the trust only. And the main purpose of organization is to provide social service. So their agenda is to give service to the society. So their incomes comes from donations. So definitely when an NPO is doing something new to the society, who are same kind of people, who are same set of people, and they'll give donations to the NPOs. And all members in NPO, they'll pay membership fees and subscription amount. These three are major source of income for NPO. What are those? Donations, membership and subscription. These three are incomes for all NPOs. So whatever funds they are collected, they are utilized for the benefit of the society only. And NPO means not only single person, it is a collection of people, collection of members. For example, we are running an NPO. One person is joined in our NPO as a member. So, for example, he paid membership fees of 20,000 rupees. Can he transfer it to another person? No. Membership fee is completely non-transferable. So all this is not important for MCQs or problematic part, except point number 3. What is point number 3? Incomes for NPO or three ways, mainly donations, membership and subscription. Apart from it, they can ask a theory question. So whatever I have written notes, all it is very important. Okay. So they can ask for a theory question. Otherwise, just look at point number 3. And for profit oriented businesses, like whatever all other than NPO, Reliance, Tata Motors, Air India, for all these companies, so they will prepare trading account, P&L account and balance sheet. So why they will prepare a trading account? To find out gross profit or gross loss, and P&L account to find out net profit or net loss, and balance sheet to find out their financial position. Am I audible? Yeah, nothing but their assets and liabilities and capital position. So nothing but trading, P&L, balance sheet, all these three prepared by every business organization. But coming to NPO, those three are not applicable to them. So as per Companies Act, they have to prepare another statements. Why? Because P&L account says net profit or net loss. The main agenda of NPO is not to get a net profit or net loss. So that's why we should not call it as a P&L account. In fact, trading P&L are not applicable to NPO. So Companies Act 2013 has given 3 statements for NPO. Every NPO has to prepare these 3 statements. So financial statements of NPO. Number 1, receipts and payment account. Number 2, income and expenditure account. Number 3, balance sheet. These are the only 3 statements every NPO has to prepare. Normally, as per section number 128 and 129 especially, they have to prepare financial statements, nothing but balance sheet, P&L, cash flow, SOC, notes. But for NPO, that is not applicable. They have to prepare these 3. What are those 3? Receipts and payment account, income and expenditure account, and balance sheet. They can frame a question from here. How can they design a question from an MCQ from here? Which of the following is not required for an NPO? Option A, B, C, option D, some cash flow or something else. That means these 3 are mandatory statements for NPO. Clear everybody? Yeah. So that means what? For profit organizations, they will prepare trading account, P&L account, balance sheet. By trading, they will find out gross profit or gross loss. From P&L, they will find out net profit or net loss. But here, there are no such kind of P&L and trading. Here, receipts and payment, income and expenditure, balance sheet. Now you should get one doubt. Sir, okay sir, for profit oriented businesses, so I know purpose of trading account, I know purpose of P&L account. I will get gross profit or net profit. Then what is meant by receipts and payment account, sir? Sir, what is meant by income and expenditure account, sir? Sir, what is meant by balance sheet here, sir? I will discuss one by one. The first and foremost, receipts and payment account. My dear students, receipts and payment account is exactly cut, copy paste of your cash account. So what is your cash account format? We will write all receipts on debit side, all payments on credit side. Nothing but if you receive cash, you will debit. If you paid cash, you will credit it. You will write opening cash on debit side, closing cash on credit side. Similarly, receipts and payment account is nothing but cash account. Here, not only cash, bank account also. That's it. It is done. Receipts and payment account means cash account only. If you know the cash account, that is receipts and payment account. So what is cash account, or what is cash account format? We will write opening balance on debit side, closing on credit side. Why opening on debit side? Cash means asset, asset means debit. Here opening, here closing. If you are receiving any cash, whether that could be capital in nature or revenue in nature, that is irrelevant for you. For example, I am selling goods, I am receiving cash, right on debit side. I am selling machinery, I am receiving cash, right on debit side. Ignore about why you are receiving it. If you are selling goods or cash, or if you have taken bank loan also, right on debit side. Simple. If you are receiving cash or bank balance, right on debit side. I am paying it, sir, right on credit side. Sir, actually, I am receiving current year income, right on debit side. I am paying for current year expenditure, right on credit side. Sir, actually, I am receiving some money, but this money belongs to previous year, sir. Can I write? Yes, you can write. Sir, I am paying some amount belong to last year. You have to write. For next year also, you have to write. Simply, if that amount is received, write on debit. If you are paying, write on credit. That's it. Ignore about that is capital or revenue now. Ignore about current year or previous year or next year, subsequent year. If you are receiving it debit, paying credit. Opening debit, closing credit. That's it. So this is not only cash, it includes cash as well as bank balance. So receipts and payment account is nothing but your cash account only. Clear everybody here? That means here I write only actual figures. Here also only actual figures. For example, if I write 2 salary 10 lakhs, that means, or else if I write by salary 10 lakhs, that means I have paid salary of 10 lakh. That salary of 10 lakhs may belongs to only current year or previous year or next year also. Here I will write actually what happened. That does not mean that is current year amount. For example, here payment side it is showing by rent 10,000 rupees. That does not mean current year rent is 10,000 rupees. That is how much I paid. That 10,000 may belongs to only current year or previous year or next year also, advance also. That means in receipts and payment account you cannot identify what is current year amount. Here I can only identify how much actually received, how much actually paid. So you need to understand why I am stressing this point in detail. Why? Because in receipts and payment account I will record only actual receipts and actual payments. Actual receipts on debit side, actual payments on credit side. I'll ignore about bloody capital and revenue or current year or previous year or subsequent year. Here also same thing applicable. This is not only cash account, it is also bank account. I will write opening balance on debit side, closing balance on credit side. That's it. My receipts and payment account is completed in all aspects. By the way, receipts and payment account is similar to which account? Cash account, no? Cash means asset. Asset means real account. So receipts and payment account is also real account. In receipts and payment account, I will record both capital and revenue transaction. In receipts and payment account, I will record current year items, previous year items, and subsequent year items also. These 3 points you should remember for multiple choice questions purpose and problematic also. Clear everybody up to here? And then the next one is the most important one, income and expenditure account. Income and expenditure account is exactly same as your profit and loss account. Normally for your profit oriented businesses, I will open P&L account to find out net profit or net loss. For example, if I am running one business, I want to know what is my net profit or net loss, I'll open P&L account. It will give me the whole picture whether I got net profit or net loss. Similarly, for NPO also they want to know what is our current year result, whether it is am I in positive or am I in negative. If you observe, I am not using the word profit or loss. I simply am using a positive or negative. In NPO, people will not call it as a net profit or net loss. Instead, they will call it as a surplus or deficit. If you want to turn in your terminology, surplus means profit, deficit means loss. So already I told you, income and expenditure account is similar to your profit and loss account. Here also I will write only expenses and losses, incomes and gains. But here, same as our P&L account, I will record only current year expenditure and current year income irrespective of actual receipt or actual payment. This is the main difference between receipts and payment and income and expenditure account. That means, for example, this year rent of my building is 1 lakh rupee, but I have not paid till to my landlord. Still, I have to shown on debit side as to rent. Why? Because that is an expenditure. You have to record irrespective of your payment or receipt. So receipts and payment account records only if it is actually done. But income and expenditure account records only, it records irrespective of actual transaction. We have to record even though we have received or paid. That means if here you are looking at 2 salary 1 lakh, that does not mean that is paid. Here that 2 salary 1 lakh means that is current year salary of 1 lakh rupees. Okay. So similar to your P&L account, if credit side is more, you will get a surplus. If your debit side is more, you will get deficit. So you all know P&L account is a nominal account. So that's why income and expenditure account is also nominal account. Expenses should be debited, incomes should be credited. Capital incomes and expenditures are excluded here. Here I will record only revenue transactions, but receipts and payment account record both capital and revenue. That is a major difference between these two accounts. Okay, students will get confused here only. What are those? Receipts and payment, income and expenditure account. I will show you one example. For example, you listen. Actually, we are in 26-27. We are closing our books. Actually, rent of the building is 1 lakh rupee. But I have paid amount is only 60,000. Now we have to prepare receipts and payment account and income and expenditure account. In receipts and payment account, first of all tell me, is it receipt or paid? Rent means paid only, no? Write on which side? Credit side. Buy rent. Tell me how much today record? 1 lakh or 60,000? 60,000 because that's the actual paid amount. I will write 60,000. In income and expenditure account, that is expenditure or income? Expenditure only, write on debit side to rent. How much? 60 or 1 lakh? 1 lakh. That means in income and expenditure account, I will record current year expenditure, current year income. In receipts and payment account, I will record actual amount received and actual amount paid. Still, how much balancing figure is there? 40,000 is there. For that is still payable, no? Payable means balance sheet liability, rent payable 40,000. If it is payable, liability, receivable, asset, where in balance sheet. Clear? You don't worry, we'll discuss all the treatments. So this is all about receipts and payment and income and expenditure account. For balance sheet, nothing to discuss more, similar to our normal balance sheet only. Yeah, some other topics are there which are miscellaneous topics. So entrance fees. So entrance fees are generally capital in nature, unless and otherwise they are specifically mentioning in question. For example, in question they are showing entrance fees. So you treat it as a capital. Capital means you should not record in income and expenditure. Go to balance sheet and write down. No sir, they are telling us some 60% is revenue, remaining 40 is capital. If nothing is mentioned, you can use this general perception, capital in nature. If they are telling you any point specifically, follow that question pattern. Okay, follow the question. Next one, donations. So we are receiving donation. Again, for example, if we are running an NPO, many people will come and they'll give donation. Some people may give donations just like that, and you can use it for our charity activities. Those are called general donation. Some people are there, they'll give you bulk amount, but they are giving that amount not for general things. They are giving for doing some specific purpose. Especially they'll give for construction of one building. So those are called specific donations. So donations are two types, general, specific. General means there are no specific purpose given by the donor. Specific donation means the donor is putting one specific condition on it. They have given it for the construction of one building or one specific purpose is there. So depend upon the question you have to do. If that is general donation, go to your income and expenditure account. If that is specific, you should not record in your income and expenditure. Why? Because that is capital in nature. General donations are revenue, specific or capital. Capitals should not record in income and expenditure. Don't forget this point. And legacy, endowments and life membership fees are also capital in nature. Okay, next one. So in NPO, the main problem faced by the student is adjustments. They will give you opening outstanding, closing outstanding, opening prepaid, closing prepaid. They'll give you income and expenditure or else vice versa. Students will get confused with it. And unfortunately, if you do anything else, you will get one number, you will write the answer. You feel that my answer is correct. But your answer is correct or wrong, you cannot decide in your exam hall. So that's why people are suffering from it. So that's why for the first time, even in my last marathon also I have not covered this point. For the first time, I think many of students like this format. For all expenditure, for all incomes, this format is going to be worked out. Students no need to take that much of time, and if you take time also you will feel too much of confidence on it. That is my assurance. But you have to listen next 20 minutes in detail, and you have to pay more attention. Okay, take a little amount of water and listen. First thing, students will face subscription point. In recent exam also, they have given MCQ from here. Of course, in each and every question, this point will be there. First, understand this. Depend upon it, I'll explain remaining all adjustments. First one, subscription is there. You tell me, my dear student, subscription is income or expenditure for NPO? Thinking NPO point of view. Income only. That means members has to pay fees to me. For me, that is income. For example, some people over there, they have not paid. That means that is receivable for me. Receivable means asset. If anybody pays in advance, That is called opening advance or closing. That is liability to me. That means if there are any opening outstanding, right, on debit side. Why debit side? Opening outstanding means that is receivable for me. Receivables means asset. Asset means debit. Opposite side, closing outstanding. No sir, opening advance is there. Opening advance means someone has already paid in advance. Advance is liability. Liability should be credited. So opening advance on credit side, opposite closing advance. Remaining, we have two accounts, income and expenditure, receipts and payment account. Income on debit side, receipts and payment account on credit side. If any written off is there, write on credit side. Students will get confused. Which should I write first? Income and expenditure or receipts and payment account? So go with alphabetical order. So I first and R next. That's it. So what is the logic behind it? Opening outstanding asset debited, closing opposite credited. Opening advance liability credited, opposite debited. Income expenditure debit, receipts and payment credit. If any written off is there, that is reducing your asset, write on credit side. That's it. So with the same logic, I will solve recent examination MCQ. Before that, you clarify yourself, are you okay with this particular format? Very simple. What shall I write? Opening outstanding on debit side, closing on credit side. Opening advance on credit, closing on debit. Income debit, receipts credit. If any written off is there, credit. That's it. Done. Now I will open recent examination question paper. Even you also try. I am just switch offing my turn off my camera. Every one of you, please do it. Yes, the last MCQ number 15 is there. Every one of you give a try. Do you get it, everybody? A charitable institution has 250 members. Annual subscription 5,000 rupees each. 250 members, 5,000 each. Okay. The subscription received during the year were 11,25,000. That is actual amount received. We should show under receipts and payment account. How much fees? 250 into 5,000. Do it. This is income and expenditure account. They have given both, which includes 65,000 rupees and 25,000 rupees for the year 23, 24, 25, 26. So this amount belongs to previous year means what? They have not paid in previous year. Are you getting my point? If you are paying your hostel fees in current month means you have not paid in previous month. Nothing but this is what? Opening outstanding or opening arrears. Next year means you are paying in advance for next year. This is called closing advance. This is important. Now what is the requirement? Amount of outstanding. I think they are asking closing outstanding. Simple. Let's prepare account. Opening outstanding 65,000. Closing advance debit side only, no, 25,000. receipts and payment account, credit side 11,25,000. How much income and expenditure? 250 into 5,000, 12,50,000. That is debit side. Do it. Balancing figure is your answer. 12,50,000 plus 65,000 plus 25,000 minus 11,25,000. 2,50,000 is your answer. If you confuse, you will get a negative answer, wrong answer. You should be able to understand. If that is previous year means that is opening outstanding. Next year means that is closing advance. Okay? Yeah. So directly come to the problematic area. So in our exam, how they will ask 7 marks question? Number 1, they will give you receipts and payment account and they will ask you to prepare income and expenditure account, or else reverse, they will give you income and expenditure account, they will ask you to prepare receipts and payment account, sometimes balance sheet also they will ask. But the problem is, especially for expenses, for example, they have given in receipts and payment account, buy rent is there, buy rent 10,000. In adjustments, they have given us opening outstanding and closing outstanding, and sometimes opening prepaid, closing prepaid. So there are 4 adjustments. Which should be add, which should be less. Or they may give income and expenditure account debit side to rent. If you remember plus minus, definitely there is chance for mistakes. Chance for mistakes. So how we prepared subscription account for getting subscription also? I came up with the I came up with expenses account. I think you are looking at this format for the first time. So if you follow this particular account, this account is unique for all of your adjustments. If they are asking 100 also, you can do it. Your answer will not be wrong at any cost. There are not even 1% to get your answer wrong. So simply in your subscription account, we have written opening advance on credit side, no? Here also opening advance on credit side. Same logic. Advance means liability on credit side. Opposite closing advance. There opening outstanding is asset because receivable. So here prepaid is also asset, no? Opening prepaid, closing prepaid. In subscription account, income and expenditure debit side, receipts and payment credit side, because that is income. This is expenditure, no, reverse. Receipts on debit, income on credit. This is unique for all the questions. Very simple. Advance liability opening, closing opposite side. Remaining debit side, opening prepaid, closing prepaid. Debit side receipts, credit side income, reverse of subscription account, these two. That's it, done. No need to work for add, minus, add. If it is receipts and payment account, you have to reverse, ignore about everything. If you understand it, you will understand. That means if you understand it, you can get full marks. That's what I'm trying to convey. Okay. So this expenses account I am going to use. Balance sheet same as our normal balance sheet. Asset side, all assets, liability side, non-current liabilities, current liabilities. Here the only difference is capital is called as capital fund. Surplus add, deficit less. All capital receipts I have to add to the capital or shown in capital, shown in under balance sheet. That is also fine under liability side. Okay. This is entire theory from NPO. So this account is gonna be this marathon highlight is this expenditure account. It's a highlight for this marathon. What is that? Expenditure account. Opening prepaid on debit, closing credit. Opening advance on credit, closing debit, receipts and payment, income and expenditure account. That's it. Okay. For your confidence, directly I will right now I'll solve recent examination paper. I am also opening this question. Of course, I have opened it, but I have not solved at any time. Directly, I am solving this question with you guys. Oh, I'm sorry, this is examination question. This question is exactly from our material, RR Clinic. Then we can open our book also, same question, right? Same question, same question. So they have given us receipts and payment account. You have to prepare what? Income and expenditure account. Okay. This question is in your BCCA material and ICMAI study material and recent examination paper. So what is the requirement of the question, my dear students? You have to prepare income and expenditure account. So before that, if I solve this question, there may be some lack of subject. So that's why we'll start from the very small questions. I'll come to this question later. So before that, open workbook of BCCA, everybody. I'll also open it, workbook of BCCA. Where it is? Yes, group 1, financial accounting. Page number, anybody? Yes, page number 163, question number 1. They're asking our subscription account, favorite subscription account. So whenever this kind of questions you are facing, so not only for this question, in each and every problem, there will be one adjustment for subscription. That means you have to be very perfect with respect to subscription. What is that? On 31st March 2021, a club had subscription in arrears. Nothing but what? That is called opening outstanding or opening arrears. And in advance 4,000. So this is also opening amount, no? This is called opening advance. Opening arrears and opening advance, they have given it. During the year ended 31st March 2022, the club received means actual receipt and payment account. You have to write under receipts and payment account, of which 12,500 related to 22-23. Related to next year means that is called what? Closing advance. On 31st March 2021, there were 5 members who had not paid subscription for 2022, 1600 per person. So this is called closing arrears. 5 persons into 1600 means 8,000 rupees is closing arrears. Prepare subscription account. Still some people unable to recognize which is opening, which is closing. Very easy, sir. Opening arrears means last year unpaid. Closing arrears means current year unpaid. Opening advance means current year amount paid in last year. Closing advance means next year amount paid in current year. If you want, I'll write also, no problem. Yeah. Now we have to prepare subscription account. So here only your NPO chapter preparation should be completed. So question number 1. They're asking subscription account to us. So let's prepare subscription account. Subscription account. We know that we have to write on debit side opening, outstanding or arrears, closing outstanding or arrears, opening advance, closing advance, income and expenditure, receipts and payment. Now come to the question. Opening arrears 2800, opening advance 4000, 2800, 4000. What else do we have? Closing advance 12,500, receipts and payment account. Opening advance 12,500. Opening or closing? Closing advance, right? Closing advance 12,500. Receipts and payment account 2,08,000. And this 8,000 is closing arrears, right? 8,000 is closing arrears. This 4,000 is opening advance. 8,000 is closing arrears. Balance in figure is our answer. $4,000 plus 2,08,000 plus 8,000, 2,20,000 minus 12,500 minus 2,800. How much? 28,000, no? Opening arrears, not 2,800. Plus 2,800 minus 28,000. Yes, 1,79,500 is your answer. Got it, everybody? Same problem, same model, question number 2. I need subscription account only. Format, you can definitely draw it. If they are asking format, what to do? If they are asking format, add all this, less all this. That is the format. Then you will get the same format. So I am giving you time, no problem, I will wait for you. So I'm just turn off my camera and I will give you 2 minutes of time. No problem, take your own time. Please do it. Be careful which is opening arrears, which is opening advance, which is closing arrears, which is closing advance. If you identify it, then answer is done. Done? Can I? Okay, do it, no problem. Yeah, I'll also do it. The City Sports Club of Surat had received in 2021 50,000 rupees towards a subscription for 2021 unpaid, and unpaid on 1/4/2021 5,000 rupees. So what happened? So we received how much? 50,000. Received means that is what? Receipts and payment account. Okay. Similarly, opening unpaid is there. Opening unpaid means this is opening outstanding or opening arrears. Next one, subscription paid in advance on 31st March 2021. Nothing but this is opening advance. This is closing advance. And subscriptions for 21-22 unpaid, nothing but this is closing outstanding or closing arrears. Simple. If you identify, that's it, done. Let's come to the answer. Question number 2. Same standard, same thing. Opening outstanding. This side, closing outstanding. This side, opening advance, closing advance. Income and expenditure, receipts and payment. How much opening advance? We have some data, no? Receipts and payment first, right? Receipts and payment account 50,000, and then 5,000 is opening advance or opening outstanding. How much? 5,000 or 1,500? 5,000 is opening outstanding, and then 1,250 is opening advance. 1,250 is opening advance, and then 1,000 rupees is closing advance. 1,000 rupees is closing advance, and then 2,250 is closing outstanding, and then anything else? Everything done. This is balancing figure then. 1,250 plus 50,000 plus 2,250 minus 5,000 minus 1,000. What is the answer? 47,500. Yes, I got exactly correct answer. That means question number 1 and 2 will explain adjustment of subscription account. If you are still not confident about question number 1 and 2, please pause the video. Please go back and revise question number 1 and 2. Then only come to the next question. Okay. And question number 3 onwards, we'll have big questions. These are the examination questions. Okay. Question number 3. The following is the income and expenditure account for the GB Club for the year ended 31st March 2022. They have given us income and expenditure account. We need to prepare. Go to the end of the question. The requirement of the question is prepare receipts and payment account of GB Club. So we need to prepare receipts and payment account. They have given us income and expenditure account. Already I told you the questions will be in 2 formats. They will give you receipts and payment account. They will ask income and expenditure account, or vice versa. In this problem, what happened? They have given us income and expenditure account. They are asking you to prepare receipts and payment account. Very simple. So everybody please pay more attention, so you will get clarity after completion of particular question. Okay. Yeah. First let me read the entire question. So they have given us income and expenditure account. So first of all, be clear with the concept we discussed. What I told you, all items in income and expenditure, whether that could be debited or credited, all these means, if they are in income and expenditure account, means they are not paid or received amounts. All these figures represents current year amount. So these all are current year amounts. But if we need to prepare receipts and payment account, means we have to record actual receipts and actual payments. So they have given us income and expenditure account. Debit side, salaries, rent, printing, insurance, audit fees, games and sports, subscription written off. I told you what is the treatment of it. Miscellaneous expenses, loss on sale of furniture, depreciation and depreciation on sports equipment and furniture. Excess of income means the last one is surplus. And credit side, subscriptions, donations. And then come to additional information. Subscription arrears, nothing but outstanding, opening, closing, and advance subscription, opening, closing. Outstanding expenses, rent, salaries, audit fees, and sports equipment less depreciation, furniture, and prepaid insurance. And they are telling us book value of furniture sold 7,000, entrance fees capitalized 4,000. On 1st April 2021, there was no cash in hand, but bank overdraft was 15,000. On 31st March 22, cash in hand amounted to 850 and the rest was bank balance. So this is the question. So whenever question comes from NPO, the first and foremost thing you have to do is please open subscription account. You will get some marks. So I also do it. Question number 3. I'm getting messages from our students only. Everybody is waiting for marathons, so no issue. We'll plan it. Question number 3. First, do open subscription account. I think you know format of subscription account. So tell me what is the format of subscription account if you remember. Debit side, opening arrears. Credit side, closing arrears. Credit side, opening advance. Debit side, closing advance. Debit side, income and expenditure account. Credit side, receipts and payment account. In addition to that, we have to write one more thing. Subscription written off is also there. So write in proper places. Opening arrears 2600, closing 3700. 2600, 3700. Arrears are done. Coming to advances, opening advance 1000, closing advance 1500. So opening advance 1000, closing advance 1500. And what about anything else in the question? Written off is there, already we highlighted. How much written off? 350. 350 written off. And they have given us income and expenditure account, right? Under which what is the subscription amount? 68,000. They have given us income and expenditure account. So balancing figure is receipts and payment account. Just calculate it. How much? 68,000 plus 2,600 plus 1,500 minus 1,000 minus 350 minus 3700. I got subscription 37050. Sorry, 67050. Is it correct? 67050 is the correct one. So that's what we have to record in our receipts and payment account. So first adjustment is done. Next, what is the procedure, sir? So please follow this procedure. You will get full marks. Your answer will not be go wrong. Okay. So what to do, sir? First go to adjustments. Okay. In adjustments, what is the first point? Subscription arrears is adjusted. Advance is also done. Coming to outstanding expenses, rent is there. So what they have given? Opening outstanding is there, closing outstanding is there. You can find out simply by adding and reducing. But already I told you, if it is easy only, just adding or reducing. But if they have given multiple things, if they are given prepaid also, you will get confused. So that's why I have given format for all expenses. So what is the format? For example, rent account. So how to open rent account? Tell me. Very simple. Opening outstanding liability, no? Opening outstanding, closing outstanding. If any prepaid, opening prepaid, closing prepaid. Reverse. This side receipts and payment account. This side income and expenditure account. In the question they have given us opening outstanding 500, closing 800. Opening outstanding 500, closing 800. No prepaid. They have given us income and expenditure account. In income and expenditure account, rent amount is 4,500. Please do write under income and expenditure account. And balancing figure is your answer. Nothing but 4,500 plus 500 minus 800. Your rent amount is 4,200. So that is the correct answer. So rent is also done. Please, very simple. Liability, credit, asset, debit, closing opposite side. That's it. Okay. What is next adjustment? Salaries. Again same. Let's open salaries account. How much opening outstanding? 1200, closing 350, no prepaid. So 1200, 350. Income and expenditure account, they have given us two salaries, 19,500. 19,500. So do it. Balancing figure is your answer. 1200 plus 19,500 minus 350. Your answer is 20,350 is salaries. Next one, same format, audit fees. Again open account, 500, 750. Audit fees. I think some people are connecting with it. They'll feel very comfortable. 500, 500, 750. Income and expenditure account, they have given how much? 750. How much? 500 is balancing figure. Your audit fees is 500. That's it. Audit fees also done. So they have given sports equipment, opening figure and closing figure. So let's do open sports equipment account also. Sports equipment means that is asset. You all know asset account, right? So sports equipment account. So opening figure, we have to write on debit side. To balance brought down. They're telling us 25,000 and closing balance 24,000. 24,000. And any adjustments are there for sports equipment? Depreciation is there. Depreciation on sports equipment 6,000. We have to write by depreciation. By depreciation 6,000. Then please tally it. 24 plus 6, 30,000. So balancing figure on debit side. Debit side means what? We have purchased an asset to bank or cash, whatever it is. We have purchased that asset. Okay. Do you understand sports equipment account? What is the next one? Furniture. Opening 30,000, closing 27,900. So open furniture account also. 30,000 and 27,900. Apart from these two, depreciation is there. How much depreciation? 3,100. 3,100. Depreciation opening, closing. Any info apart from these two? Loss on sale of furniture is there. How much loss? 2500. So they are telling in information book value of furniture sold is 7000. That means, so your book value is 7000, you are sold at loss. That means what is your sale value? 7000 minus 2500. Sale value is 4500. I think you got it, no? This asset value is 7000 in your books. You sold at loss means the sale value is 4500. So what is to be recorded? So what is entry for it? Cash account debit 4500, loss on sale of asset account debit 2500 to asset account 7000. That means in furniture account, what is the posting? In furniture account, we are receiving cash. How much we are receiving cash? 4500. Similarly, we are getting loss. Loss on sale of asset 2500. Now close it, you will get balancing figure. 3100 plus 4500 plus 2500 plus 27900 minus 30,000. So somewhere I got mistake. 3100 2500 27900 minus 30,000. So yes, balancing figure is 8,000. This is purchased to cash or bank. Okay, do you got it? Yeah. So furniture is also done. Insurance is there, prepaid insurance. So for here account will be helpful to you. Insurance account. Tell me, no opening outstanding, no closing outstanding, no opening prepaid, but closing prepaid is there. How much closing prepaid? 150. Closing prepaid is there, 150. And apart from it, where is insurance? 500. Where should I record income and expenditure? 500. What is balancing figure? 650. This is the answer. All adjustments are done. Next one, all adjustments are done. So now I can directly enter into receipts and payment account requirement of the question. You also help me out. Receipts and payment account. Tell me how to draw receipts and payment account. Debit side all receipts, credit side all payments. That's it. Before that I have to write opening cash and closing cash and bank balances. No, they have given us opening balances. There was no cash in hand on 1st April, but bank overdraft was there. So bank negative balance is there. If it is positive, I will write on this side. Negative is I have to write on opposite side. What to write? By balance brought down. How much negative balance? 15,000 is negative balance. Now you tell me all adjustments one by one, whatever we have done. First subscription is done, no? So receipts or payment subscription means receipts only, no? To subscription. Tell me how much subscription? Yes, 67050. Next one, what we have covered after subscription? Rent. Rent is payment, no, credit side. By rent. Tell me how much rent? 4,200. After rent, salary. Salary is a payment, no? By salaries. How much salaries? Salary amount bolo? Salaries, I think 20,350. Yeah? Yes, 20,350. Next one. After salaries, we have done about audit fees. By audit fees, I think audit fees is 500. After audit fees, we have opened sports equipment account. If you go to sports equipment account, where is cash? Cash is on debit side. Nothing but we have purchased asset means that is payment only. No, payment on which side? Credit side. By sports equipment account. So how much amount we spend for it? 5,000 rupees. Coming to furniture, there are two cashes are there. One is credit side, one is debit side. Credit side receipt, debit side payment. So we sold it now first. We received cash. How much we received because of furniture? Two furniture, 2,500. Am I right? Or 4,500? Yeah, 4,500, not 2,500. Two furniture we received 4,500. And we purchased credit side. Buy furniture. How much we spent buy furniture? 8,000. Just I am preparing cash account. Furniture is done, no? After furniture, insurance is there, payment only, no? Buy insurance. How much insurance? 650. All adjustments are done. Go to remaining points in your question. What are the remaining points in your question? First one, debit side, salary is done, rent is done, printing is not done, no adjustments for printing. Write directly by printing. By printing. How much is for printing? 750. Write directly, no adjustments. Insurance is done, audit fees is done. Game and sports, write in credit side, buy games and sports because payment. By games and sports, how much? 3,500. After that, games and sports is done, subscription is done. Miscellaneous expenses, by miscellaneous expenses. By miscellaneous expenses, 14,500. After that, depreciation will not appear here. Done. Credit side, subscription done. Donation, any adjustment is there for donation? Any point is there for donation? Then first of all, we should record if it is capital or revenue, no problem. 2 donations. How much donation is there? Donation amount is how much? If I am not wrong, we receive a donation of 5,000 rupees. Am I right? Donation is 5,000. Yes. Donation is 5,000 rupees. Next, all points here were covered. Here also we covered. Come to here. Entrance fees is capitalized. Because entrance fees is capitalized, it was not there in our income and expenditure account. I told you very clearly, in our receipts and payment account, we should record both capital and revenue. Because we received it, we should write immediately on debit side 2 entrance fees. How much we received? 4,000 rupees. And what else we have missed? Closing cash is there, 850. By C by D, so cash and bank is there. They are telling us cash is 750, remaining is bank balance. Please do solve, and the balancing figure is your bank balance. So just calculate it and find out the balancing figure. Everybody, I'll also do it. 15,000 plus 4,200 plus 2,350 plus 500 plus 5,000 plus 8,000 plus 650 plus 750 plus 3,500 plus 14,500 plus 750 minus 67050 minus 4500 minus 5,000 minus 4,000. So difference amount is 7,2. So closing cash 850, then I got 7,250. That is correct. Okay. Check with your answer. So that's it. Question number 3 is completed. Simple. I have not taken that much of time also. Just you need how to open subscription account, how to open expenditure, how to open asset account. That's it. Students will ignore especially asset account. So whenever you have opened asset account like furniture or cash account, please be careful. Wherever cash appears, you have to write in your receipts and payment account. Don't ignore. Next, come to the next question. Question number 4. Again, income and expenditure account has been given. Go to the end of the question. You are required to prepare receipts and payment account. Same as previous question. So you need to prepare receipts and payment account. So in income and expenditure account debit side, salaries, printing, telephone, postage, general expenses, interest and bank charges, audit fees, annual dinner expenses, depreciation. Credit side, subscription, entrance fees, contribution for dinner. Information, subscription, when we are preparing it actually, 31st March 2022. So they have given subscription outstanding as on 31st March 21 means that is opening outstanding. And next one, subscription outstanding as on 31st March 22 means that is closing outstanding. Next one, subscription received in advance as on 31st March 21 means that is opening advance. Next one, subscription received in advance as on 31st March 22 means that is closing advance. As usual, they have given us subscription opening outstanding, closing outstanding, opening advance, closing advance. In income and expenditure account credit side, they have given by subscription 1,70,000. So with this data, you can easily, comfortably open subscription account. Okay. What is that? Please to open subscription account. Question number 4. Here no written off. Just we have to write opening outstanding and closing outstanding, opening arrears, closing arrears, and then opening advance. Sorry. Yeah, tell me what is opening outstanding and closing outstanding, what is opening advance and closing advance, what is income and expenditure, what is receipt and payment account. They have given everything. No, income and expenditure 1,70,000, income and expenditure 1,70,000. And then go to adjustment, opening outstanding 16, closing outstanding 18, opening outstanding 16,000, closing 18,000. And then opening prepaid or opening advance 13, closing advance 8,400, opening advance 13,000, closing advance 8,400. Please do it. The balancing figure is your answer. How much? 16,000 plus 1,70,000 plus 8,400 minus 13,000 minus 18,000. Tell me how much? Everybody tell me. So I got 1,63,400. Done. Subscription is done. No. Next what to do? Tell me. Adjustments. What is next adjustment? Salaries. Opening outstanding is there, closing outstanding is there. Open salaries account. Opening outstanding means liability only. No. Credit side, opening outstanding, credit side, closing outstanding. How much opening outstanding? 8,000. No closing. Sorry. Yeah, opening 6,000, closing 8,000. Opening outstanding 6,000, closing outstanding 8,000. So they have given us income and expenditure account. We need to find out receipts and payment account. How much salaries in income and expenditure account? 2 salaries, 1,20,000. So what is balancing figure? 126 minus 8. How much? 1,18,000 is answer. Salaries is done. What next after salaries? Audit fees, again opening and closing outstanding. Audit fees for 2021 paid during 21 nothing but opening outstanding and closing outstanding is there. Same as salary, I have to open audit fees account. Very simple, no? Single account, it is universal account for all adjustments. If you understood one account, you can get answer comfortably. Opening outstanding, closing outstanding. How much opening audit fees outstanding? Audit fees 2000, closing 2500. And they have given us what? Income and expenditure account. How much they have given us income and expenditure audit fees? 2500. Now close it. So you will get 2000. This is receipts and payment account balancing figure. Done audit fees also. After audit fees, what? Building asset is there. They are showing at cost only. Equipment as on 31st March 21 valued at 52,000. That means opening equipment. At the end of year, it became 63,000. So they have given us opening equipment, closing equipment, means better we have to open account. I think you know how to prepare asset account. So equipment account. So what is opening figure? Tell me. Equipment opening figure. They only telling us opening equipment 52, closing 63. Opening 52, closing 63,000 and depreciation 7,000. That means 63 plus 7, 70,000. Any adjustments are there apart from it? If no adjustments, close it. 18,000 means it is purchased to cash. We have to record this in receipts and payment account. Don't forget, same as previous question. After equipment, bank loan is there, will shown as liability, and cash in hand as on 31st March 22, closing cash, and opening cash is there. Opening cash, closing cash. Yeah. Now all adjustments are done. So it's time to open receipts and payment account. Requirement of the question. Receipts and payment account. Yeah, now tell me all adjustments. First of all, subscription. Receipt only, no? To subscription. Tell me how much subscription? 1,63,400. Apart from that, next adjustment what? After subscription in our notes. After subscription, salaries. Credit side or debit side? Payment, no? Credit side. How much? 1,18,000. By salaries. By salaries 1,18,000. After salaries, what next? Audit fees. By audit fees. By audit fees 2,000. After that, only two. Equipment payment is there, no? By equipment 18,000. All adjustments are done. Go to question. What are the non-adjusted items without adjustments? Salaries is done. Printing and stationery. So payment only, no? By printing and stationery. How much printing and stationery? 6,000. Next one, telephone, no adjustments. Postage, no adjustments. General expenses. By telephone, by postage, by general expenses. How much telephone? 1,500. postage 500, general expenses 12,000, and after that interest and bank charges, by interest and bank charges. How much interest and bank charges? Payment only, no? 5,500. And audit fees is done. Annual dinner expenses, no adjustments. By annual dinner expenses 25,000 rupees. And then after that, so question number 4 only, no, we are discussing. Yeah. Depreciation we should not record. Surplus we should not record. Credit side, entrance fees is there, 4,000. What is adjustments? No adjustments. That is receipt only. 2 entrance fees. 2 entrance fees. How much? 4,000. And then after is contribution for dinner, receipt. 2 contribution for dinner, 36,000. So all data in first table is done, and subscription is done, salaries is done, audit fees is done, everything is done. We have to write opening cash. How much opening cash? 13,600. So 2B by D, $13,600, and the closing cash is also there. By C by D, how much closing cash? 28,500. So please balance it, everybody. Calculate it. 1,18,000 plus 2,000 plus 8,000 plus 6,000 plus 1,500 plus 500 plus 12,000 plus 5500 plus 25,000 plus 28,500. I got 2 lakh. I forgot equipment. How can I miss it? By equipment 18,000. Automatically our account will get tallied. So that is question number 4. Come to question number 5. In question number 5, this is the reverse question. Reverse question means previous 2 questions they have given us income and expenditure account. This time they have given us receipts and payment account. We need to prepare income and expenditure account. Be ready for it. Okay. So let's start question number 5. Question number 5. ZB Club furnishes you receipts and payment account. This time they have given us receipts and payment account. You are required to prepare. At the end of the question, they are asking you income and expenditure account and balance sheet also. Okay, same format, same, everything same. Students who are remembering plus or minus, they have to change their answers. But here, we have to follow the same accounts format. Come to the question. In receipts and payment account, they have given us opening cash and opening bank balance, 2 donations, 2 subscriptions, 2 entrance fees, interest on investments, interest from banks, sale of old newspapers, sale of drama tickets. Payment side, salary, repair expenses, furniture. In furniture means what? Payment side furniture means they have purchased furniture. If you remember the previous question, we have recorded in credit side buy furniture. Exactly, they are showing it. This is purchase of furniture. And investments, miscellaneous expenses, insurance premium, billiard table and sports equipment, stationery expenses, drama expenses, closing cash and closing bank balance. And information. So we have given information about 31st March 2022. So they are telling us subscription arrears for 21-22. Nothing but this is called what? Opening arrears. And in advance for 22-23 means that is called closing advance. Am I right? 21-22. So 21-22 means this is closing arrears then. 9,000 is closing arrears. We are preparing on 22 only, no? Yes, closing arrears is there and a closing advance is there. And 400 was insurance premium outstanding. So before that, can we prepare subscription account comfortably? So you also open question number 5, subscription account. Same as previous problems, nothing to be changed. Question number 5. We have to prepare subscription account. So opening arrears 0, closing arrears. Opening advance is 0, closing advance has been given. Closing arrears 9,000, closing advance 3,500. 9,000, 3,500. They have given us receipts and payment account balance. We need to find out income and expenditure balance. How much receipts and payment account subscription? 1,20,000. So 1,20,000. And balancing figure is our income and expenditure account balance. So everybody please do it. 1,20,000 plus 9,000. 1,29,000 minus 3,500. So we got subscription amount of 1,25,500. So that is correct. We got correct answer as usual. What next after subscription? Go to adjustments. Point number 1 is and point number 2. 400 was insurance premium outstanding as on 31st March 2022. Nothing but closing outstanding is there for insurance. Any adjustments are there for insurance? No, except payment is there. Again, as usual, let's open insurance premium account. So opening outstanding is there 0, no? Closing outstanding they have given us how much? 400 rupees. And they have given us receipts and payment account. How much receipts and payment account balance for insurance premium? 2,000 rupees. And tell me how much do we record under income and expenditure account for insurance premium as a debit side item. So we need to pay totally. So we got 2,400. Next one, after insurance, the next adjustment is miscellaneous expenditure prepaid. No issue, I'll just open miscellaneous expenditure account. Whether that is opening or closing prepaid. If nothing is given, that is closing prepaid only. Where to write closing prepaid? Credit side. Opening debit, closing credit. Apart from it, remaining all are 0, except they have given receipts and payment account. How much receipts and payment account miscellaneous expenses? 5,000 rupees. If you close it, you will get balancing figure 4,100 is your miscellaneous expenditure. That is your expenditure balancing figure. And then 50% of donation is to be capitalized. What is total donation we received? 50,000. Out of 50,000, 50% capitalized means remaining 50% is revenue. We should record in our income and expenditure only revenue. That means how much we should record? Only 25,000. Remaining 25,000 we should record it balance sheet. Next one, Entrance fees totally revenue income only, so we can record total entrance fees. How much entrance fees? If it is capital, I should not record income and expenditure account. I can record. And 8% interest has accrued on investments for 5 months. We'll discuss this point later. Point number G also we'll discuss later. So right now let's open directly the requirement of the question. What is that requirement of the question? We need to open income and expenditure account. Yeah, tell me one by one. The first item is subscription. No, tell me, is it income or expenditure? Subscription, income only. Right on credit side, by subscription. How much subscription? Tell me. Already we have done our working note. No, subscription, if I am not wrong, 1,25,500. Apart from it, what is the next working note? Insurance premium, expenditure, debit side, 2 insurance premium, 2,400. Am I right? Yes. 2 insurance premium, 2,400. And then miscellaneous expenditure, 2 miscellaneous expenditure, 4,100. And then all adjustments are done. Go to question, let's write one by one. Opening cash, no need to record. Donations, 50,000, we should record only half. That means how much? 25,000. Donation is income or expenditure? Income only. Why I am recording only 25,000? Because they are telling us 50% or capital, 50% or revenue. I should record only revenue donations in income and expenditure account. And then subscription is done. Entrance fees, they have given an adjustment. Entrance fees is only revenue. We can record revenue only. No, income by entrance fees 10,000. Why I am writing entrance fees here? They are telling us that is revenue only. If that is capital, I will not record in income and expenditure account. After entrance fees, interest on investments, we received 1,000 rupees. They are given one adjustment. Adjustment number F. 8% interest has accrued on investment for 5 months. What is investment value, by the way? Investment value 60,000. 60,000 into 8% into 5 by 12. That means how much? 200 rupees. Please calculate. 60,000 into, what is the percentage, by the way? 8%. Into 5 by 12. I got 2,000 plus this is 2,000 rupees interest receivable. Already we received how much in receipts and payment account? 1,000. That means total interest is how much? 3,000. Already I told you, in income and expenditure we should record both received and receivable amount. 1,000 already received, 2,000 is still receivable. So I can write 1k plus 2k. This 2k is still receivable. We should show in balance sheet also. Okay. Next one. Interest from banks, 4,000. No adjustments, write directly. So receipt or payment, I mean income and expenditure. Income only by interest. How much? 4,000 rupees interest from banks. And next adjustment, sale of old newspapers, income only by sale of old newspapers. By sale of old newspapers. How much sale of old newspapers? Tell me. 1,500. Drama tickets 10,500. Sale of drama tickets 10,500. Buy sale of drama tickets 10,500. And then credit side salary is not done. For the first time, no adjustments for salary. Write directly on debit side to salary. How much salary? Write directly 20,000. Repairs, no adjustments. Write directly to repairs. How much repairs? 5,000. And then furniture, we should not record the amount, but we should record depreciation. Furniture opening figure is there, but no information about closing figure, no information about depreciation also. They are not talking about anything, ignore about it. And if any sale is there for furniture, nothing is there. After furniture investments, no. Expenses done, insurance done, stationary expenses are there, 2 stationary expenses. 2 stationary expenses. How much stationary expenses? 1,500. Drama expenses 5,000. 2 drama expenses 5,000. And then closing cash, closing bank, it will not appear in our books. So I think everything is done except point number G. So they are telling us sports equipment opening is there, closing amount was not paid in previous year. Okay, that will not affect my income and expenditure account. I request to each and everyone, so please check whether we missed any point, otherwise please do balance it. I'm just turn off my camera, then it will be more visible to you. 1,25,500 plus 25,000 plus 10,000 plus 3,000 plus 4,000 plus 1,500 plus 10,500 minus 2,400 minus 4,100 minus 20,000 minus 5,000 minus 1,500 minus 5,000, you will get 1,41,500. So that is what? That is surplus, to surplus. So my income and expenditure account is done. So they are also asking us balance sheet. I'll prepare balance sheet for the first time in our NPO chapter. So balance sheet. How to prepare balance sheet? Tell me all assets, whatever you have observed. So we have observed closing cash and closing bank. Closing cash is there, closing bank is there. So closing cash 26,500. Closing bank 72,500. After 72,500 or 72,000? 72,000 only. Apart from it, tell me what are the other assets? Look at the entire question. Assets. Investments are there, no? Investment 60,000. Assets. Investment 60,000. Just we have recorded in our chapter. Interest receivable. Receivable is also asset, no? Interest receivable 2,000 rupees. Investment 60, that is different. Interest receivable is different, right? Separately. And then billiard table equipment. This is only purchase payment. So cost is at the end. How much billiard table we have? We have 3 lakh rupees. So write billiard table 3 lakh rupees. And then any assets over there? I think furniture is there. There is no opening furniture. So 60,000 will be closing furniture. Furniture value 60,000 rupees. Furniture 60,000 rupees. Any lands, any buildings are there? I think one building is there. no buildings are there. Okay, no problem. Apart from it, no fixed assets, but some current assets are there, no? Closing subscription arrears are there. How much closing arrears? Go to your subscription account and tell me. If I am not wrong, subscription arrears is here, 9,000 rupees. Similarly, on opposite side, we have to write what? Closing advance. Closing advance is also there. How much closing advance? Closing advance is 3,500. Apart from it, what are the current assets and liabilities? All prepaid, everything write down. Closing only. Subscription account we have recorded. Next one, insurance premium is there, no? Closing outstanding is there. Closing outstanding liability. Closing outstanding insurance premium. They are showing how much closing insurance premium? 400. Check it out. 400. What else? Any expenditure, any prepaid, miscellaneous is there. Closing prepaid. Prepaid means asset only. Write on asset side. Closing prepaid. How much? 500. 900. Yeah, 900. Tell me what we have ignored. So capital fund is there. I should add surplus. How much surplus I got? 1,41,500. I think some capital items are there. I think donation, something is there. Only capital. 50% donations is capitalized. Nothing but special donations are there. So I can say specific donations 25,000. And if I'm not wrong, everything is done. Capital fund is done, donations is done, surplus is done, advance is done, subscription advance is done, asset side, cash done, bank done, investments done, accrued interest done, furniture done, prepaid expense arrears. Yeah, everything is done. My balance sheet automatically tallied. Please do check it out, everybody. I'll also check 26,500 plus 72,000 plus 60,000 plus 2,000 plus 3 lakhs plus 60,000 plus 9,000 plus 900. 530,400. Am I right? Yeah, the balancing figure is 170,400. So my total is correct, 530,400. Automatically balancing figure is capital fund. So you have to just write balancing figure as capital fund, but still that capital fund you could not write directly. You have to open opening balance sheet. But students will get confused about this figure. So this, look at point number G, everybody. Billiard table and other equipment costing 3 lakhs were purchased in the financial year 2021. That means last year we purchased the table for 3 lakh rupees, and of which 80,000 was not paid on 31st March 23. That means for previous year ending that is not paid. That means that is outstanding for previous year. You can observe the screen, everybody. This is unpaid for previous year. You can come to a question in current year payment. They are showing on credit side exactly same amount. Please look at the screen, everybody. Buy billiard table 80,000. So what is the meaning of this highlighted point? This amount not paid in previous, they are paying in current year. So this amount will appear in last year balance sheet, not current year balance sheet. Because they are showing this is balance as on previous year, not in current year. That is paid in current year. This is the proof. Okay, actually you can take directly balancing figure here, but you should not take that. If you have time, prepare opening balance sheet and you will get the same figure. You don't worry. Okay, this is how they can ask a question from NPO on second model. Okay, in recent exam they have asked a question from our material only. The question is exactly same as our question number 7 in our material, that is RR Clinic. Please read the question number 7 and please do open. If you don't have a BCCA material, open recent June exam question paper. June? No. December 25 exam question paper. Same question you can observe in your screen. Okay. Please open question number 7, everybody. Question number 7, exactly same question, copy pasted in recent December 25 examination paper. I'll show you the paper as well. Yes, question number 4A, receipts and payment account of RR Clinic. Same question. 4B is single entry system. Yeah. Come to the question. The following is the summary of receipts and payment account of RR Clinic. Again, they have given receipts and payment account. Opening, so what they have given summary. Opening cash balance, donations received 1,55,000, out of 55,000 are building fund. That means balance or revenue in nature. 50,000 is capital in nature. Payment to creditors for medicine supply. Please highlight this one, because medicines is there. Salaries, purchase of medical equipment, medical camp collection, subscriptions received, interest on investments, honorarium to doctors, telephone expenses, medical camp expenses, and medical camp expenses are 10,500, miscellaneous expenses are 7,000. Subscription due, nothing but opening arrears, closing arrears, advance subscription opening and closing, stock of medicine, please highlight, medical equipment, building, creditors for medicine supply, please highlight, investments opening and closing. You are required to prepare receipts and payment account and income and expenditure account and balance sheet. They are asking all the three. So before that, as usual, let's prepare receipts and payment account first. So question number 7. So as usual, as per our practice, I have to open receipts and payment account. I'm sorry, I have to open subscription account. Subscription account. Tell me what is there in subscription account. First, opening arrears. How much opening arrears they have given us? 10,500. Closing arrears 15,400. 10,500. Closing arrears 15,400. And opening advance is there. How much opening advance? 8,400. Closing advance 4,900. Apart from these two, we know income and expenditure on debit side, receipts and payment on credit side. They have given us receipts and payment account subscription. How much we received? 3,50,000 rupees. Right on credit side. And please do balance. You will get income and expenditure amount. Please do every 8,400 plus 3,50,000 plus 15,400 minus 10,500 minus 4,900. We got 3,58,400. We should write this amount in income and expenditure, this amount in receipt and payment account. We need to prepare both those statements. And as usual, what is the next adjustment? Ignore highlighted one. Medical equipment, nothing but asset. Opening figure is there, closing figure is there. Any adjustments are there? Please do check for medical equipments. Yes, purchase is there. Let's open medical equipment account, nothing but asset account. medical equipment account. Tell me what is opening figure of medical equipment? Opening figure 1,47,000, closing figure 2,41,200. 1,40,000, closing figure 2,14,200. Apart from it, any adjustments are there for medical equipment? Yes, purchase of medical equipment is there. So where to write? To cash or bank 1,05,000. Please do balance it. Everybody, 1,47,000 plus 1,05,000 minus 2,14,200. So 37,800 is balancing figure on credit side. That is nothing but what? Depreciation only. We should record to cash in receipts and payment account, by depreciation in income and expenditure account. So with that, equipment account is done. And then building, opening 3,50,000, closing 3,15,000. Nothing but the balance is what? Depreciation only, no adjustments. We can open a building account. Building account. Opening 3,50,000, closing 3,15,000. No adjustments means depreciation 35,000. Okay. Creditors will discuss. Investments opening, closing both are same. No need to open account. So finally, let's open requirement of the question. So this time let's open two accounts simultaneously. So let's open a receipts and payment account on one side. Other side, let me open income and expenditure account. Super. So let's first start with adjustment. Subscription, income and expenditure 3,58,400, receipts and payment account 3,50,000. First go to receipts and payment account. Receipt side, to subscription. To subscription. How much? 3,50,000. In income and expenditure account, by subscription 3,58,400. Subscription is done. What next? Medical equipment, to cash, recording receipts and payment account. Buy medical equipment 1,05,000. 1,05,000. Debit side, to depreciation. How much depreciation? 37,800. Building, only depreciation, no purchase, no sale, so no cash. 35,000 building depreciation. Adjustments are done. Go to question. Let's write one by one. Opening cash, record on receipts and payment account. To balance brought down 56,000. To brought down 56,000. And then donation received. Total received 1,55,000. Write total on receipts and payment account first. Two donations 1,55,000. Out of 1,55,000, 50,000 for building. Remaining how much? 1,55,000 minus 50,000. 1,05,000. That is only revenue in nature. Go to income and expenditure account, by donation only 1,05,000. Why 1,05,000? Remaining are capital donations, we have to record in balance sheet. Next one, payment to creditors for medicine supply, we'll discuss it later. Salaries, no adjustment, no. payment side by salaries 70,000, income and expenditure account 2 salary 70,000, and then medical equipment 10, medical camp collections receipt no first 87,500, income and expenditure credit side income 87,500, medical equipment, sorry, medical collection, and then after that subscription point done, interest on investments 9% per annum, first record how much you received 63,000, yeah, 63,000. So what is investments originally? 7 lakhs. What is interest rate? 9%. 7 lakh into 9%, 63,000 only. Total money received. So go to P&L account, write on interest 63,000. No receivable, no payable. Total money received. Next one. After interest, honorarium to doctors, payment to honorarium to doctors. In receipts and payment account by honorarium. How much honorarium? Tell me. 1,50,000. 1,90,000. In P&L account debit side 1,90,000. After honorarium, telephone expenses 6,000. By telephone expenses 6,000. To telephone expenses 6,000. Medical camp expenses 10,500. Medical camp expenses 10,500. Debit side expenses, payment side. Miscellaneous expenses 7,000. Miscellaneous expenses 7,000. Credit side, here debit side. And then subscription done. Medicine is pending. Medical equipment is done. Building is done. Creditors is pending. Investment is also done. Everything is done except medicine. Sir, what is the adjustment of medicine, sir? Sir, in all previous problems, we have never seen any goods. For the first time, we are observing goods in NPO. Whenever you are holding any goods in NPO, so I'll give you treatment, listen. Whenever any stock is there in NPO, I'm telling you, listen, treatment in receipts and payment account, income and expenditure account, balance sheet. In receipt and payment account, on credit side, you have to write how much paid to creditors. Income and expenditure account, you have to write on debit side to medicines consumed. In balance sheet, you have to write on asset side stock. So how to get medicines consumed? Just your costing formula, raw material consumed is equals to opening stock plus purchases minus closing stock. So first of all, let me write the given information. You tell me what is opening stock and what is closing stock. What is opening stock of medicine? 70,000, closing 1,05,000. Opening 70,000, closing 1,05,000. And already they have given directly how much paid. How much paid to creditors they have given? Paid, highlighted, no? 2,10,000. I need what? Medicines consumed equals to opening stock plus purchases minus closing stock. You know, in your single entry, we have opening stock, we have closing stock, we need purchases. So what to do to prepare purchases, to find out purchases? What to do? We have to open creditors account. They have given us opening creditors and closing creditors. What is opening creditors balance? 63,000, closing creditors 91,000. So opening creditors 63,000, closing creditors 91,000, and paid to them is 21,000. Balancing figure is purchases. How much? 21,000 plus 91,000 minus 63,000. 49,000 is purchases. Now substitute here. Opening stock 70,000. Just now I found out purchases 49,000. Closing stock 1,05,000. 49,000 plus 70,000 minus 1,05,000. So how much consumed do we got as per this formula? Actually here paid amount is not 21, this is 2,10,000. Yeah, then our answer will get changed. That means 2,10,000 plus 91,000 minus 63,000. 2,38,000 is purchases. Yes, we are correct now. So now do it. 70,000 plus 2,38,000 minus 1,05,000. So yes, now we got the correct answer. 2,03,000 is medicines consumed. So what is the treatment for medicine? We have to record in 3 statements: in receipt and payment account, income and expenditure account, balance sheet. In receipt and payment account, you have to write on which side? Payment side, how much you paid. Income and expenditure account, medicines consumed. In balance sheet, stock, closing stock. So go to receipts and payment account. How much paid? Tell me. 2,10,000. Income and expenditure, how much consumed? 2,03,000. So now done about that point as well. Everything is done, my dear students. So opening cash, closing cash is there. No, opening cash is there. Write down 56,000. Already recorded. Everything is done. Please do close receipts and payment account first. Everybody, please do close receipts and payment account. I'll also do it. Debit side 56,000 plus 3,50,000 plus 1,55,000 plus 87,500 plus 63,000. How much? 7,11,500 minus 1,05,000 minus 70,000 minus 1,90,000 minus 6,000 minus 10,500 minus 7,000 minus 2,10,000. I got 1,13,000. That is your closing cash balance. Go to income and expenditure account. There 3,58,400, 1,05,000, 87,500 plus 63,000. Total amount. Yes. Minus depreciation 37,800 minus 35,000 minus 70,000 minus 1,90,000 minus 6,000 minus 10,500 minus 7,000 minus 2,03,000. Yes, I got surplus 54,600. This is our surplus. So my both receipts and payment, income and expenditure are completed at the same time. And requirement, they are also asking balance sheet. I don't have any problem. I can open balance sheet also at the same time. Very easy. This is the recent examination question, but asking this question for 7 marks is not a joke. They have asked balance sheet also. No, they have asked only income and expenditure. They have not asked receipt and payment account also. Very easy. Yeah, in exam they will not ask balance sheet because they are asking for only 7 marks. Still we can do it. So I told you, no, medicine stock. Tell me what is the medicine stock? Closing stock of medicine. Closing stock 1,05,000. And then some assets are there, no? Building 3,15,000. Medical equipment 2,14,200. Building 3,15,000. Medical equipment 2,14,200. And any other assets? Just now we found out closing cash. No, closing cash 1,13,000. And any other assets? Go to your question. 7, question number 7, 7, 7, not 6, 7. Investments are there, 7 lakhs. Investments 7 lakhs. I think we have recorded all. Subscription, closing arrears, closing advance. Go to subscription account. What is closing arrears? 15,400, 4,900, 15,400. Closing advance 4,900. Capital plus surplus is there, no? Surplus 54,600. Some specific donations are there, no? That is building fund. So the building donation is 50,000. And creditors are there, no, for medicines. So here we should record creditors also. Creditors on liability side. How much creditors per building in liability side? We have recorded here notes, creditors, closing creditors, 91,000, right, on liability side. So done. Remaining is your balancing figure, or you can get the same by preparing opening balance sheet also. Actually you should do it. This is marathon, I am not covering entire thing. Okay, so with this my question number 7 is also done, recent exam question. Okay, yeah, question number 8, you can easily solve it. Here one different question is there, that is question number 10. I think you have to prepare trading account, restaurant and bar. 10 or 11? 11, only 10. That means the question number 9, you have to prepare a trading account for it. Yes, question number 9 is there. You have to prepare a trading account also. Remaining all are very easy questions. Yeah, before going further, so almost we are discussing from last 5.5 to 6 hours. I think you got some amount of confidence. Again, I'm telling you the fact behind financial accounting strategy. Very simple, don't deviate. So please be perfect with accounting standards. Weightage is 26 marks, and then NPO and single entry system weightage is up to 16 to 18 marks. I am taking only 16 marks including MCQ. If you take only descriptive part, 14. But that is also our marks only, no? 16 to 18. So I am taking minimum figure only 42. So we have covered all accounting standards. I think S22 is also covered. Otherwise we'll cover later. NPO, just now we have covered in detail. Single entry system, actually in this marathon I have not covered single entry system. Why? Because in last marathon I have covered all problems in single entry system in detail. That is enough. That's why I request all students for single entry system, please go with previous marathon. So I request every one of you to prepare to follow December 25 marathon, which is available on YouTube only. So that is highly enough to score 7 out of 7. Okay, NPO we are covered right now, we have covered it. Standards are also done. That means after completion of this marathon video, you should be confident about this 40 plus marks. Of course, you cannot get 42 out of 42, at least you will get 30 out of 42. So still we have part 2, you can score another 25 to 30 marks. That means I am talking about the persons who are blindly following marathon. If you are really following my regular classes or if you have taken my recorded classes, then it will be just like a revision session to you. Okay, so of course this is marathon. There is full amount of gap or difference between recorded classes and regular classes and marathon classes. See, this is marathon, just I have to revise, and still for the benefit of students I am revising all the topics. Still, if you are interested to take recorded classes, that means if you are not confident about this particular June exams, then if you are not conceptually strong, this marathon definitely will not help you out to score 60 or 70. It will help you to get 40 to 50. So if you have not qualified in coming June exams, I hope you will qualify. If you are not qualified and if you are not conceptually strong, so believe me, without proper coaching you cannot clear your exams. So proper coaching is required. If your coaching is very much strong, no need to look at any other coaching institute, just to go with your whatever concept you have. If you feels that my coaching is not up to the mark, then I request you to take recorded classes. I am not suggesting you to take my classes. You can take any classes which are comfortable to you. Once you completed your recorded classes, then only go to marathons. Coming to BCCA recorded classes, if you take my recorded classes, hardly it will be 100 to 120 hours. You can complete the entire videos within the short span of some 1 month to 35 days. I will go by weightage only. Okay, this is not for a promotion purpose, just I am giving for the benefit of the students. Yeah, 1000 and creditors are there, no, for medicines. So here we should record creditors also. Creditors on liability side. How much creditors per building in liability side? We have recorded here notes, creditors, closing creditors, 91,000, right, on liability side. So done. Remaining is your balancing figure, or you can get the same by preparing opening balance sheet also. Actually you should do it. This is marathon, I am not covering entire thing. Okay, so with this my question number 7 is also done, recent exam question. Okay, yeah, question number 8 you can easily solve it. Here one different question is there, that is question number 10. I think you have to prepare trading account, restaurant and bar. 10 or 11? 11. Only 10. That means the question number 9. You have to prepare trading account for it. Yes, question number 9 is there. You have to prepare trading account also. Remaining all are very easy questions. Yeah, before going further, so almost we are discussing from last 5.5 to 6 hours. I think you got some amount of confidence. Again, I'm telling you the fact behind financial accounting strategy. Very simple, don't deviate. So please be perfect with accounting standards. Weightage is 26 marks, and then NPO and single entry system weightage is up to 16 to 18 marks. I am taking only 16 marks including MCQ. If you take only descriptive part, 14, but that is also our marks only, no, 16 to 18. So I am taking minimum figure only 42. So we have covered all accounting standards. I think S22 is also covered, otherwise we'll cover later. NPO just now we have covered in detail. Single entry system, actually in this marathon I have not covered single entry system. Why? Because in last marathon I have covered all problems in single entry system in detail. That is enough. That's why I request all students for single entry system, please go with previous marathon. So I request every one of you to prepare to follow December 25 marathon, which is available on YouTube only. So that is highly enough to score 7 out of 7. Okay, NPO we are covered right now, we have covered it. Standards are also done. That means after completion of this marathon video, you should be confident about this 40 plus marks. Of course, you cannot get 42 out of 42, at least you will get 30 out of 42. So still we have part 2, you can score another 25 to 30 marks. That means I'm talking about the persons who are blindly following marathon. If you are really following my regular classes, or if you have taken my recorded classes, then it will be just like a revision session to you. Okay, so of course this is marathon. There is full amount of gap or difference between recorded classes and regular classes and marathon classes. See, this is marathon, just I have to revise, and still for the benefit of students I am revising all the topics. Still if you are interested to take recorded classes, that means if you are not confident about this particular June exams, then if you are not conceptually strong, this marathon definitely will not help you out to score 60 or 70. It will help you to get 40 to 50. So if you have not qualified in coming June exams, I hope you will qualify. If you are not qualified and if you are not conceptually strong, so believe me, without proper coaching you cannot clear your exams. So proper coaching is required. If your coaching is very much strong, no need to look at any other coaching institute, just to go with your whatever concept you have. If you feels that my coaching is not up to the mark, then I request you to take recorded classes. I am not suggesting you to take my classes. You can take any classes which are comfortable to you. Once you completed your recorded classes, then only go to marathons. Coming to BCCA recorded classes, if you take my recorded classes, hardly it will be 100 to 120 hours. You can complete the entire videos within the short span of some 1 month to 35 days. I will go by weightage only. Okay, this is not for a promotion purpose, just I am giving for the benefit of the students. Yeah. So in NPO, remaining questions are similar model, except question number 9. Some restaurant is there. Yeah. Question number 9. In question number 9, there is one small new point. That is, they'll run some restaurant business. You need to find out restaurant trading account, nothing but you need to find out restaurant gross profit as well. Let me read the question. The following is a summary of cash book has been prepared by the treasurer of a club. So nothing but cash book means receipts and payment account only. Opening, subscription, entrance fees, restaurant receipts, restaurant or highlight, games and competition receipts, due to secretary for petty expenses, credit side wages, restaurant purchases and rent up to 12 months, secretary salary, lighting, competition prices, printing and postage, FD, closing. On 1st April 2021, club assets were furniture, restaurant stock and stock of prices, and 5,200 owing to suppliers means creditors. Similarly, closing balances has been given, subscription points. Everything is same as previous question. In addition, you have to prepare restaurant trading account. You know trading account, right? Opening stock, purchases plus adjustments. Nothing but we have to write net purchases and sales, closing stock. Whatever gross profit we have done, we have got, we have transferred it to our income and expenditure account, just like P&L account. So this is all about your NPO chapter. Okay, already I told you single entry system. So you please go to last marathon which is available on YouTube. So there I covered all the problems in detail. So go with those all problems, then you will get full clarity on single entry system. Okay, yeah. And then next let me start one small concept, capital and revenue transaction. In recent exam they have asked one 7 marks question from this chapter. Again that question exactly copy pasted from BCCA material. Okay, very small topic. So in this chapter we are going to discuss three topics. First one is expenditure, second one is receipts, third one is profits and losses. So what are those? Expenditure, receipts, profit and losses. The first and foremost thing is expenditure. So expenditure means, so you all know business incur cost for running their normal business activities. Those expenditures are again divided into three categories. What are those three categories? Capital expenditure, revenue expenditure, deferred revenue expenditure. Now here our target is to understand when to call one expenditure as a capital expenditure, when to call it as a revenue expenditure, when to call it as a deferred revenue expenditure. Sir, capital expenditure means very simple, sir. If you are spending your amount on something, if that expenditure wherever you are spending, if that gives you benefit for more than 1 year, or simply I can say if you are spending that amount for one asset, that may be purchase of asset or construction of asset or acquisition of asset, if you are spending an amount on asset, that is a capital expenditure. Nothing but that will give you benefit for more than 1 year. Have a look. Means expenditure related to purchase, construction of fixed asset and directly attributable cost also. Already we have covered this point in our AS 10. So whatever you are incurring, not only purchase price, directly attributable costs are also covered under capital expenditure only. So already we have covered the same point in our AS 10. Then revenue expenditure means what? Revenue expenditures means other than capital expenditure, all remaining expenditures are called revenue expenditure. Example, salary, rent, wages, electricity, all remaining are all called revenue expenditure. Sir, okay sir, now we understood capital expenditure means asset related expenditure. Revenue expenditure means really other than capital expenditure. Then what is meant by deferred revenue expenditure, sir? Actually, deferred revenue expenditure means I cannot say that is a capital expenditure. Again, that is not a revenue expenditure. For example, just now we discussed. So when to call one asset, one expenditure a capital expenditure, if that gives benefit for long term, that is called capital expenditure. If it is gives less than 1 year, that is called revenue expenditure. Deferred revenue expenditure means I cannot say it will give you long-term benefits. I cannot say it will give you only 1 year benefit also. Such kind of expenditures are called deferred revenue expenditure. Once upon a time, advertisement expenditures were deferred revenue expenditure, but right now, so as per revised standard, advertisement expenditures are always revenue expenditure. So as per revised accounting standards, advertisement expenditures are always revenue expenditure, irrespective of amount, irrespective of purpose. For example, in some questions they will say we are launching a new product, that's why we advertised for 1 crore rupees. Is it capital or revenue expenditure? That is revenue expenditure only. Advertisement are always revenue expenditure. Sir, then what is deferred revenue? Actually, for our syllabus, I am giving you just two examples. They are underwriting commission and free samples. Free samples means company is giving their products as a free samples. They are not selling it.
So if they are giving as a free samples, slowly it will inject into the people. Then people will come and they'll purchase the products. So free samples are deferred revenue expenditure, and at the same time underwriting commission. I think you know this concept in your group to corporate accounting and audit. Underwriting commission is also deferred revenue expenditure. Again, so this is all about our topic number one. What is topic number one? Expenditures are three categories: capital expenditure, revenue expenditure, deferred revenue expenditure. Capital expenditure means expenditure for purchase or construction or acquisition of asset, or we can say which is related to asset. Revenue expenditures means other than capital expenditure. Deferred revenue is a combination of both capital and revenue expenditure. That is all about the first topic. Topic number two, capital and revenue receipts. Receipts means we are getting it, our income. Again, incomes are two categories. Those are capital receipts and revenue receipts. Here, capital receipts means what? Revenue receipts means what? Sir, revenue receipts means whatever a business is receiving in the normal course of business, in the due course of business. Nothing but for a business, what is their regular income? Sale of goods. So if they are receiving sale of goods or else commission or else discount, all these regular receipts are called revenue receipts. Nothing but what we can say, revenue receipts means all receipts in the normal course of business. That means if they are receiving just like a normal business practice, that receipt is called revenue receipt. Example, sale of goods, commission received, discount received, interest received. So remaining all receipts or capital receipts. So capital receipts means other than revenue receipts. Example, I sold one asset, I am receiving cash. That is not a routine activity. Regularly I will sell goods, but I will not regularly sell my assets. Or loan taken, that is also capital receipt. I issued my shares, capital receipt. Issued debentures, capital receipt. Issued bonds, capital receipt. Nothing but if you are receiving anything, if it is a normal course of business, that is revenue receipt, otherwise that is a capital receipt. Okay, so this is also done. The third category, profits and losses. Again, profits and losses are also two categories. Those are capital profit or loss and revenue profit or loss. Capital profit or loss means other than revenue profit or loss. Revenue profit or loss means profit or loss in the normal course of business. Again, if you are selling goods, if you are getting profit, that is revenue profit. If you are getting loss, that is called revenue loss. Remaining all are called capital profit or capital loss. For example, we issued shares, we issued at a discount, that is capital loss. If we issued at a premium, that is capital profit. So regular or revenue, non-regular or capital. So on this concept, in recent examination, they've asked one question. I'll open the question paper for you guys. I think that is the first question itself. Yeah, 2B question. So please observe. Classify the following items as capital or revenue expenditure with proper reasoning. Option A, extension of railway track. Extension means they are constructing something. Construction means that is a capital expenditure. Second one, wages paid to machine operators. So we are paying regular wages. So we are not paying the wages for constructing an asset. We are paying that for operating, that is revenue expenditure only. Installation of cost of new production machine, nothing but directly attributable cost, that is a capital expenditure. Material for extension, extension means again capital expenditure. Rent paid for the factory, rent is a revenue expenditure. Payment to computer time, nothing but computer operator salary or else computer lease or hire charges, revenue. Wages paid to own employees for building something. Building means they're constructing something. This is again capital expenditure. Just this with small amount of reason, 1 or 2 lines, you will get a full marks, 7 out of 7. I will show you our material. You will observe the same question in our material. Capital and revenue transactions 28 to 31. Yeah, look at everybody, question number 1. State whether the following are capital or revenue or deferred revenue expenditure. Carriage of 7,500 spent on machinery purchased, directly attributable cost only. If we are spending any amount for the at the time of purchase of asset, that is a capital expenditure. Second one, heavy advertising cost. Ignore about heavy or low. Advertisement are always revenue expenditure. Number 3, 200 paid for servicing the company vehicle. Servicing are always revenue. We are not purchasing this, we are just servicing. Water service, revenue expenditure. Construction means capital expenditure. You can check capital, revenue, revenue, capital. Correct. Question number 2. State whether following are capital or revenue expenditure. Question number 1. Paid a bill of 10,000 of Mr. Kumar, who was engaged as erection engineer to set up a new machine. So we are paying installation cost, nothing but directly attributable cost only. That is a capital expenditure. Question number 2. Incurred 26,000 expenditure for advertisement. Advertisement are always revenue expenditure. Number 3. We are constructing one welfare center, that is again asset means capital expenditure. Come to question number 3. Same question they have asked in recent examination. If I am not wrong, you can cross verify it. Extension, capital. Wages paid, revenue. Installation of new machinery, capital. Extension, capital. Rent paid, just now we covered, no, revenue. Computer operator, revenue. Building, capital. Same question they have asked in December 25. They are very lucky. And after that, question number 4. For each of the cases numbered below, indicate whether the income or expenditure is capital or revenue. Yeah, again, payment for office extension, capital expenditure. Hiring, regular hiring, revenue. A purchase of new computer, asset means capital. We are paying some hiring charges, revenue. Fourth one, revenue, you can check it out. Fifth one, again similar model, all 5, 6, 7 questions. So I'll solve question number 7. 50,000 received from issue of shares. Issue of shares means that is not regular thing. So we are receiving abnormally, that is a capital receipt. We are issuing at premium, so we are getting profit, that is called capital profit. Second one, purchase agricultural land for 60,000, that is a capital expenditure. 500 paid as a normal revenue, that is a revenue receipt or revenue expenditure. If you are spending, no, revenue expenditure. Question number 3, PWD means we are contributing to person with disability. We are giving donation, that is revenue expenditure. We are not constructing, that is revenue expenditure only. Next one, 40,000 paid for excise duty on sugar manufactured. We are manufacturing something and we are paying some excise duty, no asset, related to goods only, that is again revenue expenditure. Last one, construction something, that is a capital. Okay, similarly question number 6 and 5 also same models. Okay, so this is one of the small topic from capital and revenue expenditure. Okay, yeah, so very good morning to everybody.
So I think after very long gap, I'm coming up with a full length video. You all are almost near to your exams, so I can understand what is your present situation. So that's why I'm here. So from today onwards, I'll dump all the content whatever relevant to your exams. So firstly, I want to just tell you something. So in this video, I'm going to discuss lease accounting entire concept. This is a recent updated material with respect to lease accounting. And then in next video, I will discuss problems on lease accounting. After that, I will release marathons part by parts. After that, I will give you updates with respect to CA and audit, and I'll give you updates about exam oriented, and I'll give you preparation tips, and I'll give you how to write exams, all those things, and I'll explain suggested answers of your seniors, everything. So everything will be uploaded from today onwards on our YouTube channel of BCCA. And one more thing, so all these materials whatever I'm going to explain from today onwards, so will be available in my Telegram group. I think some of you are already there in my Telegram group. So still, if you want this material and if you want for further updates, you can go to the Telegram group and you can find this material. So the Telegram link will be provided in description, and go there and check it out. Okay. So all the best for your exams, and directly coming into this present topic, lease accounting. So before entering into lease accounting concept, so this lease accounting is newly added chapter from 2022 syllabus. In 2016, this chapter was not there. This was newly included from 2022 syllabus. So from 2022 onwards, they have incorporated all concepts and 1 to 2 problems. They are also very small problems. That's why institute also they have not focused on this chapter. If they focused also, they try to give an MCQ from this area. But in recent past 2 to 3 attempts, they are asking one question from this lease accounting randomly. And in institute, in recent material, they have added multiple questions in lease accounting. They have taken questions from CA final material and from IFRS books. So that's why so many of students even don't aware of this fact. Institute has included few questions in new material. So that's why I also included new questions in my new book of BCCA. But still, who have already done your coaching at either with BCCA or else somewhere else, so you need to understand entire lease accounting concepts and problems. So in this video, I'm going to explain in detail full 100% clarity as well as problems. If you have watched this part 1 and part 2 videos, you can directly go to examination hall, because I'll try to cover all the syllabus. Okay, yeah. So I don't want to waste your valuable time. Let me directly start lease accounting chapter. See, for example, in your family, there may be wedding of your brother or your sister. If that responsibility is on you, for example, your father has given you some 10 lakh rupees. He told you to, so take care of all responsibility of your brother or your sister's marriage. The first and foremost thing, so still you have 1 month of time for marriage of your family member. So definitely the first and foremost thing required is you need one vehicle. For example, you need a car for 1 or 2 months for all marriage works. Can you tell me, will you buy the car for that 1 or 2 months with your 10 lakhs rupees cash? 100% your answer is no. Because your purpose is only for 1 or 2 months. So for that 1 or 2 months, buying a car is a foolish thing. What you will do? You will take car from some rental or lease. You will pay rental for that 1 or 2 months. For example, you are running a business organization. You went to some Maharashtra or Karnataka or Kerala. You will be there for 6 or 7 months. So for running your entire business organization, For example, in that state, there is a deficit of electricity. So you need a generator. Will you purchase the generator with the amount of 6 or 7 lakhs? Or else will you take somewhere for rent or lease? Again, you will go for lease. That means buying an asset or leasing an asset. Again, which is better? That is not my subject. That is not our discussion right now. Buy or lease is again discussion in your financial management subject. Sir, buying is better, sir, or leasing is better, sir. That will be discussed by your FM. But here my point is, sir, I have taken an asset on lease. Then how to do accounting? That's what we are going to discuss right now. So simply my summary is, if you need an asset for some years or some days or some months, if you are taking that asset from somewhere on lease, so what is accounting in my books of accounts? That's what I am going to discuss here. So please don't think that, sir, lease is better, buy is better. Lease or buy is discussed by our financial management subject. Here we are going to discuss about accounting for lease accounting. Okay. So before that, you all know in our group 1 we have some accounting standards. AS 110, some standards are there, no? Similarly, there is a standard called AS 19. This AS 19 is discussing about accounting for lease accounting. So from this minute onwards, whatever I am discussing with you, all are given by AS 19. I am not telling you anything on my own. Complete discussion is given by the AS 19. So that means AS 19 is dealing with lease accounting. So you can remember the standard number. If they want to ask an MCQ and easily they can ask standard number. Why? Because many people ignore this chapter completely, so they may skip this question. That's why remember AS 19 is dealing with lease accounting. And if you want more, Ind AS is also there. Ind AS number 116. They will not ask it, but just I am giving you for more details. Okay, if they are given, you can answer it. Ind AS number 116 and AS number 19 is discussing with the lease accounting. Sir, everything is fine, sir. So I understood something right now. So what I understood is, if I need asset for some days or some months or some years, rather than buying an asset, if I go for lease, that's what we are going to discuss right now. The standard number is AS 19 Ind AS 16, sir. Right. So for the sake of simplicity and understanding, AS 19 has given names to you. Nothing but if you are taking asset on lease, you are called as lessor. Lessor means person who is, lessee. Lessee means person who is taking asset on lease. If you are taking asset on lease, you are called as lessee. Lessee means who is using that asset, who has taken that asset on lease. Lessor, L-E-S-S-O-R, lessor. Lessor means the person who is giving an asset to you on lease. Nothing but he is the owner of the asset. You are just a tenant. I cannot say tenant, but you are using that asset. Okay. So here I am introducing to two terms. One is lessee, second one is lessor. Lessee means person who is taking asset on lease, nothing but person who is using that asset. In our example, you are lessee or we are lessee. We are taking car on lease. Lessor means the person who is giving asset on lease, nothing but who is the owner of the asset. So these two terminology is given by our AS 19. What are those two terminologies? Lessee, lessor. Okay, and come back to the applicability of AS 19. So AS 19 is applicable to all leases. So this point is again important for MCQ area. If I am examiner, if I am paper setter, definitely I'll ask MCQ from this area. So what is that area? It is applicable to all leases other than means, so it is not applicable to these three areas. For these three kind of leases, AS 19 is not applicable. The first one, natural resources like mines, oil, gas, quarries. For this natural resources, it is not applicable. Second one, motion picture films like video games, all patents, copyrights, all intangible assets. For these kind of things are also AS 19 is not applicable. Third one, lease of land. So if we have taken land on lease, for this AS 19 is not applicable. For example, you have started one business in some remote area where you have taken some 10 acres of land for lease. For that lease of land, the standard is not at all applicable. It has separate standard. It will be discussed in your further final level. Okay. As of now, what is our point? AS 19 is not applicable to three leases. The first one is natural resources. Second one is motion picture films and video recordings or video games, and patents, copyrights, such kind of intangible assets. And the third one, lease land. Lease land means if you have taken land on lease, for you also AS 19 is not at all applicable. Okay, so here I have given you two important MCQ areas. Number one, standard number AS 19, Ind AS number 116. Number two, they can ask an MCQ is not applicability of AS 19. It is not applicable to three areas. The number one is natural resources. Number two is motion picture films and video games, all those things. Number three is lease land. Okay. Again, get back to our normal discussion. For example, you listen. For example, you have taken responsibility of your sister's marriage. You need a car for some 6 to 7 months. You have taken car on lease from me. Now I am lessor, you are lessee. Okay, listen. For example, my car value is some 10 to 12 lakhs or 12 lakhs or 10 lakhs for simplicity, 10 lakhs. You have taken that car on lease. Our agreement is every month you have to pay some 25,000 to me. That is our agreement. Why you have to pay 20,000 to me? You are using my car. That 25,000 is called lease rentals or lease payments. Lease rentals or lease payments means amount to be paid by the lessee to lessor. That means you have to pay amount to me because I am lessor, I am owner of the car. So you are paying that amount. Why you are paying that amount? Because you are using that asset. So for the consideration, you are paying some amount to me. In our example, you have to pay 25,000 every month to me, or every year, depend upon our agreement. Whatever lessee is paying to lessor, that amount is called lease rentals or lease payments. Here everything is fine. So you are paying every month 25,000 to me. Definitely the basic fundamental, no? When you are using your own car, you will take all care. Okay, whenever you are starting your car, you will clean all those windows, all glasses, everything. When you are using your friend or someone car, you will not take care of anything. I know that. So similarly, you will use that car. That means you feel that I am paying it so I can use in 100% efficiency. That's why what is going to happen after 6 or 7 months, definitely the total car will get damaged. Here my point is, after 6 months, if you give back my car to me, if that car value, it will not be around 10 lakhs because you have used it in all 100% efficiency. So there may be some kind of damages, or there may be some problems in engine, or else some other problems in gearbox, somewhere. So definitely when I am giving my car only, I have to tell one thing. So my dear lessee, take this car on lease. Every month you have to pay 25,000 to me. But remember one thing, after 6 months, our lease term is completed. You have to give back my car to me. But remember one thing, after 6 months, definitely this car resale value, or I can say your residual value. Residual value means what? At the end of lifetime, what is the value? Similarly, at the end of 6 months, this car value should be some 8 or 9 lakhs. Why it is 8 or 9 lakhs? I know as of now its value is 10 lakhs. After 6 months it is depreciated, it should be 9 lakhs only. If it is decreases by 9 lakhs, if it is come to 8 lakh or 7 lakhs, you have to compensate that extra amount to me. First of all, in our depreciation chapter, you know residual value or scrap value or realizable value. So here our salvage value. Scrap value means what in your depreciation chapter? Scrap value means at the end of lifetime, what will be your asset value? In this chapter, residual value means at the end of lease term, what is my asset value? So you have observed on your notes, residual value means estimated fair value of asset at the end of lease term. I said similar to scrap value, but not same as scrap value. Scrap value means what? Scrap value means at the end of life of asset. Here at the end of lease term. In depreciation chapter, we are using asset. That's why we call it as at the end of lifetime. Here we are not using asset. Lessee is using asset. Here residual value means at the end of lease term, what could be that asset realizable value? That is called residual value. In my example, I said 8 lakhs is residual value. Lessee may say, no sir, that is not possible. So this car is already used properly. I know that, I have some knowledge on cars. So it will not be 8 lakhs. I will guarantee up to 7 lakhs. That means lessee is guaranteed to lessor that sir, after 6 months this asset value would be 7 lakhs. If it is less than 7 lakhs, it becomes 6 lakh 50 or 6 lakh 80. I will pay that deficit amount 50 or 20,000 to you. That means he is guaranteeing. Who is guaranteeing? Lessee is guaranteeing to lessor up to some residual value. I said 8 lakh is residual value, but he guaranteed me up to only 7 lakh 50,000. 7 lakh 50,000 is called guaranteed residual value. Guaranteed residual value means residual value which is guaranteed by lessee. Here I am telling you two words. One is residual value. Second one is guaranteed residual value. Residual value means what? At the end of lease term, what is fair value of asset is called residual value. Guaranteed residual value means how much lessee is guaranteed to lessor. So in our example, 8 lakhs is called residual value, 7 lakh 50,000 is called guaranteed residual value. Remember, so out of 8 lakh, he guaranteed how much? 7 lakh 50,000. The remaining 50,000 is called what? Unguaranteed residual value. Sir, how could I get unguaranteed residual value? Use your common sense, man. So, total residual value 8 lakh minus guaranteed 7 lakh 50. The balance 50 is called what? Unguaranteed residual value. Clear up to here? So that is residual value, guaranteed residual value, unguaranteed residual value. So if you really follows last a 20 minutes discussion, definitely you should understand few terms. First one is lessee, second one lessor, third one residual value, fourth one guaranteed residual value, fifth one unguaranteed residual value. What is the meaning of lessee? Lessee means the person who is taking asset on lease. Lessor means who is giving that asset on lease. So residual value means estimated fair value at the end of lease term. Guaranteed residual value means it is a part of residual value guaranteed by lessee. Why lessee? Because he is using that asset, no? Unguaranteed means the remaining part. And then, so AS 19 has divided entire total leases into two categories. They are finance lease and operating lease. These are called types of leases. Now you understood what is the total concept of leases, no? So for the sake of accounting purpose, so AS 19 has divided total leases into two categories. One is finance lease, second one is operating lease. So now you have to identify one lease by looking at that lease as finance or operating lease. Sir, how can I identify whether that is finance or operating lease? Very easy. Have a look. Finance lease means it transfers substantially all risks and rewards to the ownership to lessee. Nothing but for example, I'll give you an example. For example, you are staying in one apartment for rental purpose. Okay, every month you are paying some 15,000 to your landlord because you are as a tenant, you are staying in that apartment. For example, you are in one apartment, there is some kind of what you call repairs, there may be some water leakages. So definitely, who has to bear all those repair expenses? You will not bear all those repair expenses. Definitely, you will intimate that information to your landlord, your owner. He will take care of all those things. That is normally what happens. That means risk of that building is with the owner only. If there is any government benefits are coming from government for that apartment, definitely it will belongs to your owner only. That means for that building, risk and reward are always with the lesser, that nothing but your owner only. You are just staying in it. He is not transferring risks and rewards to you. Risks and rewards are always with your owner only. That is called operating lease. Operating lease means you are just staying in that apartment or house or whatever it is, you are paying lease rentals. Any risk or any reward also. Reward means benefit. Both belongs to your owner only. Similarly, if you have taken any asset on lease, if you are just paying lease rentals to your lessor, all risks and rewards are with lessor only, then that lease is called operating lease. No sir, lessor transfers all risks and rewards to lessee. In that case, that lease is called finance lease. For example, we have taken 10 acres of some mango farm or whatever it is, some farm on lease. In that next to 10 years, we have to spend all expenses for all medicines or all kind of chemicals, all those things. And if there is any benefit from the government, that also belongs to us. If our agreement is like that, in that 10 years, if any reward comes from government or any rewards on this particular land, that belongs to lessee, or if any expenses or repairs or anything else, that's also bear by lessee. That means in this case what happened, risk and reward both are transferred from lessor to lessee. Normally they are with owner only. If they are transferring, that lease is called finance lease. That means simply what we can say, if risks and rewards are with lessor, that lease is called operating lease. If they transfer to lessee, that is called finance lease. That's it. Okay. But telling this point is very easy, no? So what is that point? If risk is with lessor, that is operating. If it is with lessee, that is finance lease. But once they have, for example, they have given one example. X is a person who is taking one asset from Y. Tell me this is operating or finance lease. You have to tell them whether that lease is operating or finance lease. You have to identify that lease is which category of lease. You don't worry. AS 19 has given 5 conditions. Very, very important area. They can ask a question from this area. 90% chances are there. They can ask question from this area. Not theory question. You have to apply these conditions and you have to conclude, you have to come to conclusion that lease is operating or finance. So they have given 5 conditions. 1, 2, 3, 4, 5. Who has given AS 19? If any one, not all, if any one condition is satisfied, that lease is finance lease. I said if any one condition. For example, condition 1 not satisfied, 2 not satisfied, 3 not satisfied, 4 not satisfied, but 5 is satisfied, then that lease is a finance lease. or condition 3 only satisfied, remaining all are not satisfied, that is a finance lease. If any one satisfied, that lease is a finance lease. If none of 5 is satisfied, all conditions are failed, in that case that lease is a operating lease. Here I said any one condition. If any one condition is satisfied, that lease is called as finance lease. If all conditions are failed to satisfied, that lease is called operating lease. Okay, so let me enter into the 5 conditions, very important. Yeah, come. Condition number 1. For example, you all know whenever we are entering into one lease, definitely there need one agreement. Nowadays everything in agreement only, no, without agreement we cannot believe anyone. So there is an agreement called lease agreement, which is in between lessor and lessee. They will write all terms and conditions in that agreement. For example, in that lease agreement, there is one condition. The condition is, for example, I am lessor, you are lessee. I have given my car to you on lease. For example, lease term is 15 years. Think practically. After 15 years, still my car will be in usable conditions? No, obviously no. Car life is almost 15 to 20 years, no? So I felt, yeah, 15 years is enough for that car. After 15 years, I will give my car to you at free of cost. I repeat, after 15 years, I will give my car to you at free of cost. That means, in the lease agreement, if there is any condition that says, at the end of lease term, automatically ownership of that car will be transferred to lessee at free of cost. Now you should get one doubt. Sir, why lessor is giving that asset to lessee at free of cost? Imagine he has benefited from lessee for 15 years. Every year I am getting amount from lessee. I felt that is enough for my asset. That's why I am giving that asset to lessee at free of cost, because that is very scrap. No, I will not get big amount from that asset. I felt if you use this car for 15 years, I will give you at free of cost. If that is in agreement, that asset is a finance lease. Have a look. The lease transfers ownership of asset to lessee at the end of lease term. If that lease agreement says it will be transferred to lessee, that lease is a finance lease. No sir, that condition is not there in agreement. But another condition is there. That condition is, my dear lessee, use this asset for 15 years. After 15 years, I will sell this asset to you, but option is with you. If you want, you can purchase. If you don't want, you can ignore. But remember, after 15 years, if the market value of asset is some 2 lakhs, I'll give you for 50,000 only. That means I will give you at less than market price. That means I want to give benefit to you. In condition number 1, what happened? I'm giving it free of cost completely. In condition number 2, I'm giving at less than market price. I will charge some amount, but it will benefit to lessee. But here option is with lessee. For example, if lessee don't want, he cannot take it. That is not a compulsory obligation. That's why I told you, lessee has option to purchase the asset at lower than market price. Even if a lessee is not interested to buy, I am not forcing him to buy that asset. I said option to purchase. Try to understand difference between number 1 and number 2. Number 1 says, I am giving it free of cost. Number 2 says, I will give you at less than market price. If market price is 2 lakhs, I will give you at 1 lakh only, because I want to give benefit to lessee. Number 3. Condition number 1 is not there, 2 is not there. But condition number 3 is, for example, I have one asset. That asset life is 10 years. I am giving that asset to you on lease for 9.5 years. After 9.5 years, if you give back that asset to me, what can I do with that asset? Asset life is almost closed. If that asset major life is with lessee, that lease is also called as finance lease. Sir, how can I say major or minor? If that asset life is more than 70%, we can say that is finance lease. That means what? For example, my asset life is 10 years, I am giving you for 8 years or 9 years, so that is a finance lease. Here percentage is not a big thing, but try to understand if that is major life, that is a finance lease. Condition number 4. For example, you are in some business, you need some kind of furniture. I am in furniture business, but you don't want to purchase furniture, you want to take furniture on lease from me, and you have some specifications. I have designed furnitures as per your requirements, your company logo, all those things. That means that asset is designed for you, that is customized in nature, that is specialized in nature. That lease is also called as finance lease. If that asset is a customized or specialized means designed for that lessee only, that asset is also called as finance lease. So with this I have covered 4 conditions. Condition number 1. Okay, first 4 conditions are theoretical conditions. First point says I will transfer ownership. Second point says option is with you. Third point says major life. Fourth point is specialized. But fifth point is it is problematic point. That means you have to calculate, okay, numbers, quantitative conditions. What is that conditions? Very, very important. Present value of minimum lease payments. Nothing but whatever rentals you are paying, you have to take it to present value. Sir, how to take rentals into present value? I think you know in your financial management subject. For example, every month you are paying 25, 25, 25, 25. You have to take all that amount into present value by using present value factors or present value annuity factors. So if that amount is substantially equals to fair value of asset, substantially means almost equals to, nothing but 90% or more, so that is called, that if that is almost equal to fair value of asset, that condition is satisfied. If then that asset is, that lease is also called as finance lease. What you have to understood? If you have taken all lease payments into present value, if that value is almost equals to, you can say 90% of your fair value of asset, that lease is a finance lease. For example, my asset fair value is some 10 lakhs. I have taken all lease payments into present value. That present value is 9,10,000. That means what? Almost 90%, greater than 90%. That lease is a finance. If this is a 7 lakh or 6 lakhs, that lease is not a finance lease. Subject to conditions, remaining 4 conditions are not satisfied. Are you getting my point? Yeah. So this is how the total basic fundamentals of this AS 19. So this is, I'm not discussed any accounting from, I mean up to the last 35 minutes. Just I discussed all fundamental terms and conditions. So definitely all this, the last 30 minutes are productive only. So with this you should understood one point very clearly. So how to identify one lease as operating or finance? How to identify it? If these 5 conditions, if any one is satisfied, that is finance lease. If anyone is not satisfied, that is operating. Nothing more than that. Okay. Now come back to the treatment of finance lease. Treatment means what is accounting treatment. So in books of lessee, lessee should record both asset and liability. So remember one thing, for example, so you have taken car from me for your family members marriage, so you are keeping your car in front of your gate, so you should feel that car as an asset. At the same time, you have liability also. What is the liability? You have to pay amount to lesser every month. Why that is asset? Maybe physically that is not your asset. But what is asset? You can use that asset. That is called right of use. Right of use, ROU. You all know in accounting there are two types of assets: tangible assets, intangible assets. Here, this is your intangible assets, ROU. ROU stands for right of use or right of uses. Here, this car is not belongs to you, but you can use that car. So that's why ROU is your asset. At the same time, you have to pay amount to lesser, that is called lease liability. Lease liability is your liability. That means if you have taken any asset on lease, nothing but if you are lessee, you are holding both asset and liability. That means in your balance sheet, you should record on liability side lease liability, on asset side ROU. What is the meaning of ROU? Right of use. That means you should record both asset and liability in your balance sheet. What is the asset? Right of use. What is liability? Lease liability. That means lessee should record both asset and liability. Why asset? Because you have right to use that asset. Why liability? You have to pay amount to lesser. Sir, everything is fine, sir, but how much should I record? How much amount? So this is the amount. Lower means which is lesser, of fair value of leased asset at the inception means beginning or starting, or present value of minimum lease payments, whichever is lower. For example, our asset as of now, today is I am giving you asset on lease, as of now fair value is 10 lakhs. So we are taking all future payments into present value, that value is 9 lakhs. Now you have to take whichever is lower, 9 lakhs. You know we have to write liability is 9 lakh, asset is also 9 lakh, whichever is lower. What are those two things? One is your asset fair value as on today, and second, present value of future payments, whichever is lesser. Fine. So that is how we have to record. Who has to record all these things in the books of lessee? Lessee means who has taken that asset on lease. This treatment is only for finance lease only. This is not applicable for operating lease. Okay. So what you understood? If that lease is a finance lease, in the lessee books, you should record both liability and asset. Okay. Liability and asset, same amount. How much? Lower of these two. Okay. Yeah. Sir, done, sir. What if it is the operating lease? If it is operating lease, in the books of lessee, he should recognize as an expense in P&L account on a straight line method basis. That means in finance lease, you should record both asset and liability. Use your knowledge and try to correlate. At the beginning, I told you, in finance lease, ownership will be, risks and rewards will be transferred to lessee. That's why you should record as an asset in your balance sheet. If that is a operating lease, that means you are in apartment, you should not take any risks and rewards. You are just paying your rents as an expenditure. That's why we should just record in P&L account, but you should follow SLM means what? Straight line method basis. That means in operating lease, no need to record in our balance sheet. Just record in P&L account, just like other expenses, nothing more than that. Okay. But if it is in lessor books, what to do? So you should record it as normal owner only. He should record in his balance sheet fixed assets. He will follow S10, all those things. So lessor is normal, like all whatever we are holding asset, we should follow normal S10, no? That's how you should follow. Here important is lessee books. What you have to understood, if it is a finance lease, you should record both asset and liability. If it is operating lease, just you should record in P&L account. Clear? So the last concept is sale and lease back. So very interesting topic, sale and lease back. Okay, so generally students feel this concept as difficulty concept, sale and lease back. If you observe that picture also, little bit confusion, all those things. So before discussing sale and lease back concept, I'll ask you one question and just give me the answer. For example, you have 1 crore rupees house with you. You don't have any other assets. You don't have any car. You are staying in that house. House value is 1 crore rupees. Okay. You don't have any other assets. Unfortunately, you required some 90 lakh rupees cash for your parents' health issue, some operations or something. No bank is ready to give 90 lakhs rupees to you as a loan, but you need 90 lakhs rupees cash. You have only one option, that you have to sell your house value of 1 crore rupees. If you sell that house for 1 crore rupees, for purpose will get fulfilled, you will receive 90 lakhs rupees cash. But you have to vacate that house. And you have to shift it to another house and you have to pay again some rentals. But you don't want to leave that house because you have some memories with you, and due to some all those things you don't want to vacate that house. That means you don't want to vacate that house, but you want to sell that house because you need money. In that case, tell me, here my requirements are to, I need 90 crore rupees cash, but I will not leave this house. Then what is the way to fill the requirement of this person? In that case, we have one solution. For example, you are that person, you are in that 1 crore rupees house. Just sell that house to me, take 90 lakhs rupees, take it. So pay that amount to hospital. First purpose fulfilled. Purpose number 2, don't leave that house, stay in that house only. Every month give me my rental amount. That means what happened? Firstly, you are owner of that house. You are selling it to me. That means you are seller, I am buyer of the house. Immediately what happening? I am giving that asset to you. Now you will become lessee, I am become lessor. In the present example, I am showing one machinery, one vehicle. Here what happened? First you are selling that asset to me. You are seller, I am buyer. Immediately I am giving that same asset to you again as a lease. Now I am lessor, you are lessee. You understood, no? Now you got amount and now you are staying in the same. You are using the same asset. That means what? Seller will become lessee, buyer will become lessor. Try to understand, no confusion at all. You are first selling that asset and again taking that back on lease. That's why we are using that name, sale and lease back. I am taking back that asset but on lease, not purchasing. Now what happened? Now you are holding two positions. Number 1, you are seller. Number 2, you will become lessee. I am also holding two positions. First I am buyer and I became lessor. This concept is called sale and lease back. Okay. So, sir, I understood sale and lease back concept, sir. First, one person is selling asset to another person, and the same asset he will take back as on lease. Now, seller will become lessee, buyer will become lessor. Because lessee is using it, lessee has to pay lease rental to lessor. Now, AS 19 agenda is not to tell you what is the meaning of sale and lease back. Again, our discussion is accounting for lease accounting. No, accounting for leases. Here, it is given us how to do accounting for in case of sale and lease back. So, it's depend upon which category of lease it is. If that sale and lease back is a finance lease, treatment is different. If that sale and lease back is an operating lease, treatment is different. If that sale and lease back is a finance lease, any excess or deficiency of sale proceeds over carrying amount should not be recognized as income or loss in financial statements immediately. Should be deferred and amortized over lease period. Sir, I didn't understand anything. I'll tell you, don't worry. For example, listen. For example, so that house value is 1 crore rupees. Every year, again, we are paying, that means lessee is paying amount to lessor. But the total present value, whatever lessee is paying to lessor, is 90 lakhs only. But how much we received? 1 crore. That means we got benefit of 10 lakhs rupees. Or we may pay extra also. We are paying 1.2 crore, but we received 1 crore only. In that case, we got loss. So this standard says, if that lease is a finance lease, if you have paid extra or if you have paid less, so don't feel it as a current year income or current year expense. So feel that as a over the years. For example, in entire you got some 20 lakhs benefit. So the 20 lakhs allocated to all the years. So over the lease period, for example, term is 5 years. So allocate 4 lakh up to 5 years. Don't record in entire in current year because that is a finance lease. That's what AS 19 says. No sir, that is an operating lease. In that case, recognize immediately. Immediately recognize in current year only. But if the sale price is above fair value, the excess amount would be amortized again deferred. You will get clarity in problematic part. In problems, we will cover one problem on sale and lease back. You will get clarity. Okay. So with this, total 100% concept is covered except 3 formulas. So in AS 19, you have to remember these 3 formulas. In fact, 4 I can say. These 4 formulas are important. You have to remember. First one, minimum lease payments equals to total lease rent to be paid by lessee plus GR. GR means what? Guaranteed residual value. Formula number 2, cross investment, nothing but how much we are investing equals to minimum lease payment plus UGRV. UGRV means what? Unguaranteed residual value. Third formula, unearned finance income equals to cross investment minus present value of MLP plus present value of UGRV. Last formula, net investment equals to cross investment minus unearned finance income. So 1, 2, 3, 4. These 4 formulas are enough. Okay. So what are those 4 formulas? Formula number 1, minimum lease payments equals to total lease rent plus GR. GR stands for guaranteed residual value. Second formula, cross investment equals to minimum lease payments plus UGRV. UGRV stands for unguaranteed residual value. Number 3, unearned finance income equals to cross investment minus present value of MLP plus present value of UCRV. UCRV stands for what? Unguaranteed residual value. Last formula, net investment equals to gross investment minus unearned finance income. Okay, so write these formulas somewhere, or else already I told you, take all these notes from my Telegram group. So link is there in your description. Join in the Telegram group. There I'll give you regular updates on our financial accounting and CA and audit papers. Okay, so and give your, if you are done with this video, in comment section and just give a comment. So waiting for part 2. In part 2 I'll release all problems, whatever material, I mean ICMAI board book included new problems, including, and plus I will include all recent examination questions. Okay, in part 2 I will cover all those areas. I hope you understood entire lease accounting. So stay tuned. I'll come up with all videos on further 2 papers. We will be with you up to your exams. So thank you, all the best. A small note before ending this video. So I am getting couple of messages. Sir, I want to take your classes. So how to take classes? So simple. So you can contact team BCCA. So some numbers are scrolling here. So contact them. They'll help you out how to purchase the classes. Otherwise, just whatever doubts you have, so post your doubts in our Telegram group. I'll help you out. No sir, I'm confident about concept. Don't take any classes. Just let's rock with our preparation. Okay, so we'll meet in the next video. Bye. Yeah, welcome back. So I think you have already watched the part 1 of lease accounting. So you have done with all concepts in lease accounting. So let me enter into problematic part. Here I'm not going to revise any concept. If you are still struggling with concept, go there and again watch entire video. You will get full clarity about all the concepts of lease accounting. So here come to question number 1, which is on your screen. Arun Limited has taken equipment on operating lease for coming 5 years. So who has taken asset on lease? Arun Limited has taken asset on lease. Nothing but they have taken asset on lease. So already I told you, the person who is taking an asset is called lessee. So Arun has taken asset on lease. So they have not told what is the asset name, but they told us equipment. On which lease? Operating lease. Term is 5 years. As per agreement with the lessor, it will not make any payment for the lease rentals for the first 2 years. So as per their agreement, no need to pay any amount in year 1 and year 2. That means year 1 payment 0, year 2 payment 0. And we'll have to pay 21 lakhs in each of the following 3 years. Nothing but year 3 21 lakhs, year 4 21 lakhs, year 5 21 lakhs. So totally they are paying how much? 21, 21, 21, 63 lakhs they are paying totally. Okay. So they are asking Arun Limited on accounting for the lease rentals in lease. Advise Arun Limited. So they are asking nothing but accounting treatment. So first of all, so they are asking in the books of lessee. I told you, if it is finance lease, we have to show both asset and liability. But this is operating lease only. What I told you, if it is operating lease, just I will write. So what I told you, in the books of lessee, what is accounting treatment? It's depend upon whether that is finance lease or operating lease? If it is finance lease, what is the treatment? In balance sheet, I have to show on liability side lease liability, on asset side right of use. Sir, how much should I record? I told you fair value of asset or else present value of MLP, whichever is lower. Coming to operating lease, what I told you, write directly in P&L account. 2 lease rentals or 2 lease payments. But what I told you, you have to follow straight line method. But in this question, what happened? In year 1, lease rentals are 0. In year 2, lease rentals are 0. In year 3, 21 lakhs. Year 4, 21 lakhs. Year 5, 21 lakhs. So total it 0 plus 0 plus 21 plus 21 plus 21, 63 lakhs is total payment. So this is an operating lease, they are telling us directly. What is accounting treatment? We have to write in P&L account, but the problem is we have to follow straight line basis. Of course, what is the meaning of straight line basis? Of course, in year 1 and year 2, their payments are 0. Still, we have to show in our P&L account, every year we have to show. That means 63 lakhs by how many years? 5 years. So switch on your calc and calculate. I'll also calculate 63 lakhs by 5. Yes, 12 lakh 60,000. That means every year we have to record 12 lakh 60,000 in our P&L account. Every year, 2 lease payments, 12 lakh 60,000. So don't tell me, sir, we have paid 21 lakh. Why you are recording 12 lakhs? That's what I am saying. We have to follow straight line method. Of course, in year 1 our payments are 0. We have to show 12 lakh 60,000. In year 2 payments are 0. We have to show 12 lakh 60,000. In year 3 payment is 21 lakh, but we have to show 12 lakh 60,000. In year 4, 21 lakh, we have to show 12 lakh 60,000. In year 5, 21 lakh, we have to show 12 lakh 60,000. SLM means every year we have to show 12 lakh 60, 12 lakh 60, 12 lakh 60, 12 lakh 60 and 12 lakh 60,000. That's what SLM is called. No need to write in our balance sheet. Okay, so this is the answer. But you have to add some terminology. So what you have to write as per AS 19 accounting for leases, if it is a operating lease in the books of lessee, we have to show in our P&L account on straight line method basis. No need to record in our balance sheet. Then write this part and do it. That's it. So nobody will expect exact copy paste of answer from your book. They'll expect whether you know the content or not. Okay, so what you have to write as per AS 19 accounting for leases. So in the books of lessee, in the case of operating lease, we have to recognize in our P&L account on a systematic basis. No need to recognize in our balance sheet as asset or liability, but we have to follow straight line method basis. That's it. And then we have to write all these things. Our answer is 12 lakh 60,000. Next question number 2. Vishnu Limited leased a printing machine from Garur Limited for a period of 3 years. So who has taken asset on lease? Vishnu Limited. So that means Vishnu Limited is lessee from Garur Limited. So they are the owners, no? So they are lessor. What is the machine? Equipment, printing machine. Lease term is 3 years. The useful life of the printing machine is known to be 5 years. So life of asset is 5 years. Lease term is 3 years. It was agreed between lessor and lessee that amount will be paid in 3 installments. So 3 years, 3 installments. at the termination of lessee, Garur Limited will take back the said machine. So that means at the end of lease term we will take back that asset. That means we are not giving that asset to lessee at free of cost. We are taking back that asset. So here they are telling us there are two parties, Vishnu and Garur Limited. Garur Limited is giving that asset, Vishnu Limited is taking that asset. So Garur Limited is lessor, Vishnu Limited is lessee. The asset is printing machine. So lease term is 3 years, but asset life is 5 years. They are telling us after 3 years they will take back that asset. That's what. And next one, the following details are available in respect of the machine lease. Cost of printing machine is totally 15 lakhs is the cost of machine. So this is important, my dear students. The total cost of machine is 15 lakhs. So remember, this cost of machine is nothing but a present value of lease payments plus present value of unguaranteed residual value. This formula, this was not I mentioned in the previous theory class, but remember, so here the next 1 minute is very important. So that printing machine cost is 15 lakhs. So how I'll get this 15 lakhs? I am giving this asset to you. So definitely you will pay some amount every month or every year in this case. So take that into present value plus present value of UZRV. UZRV stands for unguaranteed residual value, take into present value. Here important point is, remember, very majority of the students, they don't know this point. Remember, normally in lessee point of view or lessor point of view, present value of lease payments means every year lease rentals plus present value of guaranteed residual value also. Here present value of lease payments includes guaranteed residual value. This point, many students may skip this point. So why I am not writing separately? So that is basic assumption, that is also lessee obligation to pay. So whenever they are telling present value of lease payment means it includes guaranteed residual value, just like terminal cash flow in our financial management subject. Next one, unguaranteed residual value of the machine is 2 lakhs. So UZRV is 2 lakhs and fair value of the machine is 15 lakhs. So in what you call interest rate 10%. They have given some data. The question is, you are required to state whether the lease is a finance lease or an operating lease. I told you already. They'll ask a question from this area, but they'll not ask a theory question. They're asking you to tell whether this lease is a finance lease or operating lease. Okay. So how to tell one lease is financing or operating lease? Now let me answer it. You all know, right? So determine one lease as finance or operating. We have some conditions. What is condition number 1? Tell me. At the end of lease term, ownership will get transferred from lessor to lessee. They are telling clearly in the question, at the end of lease term, we have to give back that asset to lessee. Then how can we say asset is transferred? So this condition is not satisfied because they are telling us they have to give back. Condition number 2. What is condition number 2? Option with lessee to purchase. So there is no option in our question. So condition number 2 is also not satisfied. So 1 not satisfied, 2 not satisfied. Condition number 3. What is condition number 3? Major part of life equals to lease term. In our question, what is the life of asset? 5 years is life of asset. but lease term is 3 years. I told you take 70%, nothing but 5 into 70%. How many years? 3.5 years. But lease term is only 3 years, no? So this condition is also not satisfied. I think you got point number 3, condition number 3. 1 not satisfied, 2 not satisfied, 3 not satisfied. Why 1 is not satisfied? Why? Because so lessee has to give back that asset to lessor. That means there is no provision to transfer of ownership. What is condition number 2? They are telling us option is with lessee to transfer of ownership. So that is also not there. Condition number 3, major part of life. So here major part of life is 3.5 years, 3.5 years, but our lease term is only 3 years. That is also not satisfied. So what is condition number 4, my dear students? Condition number 4 is specialized or customized asset. They are not telling that asset is customized or specialized. So that is also not satisfied. So finally, condition number 5. What is condition number 5? Present value of minimum lease payments substantially equals to fair value of asset. Nothing but we have to check present value of ML with 90% of fair value. If it is almost equal, that is a finance lease. I cannot directly say yes or no. I have to do some calculations. Okay. So we have to do some calculation with respect to this. So you help me out. I know you are not here. Just give me an answer while you are watching this video. So tell me, what is the cost of asset? So they have given us cost of asset equals to 15 lakhs. Am I right? Yes. They have given something else apart from it. Yes, they have given us unguaranteed residual value. Before that, so just now I told you cost of asset is nothing but what? Present value of minimum lease payments plus present value of unguaranteed residual value. They have given it directly. How much? 15 lakhs. Okay, they have given something else. What is that? They have given directly unguaranteed residual value. They have given us unguaranteed residual value, not present value of unguaranteed residual value. So unguaranteed residual value equals to how much they have given us? 2 lakhs. Huh? Yes, 2 lakhs. But we need what in this formula? We need present value of unguaranteed residual value. Okay, so you know unguaranteed residual value, take it into present value. So how to find out present value of unguaranteed residual value? I think you know in your financial management subject. So by using present value factors, how to take it into present. So 2 lakhs will be received. First of all, what is the meaning of unguaranteed residual value? After lease term, he will not give that amount to me. What is the lease term? 3 years. Okay, that means after 3 years, this amount is 2 lakhs. Take it into present value. How to take into present value? By using present value factor. What is the percentage? 10%, 3 years. Here you don't worry, they will give you the factor directly. What is the present value factor? 0.7513. Multiply with it, nothing more than that. Very easy, no? So therefore, present value of UZRV equals to 2 lakhs into 0.7513. 2 lakhs into 0.7513. If I am not wrong, I got 1,50,260. 150,260. So what is this? This is
present value of unguaranteed residual value. Substitute here, you will get the balancing figure. So substitute this figure here. That means what? Present value of MLP equals to, what I can write? 15 lakhs minus 1,50,260. So I'm not doing anything rocket science, I'm just doing normal mathematical calculation. Therefore, present value of MLP equals to 13,49,740. Okay, got it? So why we are calculating all this nonsense? Just to tell them whether that is finance lease or operating lease. What is condition number 5? Present value of minimum lease payment. So we got finally, we have to compare with it what? We have to compare it with 90% of fair value. What is 90% of fair value? 90% of fair value. What is the fair value, sir? They have given it, no? Fair value of asset. How much fair value? 15 lakhs. Huh? No. Yeah, 15 lakhs. 15 lakhs into 90%. Here we have to just take it out substantially, not exactly. How much? 13,50,000. How much we got? 13,49,000. Almost equal, no? Because standard has not given 90% or 91%. They are told substantially, almost equals to, no? Ignore about some 200, 300. So therefore, condition number 5 is satisfied. This lease is a finance lease. I think everybody will understand up to condition number 4. I will repeat every entire question. So they have given us some information. 1 is not satisfied, condition number 1. 2 is not satisfied. 3 is not satisfied. 4 is not satisfied. What is condition number 1? Ownership transfer. What is condition number 2? Option to purchase. What is condition number 3? Major part of life. What is condition number 4? Specialized in nature. All conditions are not satisfied. What is condition number 5? This is condition number 5. Present value of minimum lease payments substantially equals to fair value of asset. How to find out all these things? They have given us cost of asset equals to 15 lakhs. So how will I get cost of asset? Cost of asset is nothing but present value of MLP plus present value of unguaranteed residual value. No need to remember this figure. How much you are receiving, how much you are not receiving. So they have given us UZRV, but we need what? Present value of UZRV. How to find present value of UZRV? By multiplying with the present value factor, they will give you directly, that is 0.7513. Now I got present value of UZRV. Substitute here, then we will get a present value of MLP 13,49,740. Compare with the 90% of fair value, almost equals to, so 5 is satisfied. This is a finance lease. Clear? If you need, just pause the video and please do copy. And then one more question is there. Ascertain amount of unearned finance income. So they are asking unearned finance income. So they are asking one more question, unearned finance income. You know the formula? What is the formula? What is the formula for unearned finance income? Gross investment. So I told you gross investment minus present value of MLP plus present value of UZRV. But if you really followed this problem, we can directly write what here? Gross investment minus cost only, no? Again same only, no? But we need to find out what right now? Gross investment. What is the formula for gross investment? Gross investment equals to MLP plus UZRV. Am I right? MLP plus UZRV. In previously we found out present value of MLP. So we know present value of MLP. How much? 13,49,740. But we need what? We need only MLP. They have given us present value of all of your lease payments. But I need only MLP. That means you need to eliminate present value. So what I should do? I think the basic FM, no? So what to do? 13,49,740 by present value annuity factor. Don't worry, they'll give you everything. They'll give you, check in your question, they'll give you annuity factor. How much? It will be 2 point something. 2.4868. Tell me 13,49,740 by 2.4868. How much? 542,762. Around some rounding off. Yeah, you can write round off, no problem. 542,762. That is minimum lease payments. But we need what? Gross investments. So MLP 542,762 plus UZRV, they have already given no UZRV. How much? 2 lakhs. So plus 2 lakhs. Nothing but 7,42,762. So this is gross investment. 7,42,760. Am I right? What is UZRV? Sorry. UZRV how much? Sir, small mistake. Huh? So, sir, this MLP is for one installment, no? We have how many installments totally? 3 installments. Nothing but 542,762 into 3. 16,82,000. Am I right? 16 lakh, yeah. 28,286. Now, gross investment equals to 16,28,286 plus 2 lakhs. Nothing but 18,28,286. We need what? Unearned finance income is equals to, we can simply write gross investment minus cost. Nothing but 18,28,286 minus cost how much? 15 lakhs. Therefore, our final answer is 3,28,286. That is absolutely correct. Okay, I'll explain once again how we got all these figures. So, unearned finance income is equals to gross investment minus present value of MLP plus present value of UZRV. So we know these two are nothing but what? Cost of asset only. Then we can write unearned finance income is equals to gross investment minus cost. How to find out gross investment? MLP plus UZRV. Here MLP means MLP for 3 years. But we have present value of MLP. Take it into MLP, that means remove present value. How to do it? By present value annuity factor. They have given this figure. Now we got MLP per installment, but we have 3 installments now. Totally this is our MLP 16,28,286. Gross investment equals to MLP plus UZRV. We got 18,28,286. So unearned finance income is equals to gross investment minus cost. We got 328,286. Question number 3. Very interesting question. PQ Limited sold machinery having written down value of 80 lakhs. Written down value means that is their book value. In their balance sheet, their machinery value is 80 lakhs. Okay, fine. They sold it for 100 lakhs. Happy. That means it shows 20 lakhs rupees profit. Great. What happened? The same machinery was leased back by BR Limited to PQ Limited, so on so. Okay. That means this question is from sale and lease back. Okay. Now listen everybody. So our book value is 80 lakhs. Okay. But we sold it for 100 lakhs. If you remember our example, your house value in your balance sheet is 80 lakhs. But you sold for 1 crore. That means you got how much profit? 20 lakh rupees profit. Remember, you are again taking that asset back as a lease. Now we have to compare that with fair value of asset. We have some different questions. Question number A, sale price is 100 lakhs. We know that. That is a fair value. That means everything is genuine only. In sale and lease back, we have to always check whether there is any kind of what you call misuse or misconduct to avoid the tax. So our house value is 80 lakhs. We need money. We sold for 100 lakhs. Our book value is 80. We sold for 100 lakhs. Fair value means in our market also our value, market value of house is 100 lakhs. That means we have sold that asset on fair price only. I told you already in our theory, but you can just pause the video and go there in your notes, in your theory notes, what I told you. If it is a sale and lease back, you have to check whether that is a finance lease or operating lease. Based upon your account treatment will be occurred. Okay, this is what, this is an operating lease. Now listen, I will tell you how to answer this question. So here we are in question number A, we are selling our asset at fair price only. So how much profit we got? In case A, we got 20 lakh profit. No, so everything is at fair price only. Directly go to P&L and record as current year profit. We have to write charged to P&L as a total profit of 20 lakhs. That's it. Because we have everything done at fair price only. Okay. Second one, fair value is 120 lakhs. That means what? There is some kind of something happening is there. Okay, something happened. So our home or our house book value is 80 lakhs. In market, the fair price of the asset is 120 lakhs, but we are selling at 100 lakhs only. First of all, do we get profit or loss? Profit only. You are selling at more than your book value, but not up to fair value. That is okay, no problem. In case B also, our answer is same. We have to charge entire 20 lakhs in current year P&L account only. What is case 1 and case 2? In case 1, our fair value is 100, sale value is also 100. In case B, fair value is 1. Simply what I can say, for example, you are having some bike. Okay. You said in your books the bike value is 30,000. In market value is 50,000. If you sell it for 50,000, what is your profit? 20,000. In market value is 60,000, but you are selling it 50,000. What is your profit? Again 20,000. That means to get profit, you have to compare your sale value and your book value, not with fair value. Are you getting my point? Fair value is the market value, but to calculate profit or loss, how much your sale price, what is your book value? My book value is 80 lakhs, selling value is 100 lakhs. Profit is 20 lakhs in case 1 and case 2. But coming to case 3 is important. In case 3, what happened? Fair value is 90 lakhs. Our sale price is 76 lakhs. That means here 3 numbers are there. Book value is 80 lakhs. Our sale price is 76 lakhs. Fair value is 90 lakhs. This is also same as case 2. In case 2, we sold at profit. In case 3, we sold at loss. What is the loss? 4 lakhs.
This 4 lakhs is loss. Recognize this 4 lakhs loss entire in current year P&L account only. So try to understand. In A, B, C, all are normal calculation. Just compare with your book value and selling price. Nothing more than that. So if you really understood it, with case 4, nothing but D point, you should get full clarity. Point number D. Fair value is 80 lakhs. Book value is already fixed now. Book value is 80 lakhs. They have given us fair value is also 80 lakh, but sale price is 100 lakhs. Okay, that means in case A, case B, case C. In case A, case B, case C, what happened? In case A, we sold at 100 lakhs. In case B, we sold at 100 lakhs. In case 3, we sold at 76 lakhs. In all those 3 cases, either you sold at less than fair value or at fair value. But in case 3, what happened? Fair value is 80 lakhs only, but you sold at 100 lakhs. That means something is wrong. So try to involve in the question. Your house value is 80 lakhs only. Definitely if you want to sell, you may get 80 or 70, that is okay. You will get maximum how much? Up to fair value. In case A, fair value is 100 lakhs, nothing but market value is 100 lakhs, you sold at 100 lakhs, that is okay, acceptable. In case B, what happened? Market value is 120, you sold for 100, that is also acceptable. In case C, what happened? Market value 90, you sold at 76, that is also acceptable. But in case 4, what happened? Market value, fair value is 80, you sold at 100 lakhs. Tell me, for example, I am holding one car. You want to purchase that car. You know that if you want to sell this car right now in the market, we will get only 2 lakhs. Will you purchase the car for 4 lakhs or 5 lakhs? Definitely no. Still you are purchasing means there is something happening there. Here they are paying extra 20 lakhs. Why they are paying extra 20 lakhs? Because there will be further connection between these two parties as a lessor and lessee. So this extra 20 lakhs we should not recognize as a current year income. We should treat it as a deferred income and transfer to P&L account over the lease term. That's what difference between A, B, C and D. Okay. Coming to point number E. Fair value 92 lakhs. Selling price 100 lakhs. Book value 80 lakhs. Here also again something is happening. In market you will get 92 lakhs only, but you are selling at 100 lakhs. How it is possible? Again there is something happened. But here book value is 80 lakhs only. In this case, AS is telling us, so up to this 12 lakh profit, no problem, charge it to P&L in current year only, but this 8 lakh transfer to P&L as a deferred income. So case 5, F, you do it. If you have doubt, and give your answer in your comment section. I hope you got it. If you are unable to get it, just pause the video and go back. You will get clarity. Okay, listen twice. You will get clarity. Sir, no sir, still I can't understand question number 3. I'll tell you very clearly. Listen. Every time when you are selling that asset, compare with fair value. Okay. If you are selling at or if you are selling value less than or equals to fair value, that is okay, no problem. But if you are selling at more than fair value, that is not okay. That is not possible. We have to treat it as a deferred income. Okay. Come to question number 5. RK Soft Limited has taken the asset on lease from BD Tech Limited. The following information is given below. Lease term 4 years, fair value 16 lakh, lease rent 5 lakh, guaranteed residual value 1,20,000, expected residual value 3 lakh, rate 14.97%. They are asking in the books of lessor what is accounting treatment. So whenever they are asking in the books of lessor, so we need to find out unearned finance income. So the formula already you know that in your theory, unearned finance income equals to, what is the formula, tell me? I think am I okay? My camera is okay? Yeah. Unearned finance income equals to gross investment minus net investment. Am I right? Yeah. Now, what is gross investment formula? Gross investment equals to minimum lease payment plus guaranteed residual value plus unguaranteed residual value. Already I told you. Or we can read in other dimension, another formula, unearned finance income equals to gross investment minus present value of MLP. First, gross investment equals to MLP plus GRV plus UGRV. What is MLP? Minimum lease payments. How much they are paying? 5 lakh per year. How many years? 4 installments, no? 5 lakh into 4 is called MLP. Here they are not asking present value. Plus GRV means guaranteed residual value. How much? 1,20,000. How much unguaranteed? Total residual value 3 lakhs. Guaranteed 1 lakh means the balance is called unguaranteed residual value only, no? How much unguaranteed? 3 lakh minus 1,20,000, 1,80,000. Nothing but 20 lakhs plus 1,20,000 plus 1,80,000. 23 lakhs is called gross investment. Next one, after gross investment we need to find out present value of minimum lease payment, same as previous question, nothing but hire purchase system question. How many installments? 5, 4, 1, 2, 3, 4. What is the every EMI in every lease rental? 5 lakh, 5 lakh, 5 lakh, 5 lakh. But already I told you in our theory concept only. So lessee has to feel guaranteed residual value as also his liability. But lessor has to feel both guaranteed residual value and unguaranteed also as their liability. If it is lessee point of view, I should take only guaranteed residual value. If it is lessor point of view, I should take both guaranteed and unguaranteed residual value. I should take total 3 lakhs. Nothing but in year 3, in year 4, in last year, I should write 5 lakh plus 3 lakh. I should write totally 8 lakhs. If it is lessee books, I should record only this plus guaranteed residual value. And after that, I will multiply with present value factors. So I think you know how to find out present value factors in your financial management subject. If you need, so just very simple, by your calcs you can do it, 1 by that 1 plus that percentage, you will get it. So for present value factor is 0.8698, 0.7565, 0.6580, 0.5724. Multiply with it, you will get present value. 5 lakh into 0.8698. So value is 4,34,900. Second one, 5 lakh into 0.7565. Value is 3,78,250. For third and fourth, For third one, 3,29,000. Fourth one, 8 lakh. We have to multiply with 8 lakh. 8 lakh into 0.5724. Nothing but 457,920. Total it. 3,29,000 plus 378,250, 4,34,000. Total 16 lakh is the total figure. So this is present value of MLP. So now unearned finance income. Get back to our flow. Unearned finance income equals to 23 lakh minus 16 lakh equals to nothing but 7 lakhs is unearned finance income. You will get some 70 rupees. Ignore about that 7. If you write also no problem. So after that he has to prepare year 1, 2, 3, 4. In year 1, what is the receivable actually? 16 lakh. Out of 16 lakh, what is the interest? 16 lakh into 14.97. Applied. You will get 2,39,520. This is interest has to be recorded. But how much he is receiving? 5 lakh. So remaining is receiving for the asset. Nothing but out of 5 lakh, remove 2,39,520. So this is 2,60,480. This is for asset. For year 2, what is your hire purchase formula? Opening balance 16 lakh plus interest 2,39,520 minus installment 5 lakh. For second year, 13 lakh, same as your hire purchase, 39,520. Again interest into 14.97 percentage. We got 200,526. Again 5 lakh. You will get a principal portion. Same repeat. Done. That's it. Okay. Very simple. Question number 4 in lease accounting. SKS Limited has taken the assets on lease from PC Soft Limited. The following information is given below. Show the accounting in the books of lessee. Lease term 4 years. Fair value at the inception of the lease term 16 lakhs. Lease rent 5 lakhs per annum at the end of year. GRV, guaranteed residual value 1 lakh. And expected residual value 3 lakhs. Implicit rate 14.97%. Yeah. So residual value 3 lakhs, guaranteed 1 lakh means unguaranteed how much? 2 lakh. So before that already I told you the accounting in the books of lessee or lessor, it's depend upon whether that lease is finance lease or operating lease. I told you very clearly. So there are 5 conditions given by the AS 19 and in AS 16 116 also. If any one condition is satisfied, so all conditions are satisfied. If any one condition is satisfied, that lease is a finance lease. So we have to first verify all those 5 conditions here. If any one condition is satisfied, that lease is a finance lease. So do you remember what is condition number 1? Condition number 1 is at the end of lease term, automatically ownership will get transferred to lessee from lessor. But here there is no condition as of now, so that condition is not satisfied. And condition number 2, this condition says at the end of lease term, lessee has an option to purchase the asset. So here there is no such kind of condition, so that is also not satisfied. Condition number 3, major part of life of asset equals to lease term, but here they are not talking about life of asset if I am not wrong, so that is also not satisfied. And condition number 4, specialized or customized in nature, that is also not satisfied. And condition number 5, present value of minimum lease payments substantially equals to fair value of asset. That means we have to find out present value of lease payment. Lease payments or minimum lease payments both are same. If it is equals to 90% or almost 90% of fair value of asset, then this lease is a finance lease. Here I need to calculate this. If it is satisfied, that is finance, otherwise that is an operating lease. So let's find out. Sir, how to find out, sir? Very simple. Here, lease rental or lease payment. We are calculating present value, no? We have to use present value factors and amount. How many years lease rentals? 4 years. Year 1, 2, 3, 4. What is lease rental amount? 5 lakh every year. First year 5 lakh, second year 5 lakh, third year 5 lakh, fourth year 5 lakh. And the present value factors they have not given, we have to find out 14.97%. How to find out 14.97? Nothing but 1 by 1.1497. I think you know this in your financial management subject, how to find out present value factors. So first year present value factor is 0.8698. Second year 0.7565. Third year 0.6580. Fourth year 0.5723. Already I told you. So here residual value of asset is 3 lakh. Guaranteed how much? 1 lakh. Already I told you. Let's see also feels this 1 lakh also as my liability. That means in year 4 his liability is not 5 lakh. 5 lakh plus 1 lakh. We can say 6 lakh is his liability. It's a depend upon future event still. But here we have to make it as 6 lakh rupees. How I got 6 lakh rupees? 5 lakh rupees into 5 lakh rupees plus additional 1 lakh rupee is guaranteed residual value. Now multiply these two. 5 lakh into 0.8698. So our amount is 4 lakh 34,900 and 5 lakh into 0.7565. 3,78,250. Here 3, 5 lakh into 0.6580, 3,29,000. Fourth year 6 lakh into 0.5723, 3,43,380. There may be small differences with respect to fraction, that is not a big problem. So add 3,29,000 plus 378,250 plus 434,900. We got 14,85,530. So in your book it is showing 90. That is not a big problem. If you are writing 30 or 90, it's depend upon fractions. In exam they will give you these fractions directly. You can take it out directly. In that case no problem. Yeah. Now 14,85,530 is the present value of minimum lease payment. You have to compare with it 90% of fair value. What is fair value? Fair value of asset 16 lakhs. Calculate it. 16 lakhs into 90%. It is 14,40,000 only. So this condition is satisfied. This lease is a finance lease. Very simple. We need to find out present value of minimum lease payment. How to find out lease rentals into present value factors. I think you know how to find out present value factors. Multiply with it, you will get the total amount. Compare it with 90% of fair value of asset. It is more than in, that's why that is a finance lease. Next, what to do, sir? Next, you have to frame or you have to prepare schedule just like our hire purchase system. Here 1, 2, 3, 4, 5. Yeah. So what is the liability, by the way? 14,85,530. Opening liability 14,85,530. Next, tell me next what happened? Interest. Interest rate how much? 14.97 percentage. 14.97 applied into 14.97 percentage. If you take as per their answer 590, 14,85,590 into 14.97 percentage, we got 22293, 32239, this is interest. How much we are paying installment or in EMI or else lease rental? Lease rental is 5 lakh rupees. So remaining is for what? About principal. That means out of 5 lakh, this is for interest, remaining is for principal. How much for principal? 2,77,607. Okay. Now what is closing liability? Tell me. Apply your hire purchase system. Opening liability plus interest minus installment. Nothing but 14,85,590 plus 22293 minus 5 lakh. Our liability is 1207,982. 1207 again same into 14.97 percentage. I got 180,835. Again same principal. Then remaining will be, so out of 5 lakh my interest amount is this. The balance will be principal amount, no? That means minus 5 lakh. I got 3 lakh 19,000. Yes, we are correct. 165. Tell me what is closing liability? A plus B minus C. A plus B minus C. You will get next year opening or current year closing. Nothing but 1207982 plus 180835 minus 5 lakh rupees. So 388,817 into interest of 14.97 percentage 133,056. Again 5 lakh. So how much principal? 5 lakh minus this amount minus 5 lakh. We got 366,944. Again tell me A plus B minus C. Nothing but 888817 plus 133,056 minus 5 lakh. Nothing but fourth year 852,1873. Again interest into 14.97 percentage. 852,1873 into 14.97 percentage. Interest is 12. So please do check. I think this is wrong. A plus B minus C 888817 plus 133,056 minus 5 lakh. What is the answer? Yeah, lease term 4 years only, no? Yeah. So here we are paying our amount 8521873. Yeah, this is 521873. Interest into 14.97 percentage 78124, 5 lakh. So 5 lakh means the balance is the remaining portion, whatever it is. This is not relevant for us. So this is interest amount. Done. So this is we have to find out just like our hire purchase system chapter. Okay. Now listen. So after finding out it, we have to just open lease rent account and lease liability account. Very simple. So lease rent account means credit side we have to write every year interest. You can observe the same thing we have got it 222,393, 180,835, 133. We have to write these two. This amount plus this amount, nothing but interest plus principal on credit side. We are paying on debit side. Have a look. 222,393, 277,067 and 5 lakh. Remember these two figures. 222,093 debit credit side 5 lakh. Similarly, next year also have a look. 180,1835, 31965, 5 lakh. So here also, here also. That means simply we have to write interest and principal on credit side, payment on debit side. Payments means to bank, to bank, to bank. Credit side, financial means interest. Interest, you can call it interest or you can call it as a finance charge. Liability is principal amount. Next one, lease liability account. So whenever you purchase an asset, entry asset account debit to liability, credit side by asset account, and debit side how much you are paying for asset, right? Only this principal portion outstanding, how much you are paying for principal, right on debit side. Remaining is balancing figure. At the end, it will be automatically tallied. Very simple. In P&L account, I will write interest and depreciation. Interest already we got. Depreciation, we have to take SLM method by 4 years. What is the cost of asset? 1485,590, right? 14 lakh 85,590 by 4. Yes, depreciation every year 371,397. Every year same depreciation. In balance sheet, asset minus depreciation, liability side, closing liability value. These figures also we found out here. Same figures we should write. Here for ending 0. So very simple. This is the major calculation. If you understand it, remaining you can easily draft it. Okay.
So with this, part 1 of marathon is completed. So in part 2, I am going to cover all small and important chapters like hire purchase, BRS, rectification of errors, provision for bad debts, capital and revenue transactions, I think covered in the last session. So I'll pick all small chapters in part 2. If time permits, I'll do videos on partnership accounting also in part 3. So whoever completed part 1, I hope you really learned the subject a lot. So give your comment waiting for part 2, then I'll release part 2 as soon as possible. Okay, all the best guys. Thank you. And I hope before leaving this channel, I hope every one of you who are preparing for financial accounting subject, so be confident, you are going to rock. Thank you.